my friend.
Thursday.
Snowing outside?
It is snowing outside.
It was miserable driving down this morning.
Yeah.
How was the walk? Did you walk?
Yeah, I thought about not walking, and then I just did it, and now my feet will be wet for the rest of the day.
You got 11 sets of shoes here. Can't you transfer?
Yeah, it's the socks that are a problem.
Oh, that
but
is
I guess
a problem.
I could go sockless. But either way, yeah, this is the shakeout, so to speak, of winter.
This is classic March.
Snow.
They tease you with 70 degrees, and you're like, oh, everything's good. Maybe I should put out my patio furniture, and then it snows.
Not so much fun.
And it was bad. This is like a nasty snowstorm. It's wet. It's heavy.
It's a classic rain and then snow, but it's not cold enough for the snow to be like, it's not like frozen, which is nice. There's no ice, but it's just like slosh everywhere.
I came down early this morning, and I mean, short of them working on the expressway, the traffic was horrible.
I'm sure. Yeah, I'm sure the traffic is not so much fun. But you know what? It's Thursday. We had a ton of stuff come out this week, a ton of news. Markets are moving. I'm decently happy. I could work myself up to being happy.
Could you?
Yeah,
Look at you go.
I think so.
I like to see that.
I mean, why not? What's the alternative?
I think that sounds fantastic, and I do know after yesterday's show, coffee's an off-limit subject now for you and I.
Coffee? Oh yeah. We're not. I don't want to talk about it.
No, it's all good. I love the coffee at home.
Yeah, it's a really good situation that Pete has. Some would say perfect.
Someone would say perfect.
But yeah, let's tap into this U.S. dollar.
We got so much going on. BOE announcement coming up in 25 minutes. Swiss National Bank cut rates this morning.
25 bips.
Right.
Would if I asked you yesterday what the Swiss National Bank interest rate was going to be today, what would you have said? What would you have guessed interest rates were in Switzerland? I mean, you're pretty tapped in, but would you have guessed that they would have been this low? If someone would have asked me yesterday, hey, the Swiss National Bank is having a meeting coming up, what do you think their interest rate is going to be after the meeting? I would have said, like, I don't know, $1.25, like 1.5%.
Do you remember
they're at zero
when they were low? They were at negative 275.
Oh man,
yeah.
I forgot about that.
Yeah,
we need more data in this chart. Can we get more data now?
You think about that. They were basically just taxing the heck out of anybody who wanted to hold Swiss francs in an attempt to control the currency's appreciation.
Let's see what I can get. I like the trading economics. They have the good data. Yeah, I mean, only got up to 175 at the peak of everybody hiking interest rates, but you go back in time, negative 75 bips for a while, and I can't get back further than that to get back to the financial crisis and everything else. But yeah, I hear you, but I mean, 25 bips for a major currency, that's pretty low.
It's pretty aggressive bringing them back to the zero bound again. Mm-hmm. I think they're happier with a lower exchange rate given all the uncertainties of what's going on. Mm-hmm. And I think there's this feeling too that nobody's talked about imports and exports from Switzerland. When does our name come up in the random conversation?
Sure. Yeah.
So,
what item finally piques the interest of these trade war talks that we are heavily involved in?
Right.
But yeah, I mean, you lay that against the upcoming Bank of England rate decision,
and the movement, right? And the move, right? We're down from 5.25 to 4.5. Yeah. It's readily apparent what we're seeing, and the rhetoric around the S&P, again, the currency moved, Swiss moved a little bit lower on it, dollar moved up a little bit higher. The rhetoric was, we're not necessarily stopping here if the market dictates more easing. So with that, here
you have the rally in dollar. It's been beat up. I'll go to the daily chart to show you the context, because the dollar has been beat up here as it has been among most major pairs.
Right, which means strong Swiss, which is something, again, the Swiss are very mindful. Now, the euro's rallied against it. Again, we had the Swiss pegged to the euro for the longest period of time before that peg broke. It's actually a good question. Can you go back to euro Swiss?
Sure. Oh, euro Swiss, where are you? There we are.
There you go. Okay, so
you see the recent euro rally,
right?
But a general trend lower euro against this Swiss franc over the last year or so.
So, and I think the Swiss continue to be sensitive about an appreciating currency for them, and so they opened the door that we're not necessarily. I forget what the exact word was, but it's not that we're not necessarily done, but it's could go either way.
Gotcha.
We're not bound, and they demonstrate they're not bound by zero, and they kind of reinforce that. So you saw a little bit more juice go into that Swiss.
A cut and a dovish cut at that. Because they were expected to cut, but to see this rally out of the dollar, which isn't anything crazy. It's what, 30, 40, 50 points maybe at its peak here. And this is a dollar, again, that's been beat up throughout the first couple months of this year. But yeah, the expected cut to 25 bips is one thing, but the dovish rhetoric around a central bank that is very liberally moving interest rates lower to maybe defend against its currency getting too expensive in certain pairs. Interesting piece there. Looking ahead to this Bank of England meeting, you have a little bit of dollar strength in some of the pairs. Interestingly enough, dollar is continuing to lose ground against this yen. So before getting to euro and sterling, which are maybe standing by going into this Bank of England meeting, man, this was an interesting trade up to this 150 is just so. You and I rarely harp on this
big
is a
round
level.
Numbers.
Yeah, it's important. Remember S&P's at 3,000. This is a big deal.
I remember the first time they crossed 1,000. That was the impenetrable level.
I'm sure. Yeah. This is a little different. Obviously, equity indexes, that number is relatively arbitrary. Right. It's an amalgam of a bunch of stock prices that maybe they have some unique levels, but even then. Whereas here, it's a little bit more direct. I mean, this is obviously the exchange rate between dollars and yen. And we'll go back in time in just a second and put more data in here. But we get up to this 150 several times this trading week, Pete, and they sell it off every time. And then yesterday, coming out of the meeting, they hammered this dollar all the way down below 149. And this morning, dollar bouncing against euro and a couple other pieces, not this piece.
No, a really weak up movement that aligned with the Swiss bank announcement, but selling immediately emerged out of it. Yeah, and now we're seeing, again, a euro getting challenged to the downside, Aussie, Kiwi, yen is absolutely, and you've shown this through Cora, yen is, and Glenn had a great piece on yen correlations. Yen is again demonstrating it is being driven by its own things.
You think this might be a little bit of so yesterday you had the dollar weakness, which was one thing, which is this move coming out of the Fed event. Is this morning's continued weakness in this pair for U.S. dollar a little bit of a flight to quality extension, because you have equities moving lower this morning? The last piece to look at here is that commodity currencies are, funny enough, getting hammered.
Yes.
And U.S. dollars seeing, a percentage and a quarter of strength against this New Zealand dollar in the same time that it's off, almost a full percent from yesterday against the yen.
And I think when you look at, where the bias is, dollar yen was sold as all the other currencies, as euro rallied, yen rallied, as euro rallied, while U.S. equities rallied yesterday post FOMC. Mm-hmm. Since then, this morning, euro's given back a big chunk of it. Swiss did after the rate announcement. Yen is...
Here's that euro rally yesterday afternoon, and then it gave all of it back.
Do you remember last Fed meeting we did the same thing, where we had buying of currencies, selling of dollars, and around 3 o'clock in the morning, the following day, equities had rallied. They came in and they started selling equities. They started selling currencies, buying the dollar. And it was a pretty, basically taking out everything they had put in post-Fed announcement that day, taking it back out. And it seems like they're doing that in very short order here. But the yen continues to exhibit a very distinct behavior. And is it, in this instance today, we're seeing U.S. equities or bonds are rallying. I think bonds are, we're back through 118 and the long bond.
Really? Okay.
2 years well below 4%. Is that helping the yen cause? Yeah, I think so a little bit. That rate divergence, I mean, where, again, lower U.S. rates are not helping a euro at 109.5 or Kiwi that had gotten up into the...
Well, it's always funny because you tend to think about things in our, egotistical, narcissistic U.S. mind. It's always a U.S. It's easiest if it's a U.S. dollar story. I guess I'll go that route.
Yeah,
so it's always easy to be like, oh, especially the Fed events yesterday, and you would expect, okay, after the Fed event, this is what happened with dollar, and now this morning, this is what happened with dollar.
Right.
And to your point, maybe there's a dollar move to the downside after the event or the upside after the event, and then the next day maybe it reverses or maybe it continues, whatever. It is super interesting that this is one of those moves. If you tell me, bonds are up, U.S. rates are down, but U.S. dollar is gaining against euro and U.S. dollar is losing a bunch of ground against yen, then
so how much higher is dollar yen?
Is this an environment where bonds and European debt markets are actually moving even higher and their interest rates are moving even lower, but the Japan story is just so different that it's bucking this trend? And if anything, maybe we're moving into an environment where a lot of these stories are yen stories.
Yes.
And you're seeing that, okay, the U.S. is trending like a lot of these different areas, lower in interest rates, like the Euro area, like the U.K. and everywhere else. And so maybe they're kind of like, Euro gets up to 109 against the dollar, and then it comes back down to 108 and whatever. But this yen is just building in ground against a bunch of currencies. It'll be interesting to see because we've been talking about, it's almost been like the elephant in the room. We've just been alluding to it like, oh yeah, Japan's over there. They're the only central bank that's hiking as everyone else is cutting. When all is said and done at the end of 2025 here, will we look back and say every major economy moved lower in its growth metrics for 2025 and moved lower in interest rates maybe to
except
3% or whatever,
Japan.
Except for Japan? It'll be really interesting because, you look back at the last 5 years and everybody's been moving higher except for Japan. And so it's just an interesting piece that you look at this board and you see, a classic dollar is up just a little bit against sterling, dollar's up a little bit more against euro, dollar's up significantly against these commodity currencies, Aussie and Kiwi, and yen is beating all of them. Yeah. It's kind of crazy.
Yeah, it is. And absolutely, for the euro, they had passed that huge spending bill, but now the talk this morning was that they may not spend it all as fast as they thought. So they may not borrow as much, to borrow as much as quickly as thought. That there's some negotiation. So as you were spot on, boons and baubles, German rates, yield up. The instruments rallied, yields fell.
Yeah.
Now that puts a little bit of a headwind. Would that impacted the euro at 106? Probably not. We're at 109.5, 109. We're at the upper end of the range. It's going to have a little bit more playback through the loop here.
For sure.
So, but what this is giving you, again, this was a hard rally to sell because anything between 108 and 109 looked 108.5, 109 looked rich. Of course, as currencies always do, they go a little bit further and farther than you think.
Of course.
We got close to 110. We didn't get through it. We tried it again yesterday, right on the close in the U.S. 109.
Yeah, got
109, 20, 25.
I guess this is maybe a little bit of last night, but yesterday multiple times trying to get up to 109.15, 109.20, and then releasing.
Right. And now here's the situation. If you think that the move from 105 to 109 was too far too fast, and you had been short, you would have taken some pain. But if you had actually, even if you'd sold a little early, 108.80, 108.90, and you had put a reasonable metric around what you're looking to make and lose, and we went through those numbers yesterday, and that was a really good exercise.
55, 60 points.
55, 60 points. You would have been close on the upside.
If this right here is 109, you would have gotten 40, 50 points. It would have been tight.
And
I mean, it did this for about a week or so of trade. Depending on when you would have traded this, there was some back and forth noise.
Right, but you did get the release now.
Yeah.
And if you still think there is a fundamental shift in interest, you're getting an 80-point pullback this morning to get some longs out.
To get in thinking that we're going to 110. Well, I want to continue the dollar-yen piece and get into our segment for today, because it'll speak a little bit to a couple of these things. The dollar's failure to bounce following an unchanged rate decision from the Fed. Pete, the context is always different with this stuff. In today's environment, an unch from the Fed is relatively hawkish, because as an action, that is, everybody except for the Bank of Japan is moving interest rates lower.
Right.
We talked about how Switzerland has moved interest rates now to 25 basis points. Even the Bank of England, who's been right there with the U.S. as one of the most hawkish major central banks, moving interest rates lower in the last several months. But we dive into some of the numbers. You and I don't always do stuff like this, but I thought it was particularly interesting just to give people exactly the outlook from this March Fed meeting. Expectations, Pete, are still 225 bip rate cuts at some point here this year. And you can see in the dot plot, if you're looking at the leftmost grouping of dots, if you can follow my mouse here, this is all these blue dots are a vote from the different Fed members. And you can see the majority of this distribution is sitting right in here in the 3.75 to 4% range.
It's more like a Rorschach test. You've got like the tall snowman, a little chubbier snowman,
this
and to the
like
right,
a little kind of alien guy.
That's like either the anorexic snowman or the alien guy.
It's funny you say snowman. To me, it was they all look like Star Wars, like droids or something. Like they could all be like rolling around or hovering around and like doing some Star Wars stuff. But snowmen, Star Wars characters, whatever have you, in 2025 focused around, this is actually four members thinking that we'll end the year exactly where we are right now, which is 425 to 450. But the majority of Fed members thinking 1 to 2 cuts, a couple people thinking 325 bip cuts, and then on into the future, thinking around 3%. What was particularly interesting, and I think what people digested yesterday more so, which has translated in a little bit of a continuation of some fear for U.S. equities and U.S. dollar against the yen, which we'll look at in a second, is the fact that if you look at these graphs here, the dotted line shows you where GDP expectations were last meeting in December, and now in March, all of the expectations from the Fed members are considerably lower than where they were. Here is unemployment, which is not considerably higher, but is inching higher from the Fed members. And so you have a weird standoff, and I think this is what people are trying to digest, which is inflation metrics they think are still kind of sticky, but they are inching growth lower and inching unemployment higher, which is a little bit of the anti-soft landing kind of case, which is, okay, growth sustains, unemployment sustains at its current good level, and inflation continues to move lower, and we kind of cut interest rates in a perfect environment. Not exactly what they're getting, and you saw it play out a little bit in this U.S. dollar rally into the event, Pete, all the way up to 150, and then they sold it off and they continue the selling today.
Yeah, and again, we were both at 150 was getting back to a rich level. We had when euro shook out to its highs, I think we got down to 144. So we had a pretty sizable rally in dollar yen. And
leading into the event here, to get back from about 145 all the way back up to 150.
Right. And, this is interesting tape action to me in terms of the dollar yen was sold irrespective of general dollar moves, irrespective of general U.S. equity moves. But the recurring theme that as bonds creep higher, remember, we started the week at 116 and change. We're above 118 now.
Higher, yeah.
So yields lower. I think that yield lever, if we continue to see bonds creep 118, 119, 120, this is going to potentially have kind of a very interesting exercise right back down to the
and you raise a
lower half of
really
145.
interesting point, which is that equities moved higher on the event.
Right.
The Fed comes out, they don't change, Powell speaks, and equities are moving towards their highs for the week.
Right.
And the dollar is getting annihilated. And you might say, oh, okay, well, the yen flight to quality trade, actually, that makes no sense here. I don't know what the move is there. It's just dollar weakness. But then today, as they digest it more in the aftermath, equities are giving back those gains. And now you might say you're seeing the yen flight to. It's regardless of what's going on in the other asset classes that you're seeing the dollar selling.
And we talk about flight to quality and everything. People can say, well, you're just, again, markets moved. You're picking off your sticky board of causes.
You can always tell the story afterwards.
Right.
Yeah.
And it's not that. It is all these things come into play in different ways. The interest rate differential is real, and it drives prices.
It's probably
and
more real than anything. Yeah.
Yes. Expectations around growth drive prices, but it is the validation of the market being the sum of all those things. Yeah. And rather than trying to guess at them, it is looking at context of what is the takeaway for me as a trader? Am I supposed to guess what the next change in rates is? Not necessarily so, but to see that where's the linkage? The linkage right now is long and short end. U.S. yields are helping to fuel dollar yen moves. So this is on my radar. If we trade north of 119, I've got to imagine that dollar yen selling continues at an accelerated rate as we go into the weekend.
And this is where we'll leave it here, because the U.S. rate expectations for 26 are currently still kind of mirroring that dot plot. And remember, this is what the traders think out in the world of interest rate markets versus that dot plot, which is just the Fed members, what they think.
Were you surprised this didn't move one way or another?
I was surprised to see, given the dollar weakness, that these rate expectations are still in that 3.5% to 4% range, which is where the Fed is. But I think leaving people here with the current picture, and also keeping in mind the carry trade when you're talking about dollar yen and a couple of these different things, here is the current landscape, which is UK's at 4.5%, the US is still at 4.25% to 4.5%, Aussie is still decently high, Canada relatively high, but all these markets moving lower, and Japan is down there at 50 bips, but they're the only ones that are moving higher. I think that you have to probably watch the interest rate price action, where the carry trade dynamics kind of kick in for a number of these pairs.
It's a great way to end it too, because we know there's a strong chance they're going to cut rates in about 4 minutes in the UK. Aussie has made clearly that they're not stop. This is not necessarily a stop to the downside.
It can't
Same thing with Canada. Yeah. Same thing with Europe in terms of growth. The only thing that we know for certain is that Japan has no interest in cutting, and the discussion is when the next hike is. So that is, when we look at this disconnect around performance, this is a great summary of direction, drift of travel, and potentially what moves, and why the currency outcomes we're seeing.
Awesome. Well, that'll do it for today's episode. You got Tom, Tony, and Vanetta.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at tastytrade. Make your move, genius. tastytrade.
I came from a unique family background. My father was a trader at the Chicago Mercantile Exchange. He was a cattle trader. Now, my grandfather was actually a pork belly trader. And when the exchange was founded, it was actually founded as a butter and egg exchange. And they were in the egg business. So back in the 20s, they were part of the founding membership of the Chicago Mercantile Exchange. I pushed my father very hard to let me start as early as I could, and he was incredibly kind and generous to give me that opportunity to start. The exposure to the markets was kind of that connection for me that made everything come to life. Within the world of futures, there are 6 distinct asset classes. So I am usually putting together a portfolio within equities and energy, metals, foreign exchange, and interest rates. Also agriculture, I tend to combine a series of positions, some directional, some pairs trades, others with an options or a theta component, trying to put together a portfolio that takes advantage of opportunities, price extremes, high volatility to generate productive returns.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Come on, you know it, can you feel It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Hola, Thomas.
Hola.
How's it going?
Very good.
All right, the big question everybody wants to know. I know you're chomping at the bit to know. How did I do on my NCAA tournament?
Literally, no one asked that.
I really don't care, but sure, go ahead. Yeah.
Had a lot of bets, maybe about 30 or something, maybe no more than that. I mean, maybe 30 teams, 3 bets on each team. I think my son has a spreadsheet. That's how many bets we had. I think I'm just north of even. I'm not 100% sure with the big. I'm not 100% sure, but I'm fighting, Sadnop. I'm still ready to go.
Did you know, fun statistical fact, 56.5%, I think, of all brackets got busted in 1 hour because most of the chalk had Louisville, but Creighton came out on top in that game. Of course, overnight, I don't even know what the numbers are for number of brackets that are still alive. But after just an hour,
I had Creighton.
I had Creighton too, but I had it for like
and
the
I had
Queen
McNeese State. I had McNeese State and I had Creighton. I had 2 of the upsets, but I didn't have Drake, and I didn't have.
We had all the upsets because we took the under and like the money line and
yeah, I had 2 of the upsets.
A lot of people are making jokes, but they're like, because of what's going on in the rap world with Kendrick Lamar, at this time we cannot choose Drake.
You faded Kansas. We faded Kansas too. I mean, any of the upsets we had.
Yeah, I faded Kansas.
Yeah. I was even proud of my son who went to Kansas that he let money, stay true to his heart and bet against his alma mater. I was very proud of him.
By the way, that is pathetic.
That is a true Batista. That
is very Pete Rose of him.
You don't bet with your heart. You bet with the money. That's what you do.
You don't ever fade your alma mater. You don't ever.
I'm with Tom.
No. That's what's wrong with you people. You have a heart. You can't have a heart when it comes to betting.
You never fade your alma mater.
You never fade a superstar. You fade your alma mater.
And you never fade your alma mater. Even if you got to take one for the team, you take one for the team.
I don't think he bet the Illinois game because he couldn't bet against Illinois. That was the only one I think he didn't do, which I thought was funny.
Too funny.
That's it.
Do you think, like, real talk, that the tournament affects market liquidity just because people are not trading?
No.
Because they're watching the games? I'm just curious.
No, not
100%.
Not even for 1 second. And most of the games.
But spring break is a real thing that's affecting some things.
Volume was low yesterday. Matter of fact, it was like 12% lower than it's normal or something like that.
See, the math is mathing, Tom.
Yeah.
It's not.
Yeah.
And
Thursday's volume 12% below recent average levels. Yes. Yep.
Wow.
100%.
Yeah, but Wednesday, when there was no games, was 24% below recent levels. So
don't bring logic into this argument, Let's just stay with the math.
So I don't think that's the case. Anyway, and most of the games were crap. There was like 1 or 2 good games.
Oh, I don't know that yet, Sadnop. I have to see my spreadsheet if we've won anything. Then I can tell you if the games were crap.
Well, if you watched any of the games, they were not very close. I watched a little of the
Sadnop, when you've got money on the game, like on the under-over, there was a basket, a worthless basket. Team was down by 10 with like 10 seconds to go, and they scored a worthless basket to make the over cover, costing me money. And that's not a worthless game, Sadnop. That is not a worthless game.
Okay, well, I'm going to tell you right now.
There were many games we won by the hook. Those are not worthless games.
Congratulations. Old man barks at screen for losing by the hook.
Phone.
Barks his phone. I watched a little of the BYU game, a little of the Yale game, a little of the Arkansas.
Can I just tell you, I'm obsessed. Wait, just real fast. I'm obsessed with the kid from BYU whose, I guess, great-grandfather invented tater tots. So they just yelled tater tots at him. What is happening?
want to meet that guy. A tater tot.
These are the stories that I hear about. Like your great grandpappy invented tater tots? What?
That's pretty good.
He's the tater tot prince.
I mean, the problem with this tournament is there's.
You know what? You could find a problem with anything.
I'm going to tell you what the problem is. There's not a lot of good teams.
Well, there's a lot less good teams, allegedly good teams, because there are a lot of upsets.
There's not a lot of good. There's not a lot of great. There's not a lot of you couldn't tell me who the number one pick in the draft is.
No, yeah, I agree with you there. Yeah, I agree. Yeah. Well, that's what makes it fun.
Fun for who? Fun for people that like to go to high school hockey games.
Wow, you are so grumpy this morning.
Which, by the way,
damn.
Look, at 4:00 today, he's got his second tryout, Sosnoff. That's correct. They're going to be making cuts, so it's going to be a tough one.
Hopefully, you and your wife are not going there to high school tryouts, because that would be the most embarrassing thing that poor kid ever had to deal with. There's my mom.
No. You can't go there and watch.
Thank God.
Kind of thing. No.
God.
Well, good luck, Vinny.
Thank you, Vanetta. That's all we're looking for. A little bit of prayers and cheer, of course. Yes, thank you. Nah, Sosnoff, on the other hand.
What happened to you last night, Tom? You were so grumpy.
I'm not grumpy at all. I'm in a good mood.
And that Cooper Flag guy, he's going to be the number one pick, by the way. Flag or whatever they.
Yeah, Cooper Flag.
Yeah.
Probably, unless the kid from Rutgers goes. There's two kids on Rutgers that are really good, too.
Well, all the memorabilia sites got this guy's stuff up there, number one. So I'm going to go with him.
Yeah. I hope he comes out.
Well, I will tell you this. It did affect productivity because you two boomers, you little lunch badgers, skipped out early again yesterday.
Don't you dare say that to me. You could say that to Tom. I did not eat lunch in the office.
That's right. You were gone before lunch.
Okay. Thank you very much. At least be
But
back.
I would like to just point out, I will be playing a video later, and you are not in it because you literally left. So don't get mad. I don't want Pista coming after me, being like, oh, Vanetta won't talk to Tony. No, I went to go find you, and you were gone.
You got to catch me early, honey. I mean, that's just how it goes. I mean, I'm royalty. You know how it is.
Okay, well, whatever.
And
well, what do you guys do with your afternoon off? Go get your nails did?
No,
pedicure,
I worked.
Pedicure.
I just didn't want to deal with traffic yesterday.
Yeah, same thing.
Oh, so for you would like the convenience of working remotely because you don't want to deal with a commute that's become burdensome.
That's one of the advantages of being king. When you're queen, you can deal with it.
And that's one of the advantages of being the king's chauffeur.
But don't you think some of your other employees would like the flexibility as well?
No, I don't think they would. That's not how you climb the ladder.
That's right. We put in the hours. We've done that. We did this from 6 to 9 at night, walking down those rickety stairs to go into the parking lot that was blocks away in the freezing cold and the snow.
All right. Well, Tom, what are you doing this weekend? What are you going to get up to? Kind of shenanigans?
Sosnoff's got a rich guy weekend this weekend. Go ahead, Sosnoff. Play it down. Go ahead.
Ooh.
Let me hear it. Play it down.
No, I do have a very busy weekend. And, I'm going to be baristaing part of the weekend. I got a lot of stuff to do.
He's a celebrity barista. Okay. They're having a special signing at Bad Coffee. Yeah, go ahead. What's the next thing you're going to do?
That's it. I'm going to be doing, I got to putz around.
Okay.
What are you hiding, girl? What are you?
So you don't want to go. So you don't want to go there today, huh?
What? He wants me. I'm trading in my car today, so he's all excited.
That's right. Marking the low in Tesla stock. You and that other guy, Tim, marking the low, getting rid of your car. This is beautiful.
So you're getting a new car today.
Yes, I am happily getting rid of my Tesla, never to look at it again.
The same one you got is the best car ever. Don't ever, nothing else, blah, blah, blah.
Hey. I got nothing against the car.
Then why get rid of it?
Because I don't like what it represents.
And what does it represent? It's the person.
It represents somebody who I don't respect.
The person who drives it represents it. And you represent an old woman.
Hey, I'm sorry, sir, but that's not the way I look at things. And I'm entitled to whatever I want to believe. And that's my feeling. So I got rid of it. And
must be nice to be king.
I will be driving a Lucid going forward.
You should do if you really want to put your money away. You should buy 5 other people's Teslas off of them at a higher price than what it can go for. I mean, really make it sting a little.
What does that have to do? Why do I want 5 other Teslas?
Because maybe they can't afford to get rid of their Tesla, and you would be helping them.
They can do whatever they want. I'm not telling anybody else what to do. Okay, I'm just doing my own thing.
Understood.
Most importantly, what color is your new car? Ooh.
Oh, he's going black. He can't pull off maroon. There's only a few colors, right?
I'm all in on black on black.
Okay, all right. We're just gonna leave that there. I'm just gonna keep it moving.
It's you'll like it. It's murdered out.
Ooh, you gotta get the rim.
It's the biggest oxymoron to have Satnam driving a murdered out car.
No, it's fine.
No, it's not.
All right. Hey, we got a great show for you today. No, we
got Scott coming back.
Oh, is he? Oh, great. So we got all right, let's get into it. It is finally Friday. We made it. It is rough. But we have a great show for you on this fabulous Expiration Friday. Not only that is it Friday, it's Expiration Friday. Triple Witching Friday, right? Yes.
Yeah.
Today's Triple Witching, yes.
Yes. So at the top of the 8 o'clock hour, we're going to do a market measures today. 10% market pullbacks and their IVs. So anytime we had a 10% move, we're going to take a look at what the market was doing and what the IV situation was at that time. Little retrospective study there. Then 8:40 is going to be Fast Market. It is #Fan Friday. So we're doing viewer trades. These are trades submitted by our viewers. Tom and Bat are going to try to do as many trades as possible. Then 9 a.m., I will be joined by my future co-host, Julia. She's coming in for Bad Taste. She will be taking over. Yes, Tom with 2 lovely ladies all next week as Bat goes on spring break. Y'all ain't ready.
I know that's a first for you, Sadnov, but it wouldn't be a first for me. I got to tell you, everybody's not happy. I mean, somebody's always left out. So try to spread the love around when you've got the 2 ladies in the studio, okay?
What, Bruce? What is wrong with you? Just like on a fundamental level. On a fundamental level, like what is wrong with you?
I'm not laughing. Speaking of nice ladies, thank you, Stella, on X for wishing Vinny good luck in his tryouts. That was very sweet of you. I appreciate it.
All right, keeping it moving. What are you talking about with Julia today, Tom? Do you know?
On her segment? No, it's her segment.
No, not on her segment. On Confirm and Send. What are you going to talk with Julia about?
Yeah,
no,
well,
okay. She wrote she did a market measure for us.
Oh, okay, great. It would be nice if I had the topic.
Right now you're on a need to know basis. You don't need to know.
It's a special one.
Okay.
Just say special.
TBD. And then back from his triumphant global voyage as an international ambassador and influencer, Mr. Scott Sheridan, back on American shores from his whirlwind tour of Japan. Scott, I have so many questions for him, but Scott's going to be on at 9:30. That's today's show. It's going to be great. Have you talked to him?
Yes.
Oh, okay, that's it.
That's it. Tom's going to be one-word answers today.
No, I talked to him.
My Taiwanese source is going to say the split screen is going to be very jarring when they have one side of you they have to look at and the other side they have to look at Julia. It's going to be very jarring. It's going to be very like a hurt in their eyes kind of thing.
Oh my God. Anyway,
Stop
I talked
jokes
to him
from your monkeys.
Yeah. I mean, this is his like little network of,
Piss the monkeys.
We like to call
Don't
them
hurt
slow
yourself.
adults. And
No. All right, keeping it moving here. You guys want your daily dose? I gotta clock out. Let's go. Let's get this thing on the road. Hit me with my theme music.
Breaking news.
Across the wire. Leading story.
Top story. In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's March the 21st. It's officially spring. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
Ready for the news.
This headline says U.S. households are sitting on record amounts of stock, and that could be bad news for the market. Record household equity allocations are a warning sign for the stock market. That's cool. Analysts at Davis Research say that households have the highest percentage of financial assets allocated to stocks since data started being tracked in 1950. Wow. And cash held by mutual funds has declined to a record low. Does this mean bad? This seems good to me.
Yes, it seems great. I mean, this means that technology is working because people are doing it more themselves, saving themselves some money, and also the market's as big as it's ever been, so the percentages are going to be bigger. Of course, we talked a little bit like this yesterday. Sadno?
Yeah, I mean, exactly, and you know, if the market was going up, people would consider this a great thing.
Sure.
If it were, yes.
a couple of downticks, and they're like, oh my God, you know, everybody's too long. Right. So I don't think that's. I think it's taken a little out of context too, because, you know, there's not a lot of other places to put money right now.
Sure.
I mean, people aren't using mutual funds like they used to because they're just not that tax efficient, and they're not that nobody wants to pay the fees, and people are, you know, they want a better return than risk-free rates. So sure. Hey, small cap index, the Russell, has posted it's been a long time since I've done this. Hold on. The small cap stock index has posted a death cross. That's right, death cross. The Russell 2000's 50-day moving average closed below its 200-day average. And you know what that means? Death cross. Death cross. Is it time to pop a small cap? What does this really mean for the Russell? What are you doing in the Russell? Death cross. It means whoever wrote that headline's a moron.
All jokes aside, what are you doing in the Russell? I know,
I'm just telling you, that's what it means. It means whoever wrote that headline is a complete idiot. We're short some strangles, I guess. That's about it.
Oh, just in the Russell? Okay.
Yeah.
All right.
I mean, that's all you can do. I mean, good IB ranking there everywhere, right?
Yeah. I mean, we're short a bunch of strangles. So far, so good.
Do you use IWM at all, or?
Yeah. We're short a bunch of strangles in IWM.
Oh, it is IWM that you're using. Okay. All right. Well,
yeah.
Good news. Good news.
You can use RTY, but the markets are too wide, and it can get a lot smaller in IWM. IWM IB rank is 30. It's come down from 50s, 60s at one point.
Yeah. It's been working really well this week. It's been a good winner.
Mm-hmm.
The European Union will delay implementing its first set of tariffs on goods from the U.S. until the middle of April, an EU spokesperson said. America still intends to inflict its tariff starting April 2nd. The Commission has decided to align the timing of the two sets of EU countermeasures to make the tariffs on steel and aluminum and then all the other stuff there. Let's talk currencies, though. What are you doing in the euro and other currencies this morning?
Euro's up small, basically unchanged. Looking at
to be fair, they're all the currencies are basically unchanged.
They're flat. Yeah, they're flat.
Yeah.
Yep. Mm-hmm.
Okay. I was just curious. BlackRock's head of digital assets says staking could be a huge step change for Ether ETFs. The success of Ether ETFs has been kind of meh compared to the explosive growth in funds tracking Bitcoin. But they're saying it's kind of like a question of yields, and that staking would be a way for investors to earn passive yield on their cryptocurrency holdings by locking tokens
tokens up on the network for a period of time should investors be able to stake their Ether in an ETF.
Well, so far it hasn't been legal, so I mean,
right, but they're saying that because of such a tepid response to these ETFs, like this would change the game. Would it change the game?
You mean if you were able to basically get a return? I mean,
yes.
You're taking risk, but sure, it would help for sure.
Okay. What do you think the likelihood of this becoming a reality is?
I really don't know because it's never been, the whole regulatory environment has changed, but it's
sure.
never been legal for broker-dealers to do that until, it's still not,
Well, no, the SEC now too is saying that miners and proof of stake companies, they don't have to register now either. So it's, loosening regulations for on the miner side of things now too.
There's no written regulation right now, like saying that we can do it. Like the brokerage firms are kind of stuck in, we don't actually know.
Okay.
Like nobody knows, you can go ahead and do it.
It's not a great place to be, right?
No, it's not a great place to be because if you go ahead and do it based on past precedent, they can fine you, tens of millions of dollars if they decide you can't do it. So nobody knows what to do.
Okay. This is interesting. I don't totally understand this, but MicroStrategy has a new preferred security known as Strife. And that I think last night got priced at a sizable discount to its face value of $100 per share. The $500 million of preferred stock would carry a 10% annual dividend rate, and it could price in the $80 to $85 range, but it's going to be at a discount to $100. If it does price at $85, then you'd get a yield of 11.75%. I didn't know that MicroStrategy, now just Strategy, had like all of these not secret, but just different tiers of preferred stock listings, and their existing convertible preferred trades under STRK, and that's traded lower since they announced the new offer. I'm so confused.
They keep raising money to buy more and more Bitcoin. The whole risk to this trade is,
that's the definition of a Ponzi scheme out front, though, isn't it?
Like to me, this is basically this is basically male Mary Kay.
Yes. This is Mary Kay for Bitcoin trade. You're correct. Yes.
This works great. It works great until it doesn't. If Bitcoin goes down, there's no way to service the debt. So you're basically helping him support the price of the stock. Support the price
help you.
You're basically
help you.
You're helping MicroStrategy support the price of Bitcoin and hopefully send it higher so that he can pay back, the yields on this thing. Mm-hmm. It's who knows? I don't know. I'm just like everybody else. If Bitcoin goes down to 50,000, not only you're not getting your 10%, I don't even know if you're getting your money back.
Sure.
Right.
Sure. But I just wanted to make people aware of, and again, I do not understand how this works or structured, but I'll make
it really simple. You need Bitcoin to go higher.
Done and done.
Yeah, Bitcoin has to go higher, and this is one way of supporting the marketplace. But if it doesn't, if all this stuff falls apart, there's going to be a lot of...
What is Bitcoin doing this morning?
It's unchanged.
Yeah. Yeah, 84,700 on the futures, which is basically unchanged. The higher end of the middle of its most recent range of the last, say, 10 trading days, approximately.
What doesn't make sense to me about this, and I don't know about anybody else, what doesn't make sense to me is that you're getting a 10% or 11% yield on something that has, a 70% volatility.
Yeah.
And so
seems like a low yield, right?
it seems like a low return for the risk you're taking.
That's what I meant. Yeah.
Yeah.
Low dividend, I guess, or whatever you want to say, right?
So you're getting 2 times risk-free rates. Big deal. You're taking 4 times risk-free or 6 times risk-free rates in risk.
Say more than 4, sure.
Unless I'm missing some. I haven't read the offering circular.
Well, you got to risk it if you want to get the biscuit.
That's what they say, Vanetta. That's what they say.
Is there anything to do in MSTR, just like regular MSTR?
Yeah, there's plenty to do in there. That stock trades. The nice thing about MSTR is a trading vehicle, and I actually like it as a trading vehicle. I don't know if I'm up any money in there, but I've been trading it all year. Okay. The nice thing about it is you can trade like 1 or 2 contracts, and you have a big position on it.
Oh wow!
Yeah, I mean it's a $300 stock with 100% implied volatility. It's a mover.
Oh, it moves.
Yeah, let's see. Year to date, are we up any money in there? Because I've been all over the place in there. MSTR year to date. Yes, shockingly.
Yeah.
I wouldn't even have known that though. Like I've just been short premium all year. I'm not making any bet on there. Like Tony said,
I mean, it's almost like anything that we trade. We don't look at the P&L of it. You just try to put on the best position.
You know if you're doing good or bad in certain underlyings.
Sure.
And I haven't had a directional opinion on MSTR the entire year. I've just been selling like wide strangles and adjusting them. And I've had some really bad days and some really good days. And net it's worked out okay. But like Tony said, it's 100% volatility.
Yeah, okay.
And Bitcoin, just so you know, Bitcoin is not 100% volatility. Does not have 100% volatility right now. Like if you look at IBIT, volatility in there is 57. Oh, no, I take it back. Yeah, 57. So you're talking about it's almost double the applied volatility of Bitcoin.
Wow. And Bat did a trade in IBIT on his podcast yesterday.
You are 100% correct. Up a couple of shekels right now. Not too many, just starting.
Hey, in other news, cryptocurrency exchange, the Kraken, is buying NinjaTrader for $1.5 billion. Kraken, one of the world's largest crypto exchanges, said they're going to buy the retail futures trading platform NinjaTrader for $1.5 billion that would allow them to expand into multiple asset classes. Tom, what are your thoughts?
That could have been me with that fine girl.
I would say that's probably the biggest overreach I've ever seen in the history of this business, but that's just my own opinion.
Why? What do you mean?
I think Kraken's a good firm. I think they overpaid by about $700 or $800 million.
Oh, that kind of overreach. I gotcha. Yeah. Okay. Interesting. Interesting. Okay, girl, the tea is hot.
No, I mean, listen, they know what they're doing. They're a very successful firm, and they know what they're doing. They have a really, they've built a good business for themselves. No question about it.
Yeah,
no doubt it. Hey, getting to some earnings from last night. Tom, I wear a size 7.5. Nike expects sales will plunge in the current quarter as they face tariffs and sliding consumer confidence. The company said its guidance is based on ongoing restructuring efforts and that they're really sort of in the toughest part of their turnaround. They do expect sales to decline in fiscal fourth quarter. What did you do in Nike and what is it doing to you?
The stock's down about $3 or $4. It was up $2 after the number came out, so nobody knew what was going on.
Right. Yeah.
It was trading 74-ish, and now it's trading 66, 67.
Correct.
I sold the March 66 puts that expire today. I think we'll be fine. I don't know.
Okay.
We'll see.
You should be okay.
Yeah. You were so close to those nice dunks that you had there. They looked real good too, Vanetta. I mean,
they're so cute and they're on sale.
Oh. Yeah, pink. Sad enough. You got to help her out. You got to help her out.
As long as she's willing to take half the losses, I'll help her out as much as she can.
You know what, Vanetta? I would go with this. Down 4. Even he probably not going to be able to butcher this. Market maybe catch a bid, hopefully, before the opening. I take him up on it, Vanetta. Take him.
Oh, man.
It's like $2 to $1 here. Maybe even $3 to $1 you can win versus there's a good risk reward. You got to do it.
Micron, what'd you do in there? Micron shares jumped on an earnings beat, and Micron also issued rosy guidance as their data center revenue tripled. Revenue increased 38% from a year earlier to $8.05 billion. Good job out of you, Micron.
Well, the stock's actually down.
That was then, Vanetta. This is now.
Okay.
Yeah. Stock's down. Stock's down $4. It opened up $5. And it's down $4.
There's just no pleasing Wall Street, is there?
No.
Man.
It's well within the expected move. We should be very good. We sold April strangles far out of the money, and we sold some extra March 90 puts, which should be a home run. So Micron is going to be our big winner today.
Nice. Good job. All right, Micron. NVIDIA said they're going to open a quantum computing research lab in Boston, Massachusetts, where they plan to collaborate. Yeah, I think there's a couple of schools there where they plan to collaborate with scientists from Harvard and MIT. Jensen Huang made the announcement at NVIDIA's annual software developer conference. What are you doing in NVIDIA?
That's a good question. I don't think we have any delta. We have a lot of positions on, no real deltas. We might be just a tad long this morning.
It's basically Unchained down $1 at this moment. Even S&P down 18.
Yeah, we may be a tad long, but it's not much.
Anything else in the chip stock sphere?
No, we mostly played Micron yesterday. That's it.
Okay, that makes sense.
Yep.
All right.
Yep.
Yeah.
With Micron lower, maybe they'll all be a little bit lower.
Yeah, that's true.
Mm-hmm.
A company called Perplexity AI is in talks to raise funds at an $18 billion valuation. Girl, I ain't never heard of you. The jump in valuation doubles their previous $9 billion valuation. Again, never heard of you. No, I have heard of them. But they are an AI startup that provides information by searching the internet, just like ChatGPT and Google's Gemini. But Perplexity is backed by Amazon founder Jeff Bezos and Japan's SoftBank Group. What do you think of them already doubling their valuation?
I think that's very nice of Jeff and Son to double their valuation on paper. Thank you, guys. Congratulations on your wealth.
Congratulations on your wealth. All right.
I will not be investing in Perplexity, and neither will Tony. That's all we care about.
My daddy won't let me.
You can invest in Amazon. Were you doing anything in there?
Sure. We have some positions on Amazon, but it's kind of been stuck in the mud, I guess, is an best way to explain it.
Yeah, it's been going sideways for the last week and a half. After selling off significantly from 240 down to around 190 and change. Amazon has earnings coming April 28th.
Well, speaking of AI bots, Anthropic's AI-powered chatbot Claude, he can now search the web, capability that long eluded it. Web search is now available in preview for paid Claude users in the U.S., if that means something to you. I can't keep all of these services straight.
I don't blame you.
No, there's so many, and there's going to be just more and more and more and more. I think the biggest difference between all the services is just going to be what the price is.
Yeah. Although this is crazy, a privacy rights advocacy group is supporting an individual in Norway who was horrified to find that ChatGPT hallucinated and made up information claiming that he had been convicted for murdering 2 of his children and he attempted to kill the third. None of this was true. His children are fine, but he's obviously suing them over defamation because he's like, yo, I did not murder my family.
Who'd they do this to? Who?
This is demonstrably false. Here are my kids.
Pictures that didn't happen.
That's bad.
That is bad.
So I don't know how you deal with that though. Do you just find that's very upsetting to me.
I don't know how you deal with that either, and I'm not exactly sure how that. There must be somebody by the same name, or I don't know.
So obviously there's a spectrum. So yeah, ChatGPT can get your birthday wrong or biographical details wrong, or it could say that Tom is actually 6'1". He is not, but
I am just under 6'1". Thank you very much.
It's your roster height. Everyone knows roster height is off.
I was 6'1".
Anyway, you can't really trade ChatGPT, but we can look at Microsoft this morning.
All I know is I'm just a skosh taller than Sosnoff. That's all I care about. He can be any size he wants. Microsoft, I don't know, $3.84 on the bid. We'll round down $2.80 or so.
You know, you guys are shrinking, right? You know that's a thing.
Yeah, I know.
Yeah, I'm prepared.
Okay.
I'm prepared.
Hey, this is bonkers. As someone, Tom, you know, you were ahead of the curve when it came to producing content, and you know what it takes. But Apple is losing $1 billion a year on its Apple TV Plus streaming service. The company pays $5 billion a year to bring you content like Ted Lasso, Severance, and The Morning Show. But it's kind of a loss leader. The shows are critically acclaimed, and they are gaining subscribers, but it is, I guess, not enough. Wheels are seeming to come off a little here at Apple, like their Siri's not going to be ready. Their VR thing was kind of a disaster. They're losing $1 billion a year on streaming. What is going on at Apple?
DEI.
Okay.
Apple better get its act together. I've got long delta in there, and Apple's down $2, and I'm not happy about it. It has been going sideways, catching a little bit as of late, but every time it takes an uptick, it's met with selling.
Have you watched Severance?
I started and stopped. I can't get there, but I've heard good things.
I've never watched it. I have heard good things, but I was like, I don't want to watch something about working in a dystopian office when I come home from working in a dystopian office, you know? I want to watch sexy realtors.
I don't blame you.
So this is the most disturbing thing I think I've seen in a while. Like, what are we doing? So Klarna, which is on the precipice of doing an IPO, they announced they're partnering with DoorDash. So yeah, earlier they got the partnership with Walmart, which, you know, makes sense. But the concept of people having to buy a burrito and pay for it later, like, it makes me so sad in our credit culture that's endemic in America that you're going to have to finance your sushi order. Like, where did we go wrong?
I agree. Is that enough?
Like, doesn't that seem predatory?
You know what, though? I from an old man's point of view, it does. From a young kid point of view, and by young kid, I mean anybody under the age of 40. That's where I draw the line these days. Nobody pays with cash. Like, everybody uses credit for everything. So I don't know. I don't know if it really matters.
But there's a difference between just debit, like using a card for everything, or waiving.
I don't think people just use debit, but
I use a credit card for everything because of miles and points. But
I get miles and points. I've heard about this.
I pay it off every month. I pay it off every month.
Well, no, I know you have to have that kind of discipline. I don't think everybody has that kind of discipline.
Sure. Or to be fair about my privilege, I have the means to pay my credit card off every month. Not everyone has the privilege to pay their credit card off every month. But Tom, what do you think about DoorDash Klarna collab?
I don't have an issue with the fact that they have a collaboration, because I think, you know, it provides more options if you want them. I think it is a little bit concerning that people are borrowing money to buy a burrito. But yeah. I don't know how much different that is than using a credit card and paying it later either, you know. I'm not like, I don't know the terms of, I don't know what it, I've never bought anything using Klarna or Affirm.
It's installment. So it just normally it takes whatever your purchase is and it divides it by 4. And as long as you pay, as long as you hit each of those 4 payments, then you don't have any interest. You don't have any other fees. But the gimme and the gotcha, as Dr. Jim says, is what happens if you miss one of those installment payments.
Okay. So
don't if you miss one of those installments, I don't know for sure. So correct me if I'm wrong on that.
I've never used it either, but yeah, go ahead.
If you miss one of those installments, I think you have to pay the full interest rate of the whole thing. You know what I mean?
From the start,
right? It occurs. So let's say it's $150 worth of interest. I'm just making up a number, and you have 4 payments. You pay 2 of those payments. You miss the 3rd or the 4th payment. You have to pay the whole $150, I believe. I could be wrong.
Yeah.
Hey, all
Plus
I'll say
tax,
is,
titles, and charges.
I mean, if it's a less expensive option than a credit card, then I guess I can't be mad at it. I just don't, like I said, I've never used it, so I don't know how good it is or not.
Are you doing anything in Affirm? Again, we can't trade Klarna just yet. They're still gonna. Okay, what are you doing in Affirm?
I mean, we're short a bunch of strangles in there, so we'll see.
Okay.
AFRM IB rank of 48 is pretty good. It's been going sideways, which helps your position. It's down around 50 cents, which should help your position. Earnings are May 14th.
Hey, some good news. Southwest stock is on a roll. One analyst says he's not even bearish anymore. Melius Research no longer recommends that investors sell Southwest stock, saying the air carrier has done enough, including adding bag fees and cutting jobs and just basically becoming a miserable place. And the analysts are like, we love it. Shares of Southwest are headed for their best stretch in nearly a year. Do we love to love you, baby?
I mean, I haven't traded Southwest recently, so I don't even know where it is.
Southwest, about 11%, 12% over not Saznoff, Batista's sister's call of buying love at $30. It's $34, Saznoff, basically unchanged this morning. That's just at about a 2-week time or less, Saznoff. I tried to give you the inside scoopy.
That's pretty good. Hey, Lyft said they plan to offer driverless vehicles on their platform as soon as this summer, and that they see human drivers transitioning to other work such as fleet management as autonomous rides become more ubiquitous. What are you doing in Lyft?
We do not have a position.
Okay.
We have a small Uber position, yes. Lyft, no.
Okay. Well, how's your Uber position?
I dare to ask, but it sounds very obvious.
I mean, we're right in the middle. It's a strangle. We're right in the middle.
Okay.
Everything's a little bit weaker this morning. Uber is down about a buck or so. Even the S&P is just sold off, down 39. NASDAQ down 170. Russell down 20. The Dow down 250.
By the way, this keeps the this is what we talked about for the last 2 weeks, that this particular triple witching, although historically bullish, has the last 4 years been super bearish, this opening. And it looks like today is going to make it 5 years in a row.
That's interesting.
But that's one of the reasons that we didn't, we didn't play it we definitely did not play it to the upside. So anyway, that's a little bit of earlier in the week, we said up early, down late. It's not the worst call in the world. It's pretty good.
Yeah,
pretty good.
Yep. You were on that bandwagon. I thought we would catch a little bit more of a bid going into Thursday and Friday. It happened on Thursday. I don't think that's going to happen on Friday.
And also, one other comment about that. Not just that, but this is a classic by the Fed on Wednesday, and then a complete reversal the next 2 days.
Yep. Solid there.
I have seen this film before.
Yep.
Hey, a group led by William Chisholm and backed by private equity fund 6th Street has reached an agreement to buy the Boston Celtics for $6 billion and is in what will be the most expensive NBA team sale in history. Yeah.
I think it's 6.1. I think it's 6.1, Vanetta, because Tom bid
it is.
And he was outbid.
Well, what's interesting about this is I read it because it got panned really bad. I didn't know a lot about the Celtics, but I guess the Bruins
own the stadium. Yeah.
The Bruins own the stadium, which I didn't know. And that means the Celtics basically get nothing. And so until they have their own stadium, until they do something else.
No, but it's still the brand identity, still the franchise. Like there's still value in that.
Well, they'd like to make a little money, I would assume.
Yeah.
And unless they go pretty deep into the playoffs every year, it's not a moneymaker for them, according to the numbers.
Well, we'll see what happens. Hey, sports books like FanDuel and DraftKings really need your bracket to get busted this year. March Madness numbers include $3.1 billion in wagers and nearly $5 million in earnings for one lucky player. But after reporting they lost more money than usual during the most recent NFL season and last year's March Madness, sportsbooks like DraftKings are hoping to be more profitable during the big dance. I was talking to some guys in the office about this, and they say really the mobile sports betting has really changed what we think about like March Madness. Like it doesn't matter like about your stupid crappy office pool. Like you could do so much granular stuff game by game, play by play online that it's totally different now.
Yeah, it's crazy. It is.
Yeah. All right. DraftKings
I thought you did a good job lobbing that softball up to him, but he wasn't going to swing.
That's fine. I want to go home. DraftKings. Anything in DraftKings?
DraftKings, DKNG. Do you care? Trading $37. I don't know. It's got kind of wide markets. Maybe it's unchanged. Earning May 1st, IB rank of 41.
What surprises me about DraftKings is, given the 10% VIG that they scarf off the top, how could they not be more profitable than they are?
I agree with you, Sadnoff. Bill Caddy was able to buy a new caddy every year with that 10% VIG. What does DraftKings do? Absolutely nothing.
I mean, I'm not kidding. They scarf so much off the top, and they can't. And they're, I mean, it's amazing.
Well, those ads don't pay for themselves, Tom. No,
I know. It's all they blow all the money on marketing. It's like the most inefficient use of capital I've ever seen. I mean, you would think, I explained this yesterday on air. Their margins, their VIG is 100 times ours. 100 times.
Wow.
And they're so inefficient, it's unbelievable.
Either that or we're not good enough thieves, Sosnoff. What's going on?
Because I can guarantee you right now, people don't win gambling.
Yeah.
That's not what Mike can tell me.
You have moments of greatness. It's hard to be consistent. 100%.
Yeah, I mean,
take it from somebody who watched somebody
make you think
gamble every day.
You're not.
Hey, finally today for my viral video of the day, I'm switching things up a bit. Normally I do a little Will Tom Eat It segment, but on Wednesday of this week, me and Gus hit the office and we asked everyone in the office if they could do a little March Madness geography, and we'll see who's better at knowing the basis of your bracket. Watch this. Even knowing where the school is.
Yes, correct. Can you tell me where Creighton is located? Ohio. Kansas.
Omaha.
Indiana.
New Jersey.
Ohio. No. Yes.
Oh, there seems to be like a delay. That's okay. Sorry. I was like,
Isn't
what
it
is
Omaha?
that? No.
Yeah, Creighton's in Omaha, Nebraska.
All right, hold on. Just the.
I knew that one. I dated somebody who was a dentist.
I'm Vanetta.
They went there.
And we're going to ask the tastylive office about their views on March Madness.
So what does being a degenerate gambler have to do with geography?
Well, because you guys will just bet on stuff without even knowing where the school is.
Yes, correct.
Can you tell me where Creighton is located?
Ohio. Kansas. Indiana.
New Jersey.
Ohio. No. Yes.
No, it's not Ohio.
Creighton's in Omaha, Nebraska.
Oregon. New York.
New York.
Nope.
Connecticut.
Connecticut. Virginia.
Indiana.
Virginia.
Louisiana.
Lipscomb is Nashville.
Oh, it's got to be East Coast.
It's New York.
I'm going to go Pennsylvania.
Virginia.
It is.
Minneapolis.
That sounds like a New Hampshire school.
They're laughing at you, Jason.
Look, it's fun. St. John's. That feels like a New York school. Pennsylvania. It's a great state of Utah. I'm going to go with Ohio.
Florida?
California.
Colorado.
California. My home state of Maryland.
I feel like that has to be New York, right? Oh, the great state of New York.
D.C.
Very close.
Rhode Island.
Why would you go Rhode Island?
Oh my God. West Virginia?
They're that religious university in Lynchburg, VA.
Wow.
From Missouri.
Is that Connecticut?
What is that in like Philadelphia?
St. Mary's, California.
That's correct.
McNeese.
Montana.
South Carolina?
Boston with the Irish. Okay, well, obviously that's Florida.
Arizona.
Nashville, Tennessee.
Oklahoma. Well, like Mississippi, Georgia, Alabama. Are they Alabama? No.
Ohio.
McNeese State. It's in Kentucky.
Louisiana.
Texas.
I'm gonna go with New York.
Because there's a high point in New York.
Well, it's Colorado because, the Rockies.
Pennsylvania. Indiana?
Indiana.
What is the high point in India? I think you're thinking Crown Point.
Oh.
North Carolina. That's correct.
That is Kentucky.
Indiana.
Oh, isn't Xavier in Washington State?
Oh, you do not know this one.
Ohio?
Yes. Yeah.
I think I know this one. It's in Rhode Island.
Incorrect. You want one more?
No.
Connecticut?
Wofford. Michigan.
Wofford. Oh, New Mexico.
Wofford is one of the Carolinas south.
It is South Carolina.
Michigan.
Yeah, Michigan.
Oh, Bama.
How do you know that?
Bama.
How do you know that?
Sometimes you're down on your luck and you got to bet Troy in the early games.
That's an honest answer.
That was pretty good. I mean, you had to go with the under on how many they would know, right? I mean,
Someone like everyone, the guy Nick with the beard, and like he got the most right. And I asked him, I was like, "How much do you owe DraftKings?"
Oh no, but all that
Quentin did really well too.
Anything, he's got the in.
Yeah, Quentin did good. Everyone had their strengths, but it was just really funny. And thank you to everyone who participated. So.
My man Marty over there, oof, he never got the ding, ding, ding. I can see that. We're going to take a quick 90-second break. We got more Tasty Live after this. Sound of what comes up next, confirm and send. That's right. We'll be back in 90 seconds. Good job, Vanetta.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Hold on, I'll see.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. You know why, Sadnov? Because it's time for confirm and send. But before we do, let's take a quick look at the market. Even the S&P, Sadnov, they're down $44.50, trading and making new lows for the day. They were down around 10 or 15 when I woke up this morning, about 2 hours ago. NASDAQ down 184, also lower. But the lowest of the group is the Russell on a percentage basis, down 21, and the Dow down around 300. Sadnov, why are the Qs or the NASDAQ the most important ETF of the day today, Sadnov? Give it to us.
I mean, unless you're talking about the dividend, I have no idea.
I am talking about the dividend. The Qs have a dividend today, Sadnov. That's your public service announcement by Mr. Tom Sadnov. Volatility near its highs.
No. I think it's not today. It's Monday. They go ex Monday.
Yes, Sadnov. Everybody knows that. We always mention the dividend so that the people have a day to do something about it if they want to, meaning they have in-the-money options that they might have to pay or receive the dividend, or they want to roll, which they should be doing anyway because it's 21 days.
Can I tell you something more important? I like the way the Qs structure it, where it's the day after expiration rather than the day of, because it's so much more silly. Fair for people.
Yep.
Yeah.
Yep. I agree.
All right, we gotta run. Let's
do it, Sadnov. Let's do it.
Confirm and send. Let me just structure my screen here. Okay, I'm just getting started with 0 DT options. Where would you suggest I start to get my feet wet? In the SPX, the SPY, the ES, or the MES?
Well, if your account's over $25,000, then you have no patent day trading restrictions or issues with that because you want to avoid that. I would be an SPX. If not, then I would probably be an ES because there's no patent day trading violation or rules in /ES. So SPX is my first choice by far, and then ES, and then maybe SPY, and then maybe MES.
So what are you saying is the first one? You're saying
SPX, SPX,
yeah,
ES,
yeah,
SPY, and then MES. That would be my 1, 2, 3, 4.
Right. So the cleanest of all of these on a daily basis is the SPX because they have a cash settled. So if you're going to do defined risk, the SPX is cash settled at the end of the day. So there's no exercise assignments, dividends. It's just easier. It's cleaner. After that, they're all very similar because the SPX is also big, and the SPY is 1/10 the size, but it's stock settled. And then if you have less than 25,000, like Tony said, the ES, which is half the size of the SPX, or the MES, which is 1/10 the size of the ES, or 1/2 the size of the SPY.
Mm-hmm.
So those have no pattern day trading rules. The bottom line is all 4 of these products have the same underlying.
Yeah.
So it's just the structure. It's the market structure of those 4 products. Let's go next slide.
Yep.
You guys need to talk. You guys used to talk a ton about your theta to delta ratio and your theta to net lick ratio. I haven't heard much on either of those 2 topics recently. Is there a reason?
No reason. Just got away from it. We certainly can give it today, Sadnov. No problem with that. You've been pretty flat on the delta. You might be getting a little bit long, down 46 here, but we've been pretty flat on the delta. You can give the rest.
Yeah, I mean, we've been like the reason we haven't talked a lot about it because after we have a bit of a sell-off, like when the market's at record highs, our theta to delta, our delta to theta ratio could be kind of high. Right now, it's our theta is going to be bigger than our delta. Sometimes our delta is bigger than our theta. And now our theta is bigger than our delta. Delta is pretty flat. Our theta is just whatever we want it to be because volatility is high. And our theta to net lick ratio, that never changes. We're always about somewhere between 1/10 and 2/10%. So the theta to net lick is always about 1/10 to 2/10, but our delta to theta ratio does change based on if the market's overbought, oversold. If the market's oversold, we'll be a little long, a little delta. If the market's overbought, it's opinionated, but if the market's overbought, we'll be a little short delta. And our theta numbers depend on volatility. So that number is not set in stone, but theta to net lick is. That's usually 1/10 or 2/10%. Let's go next slide. And we're right there right now. I've been using Coin, COIN, for scalping because it oscillates quite a bit. Sure does. Are there other stocks that you are aware of that are good for scalping? I like to get in and out of a stock within 15 or 20 minutes and play both puts and calls. What other stocks would you use, Tony, to like?
I mean, the most widely held and volatile ones that come to my mind is a Tesla would be a good one right now. A lot of volatility in there, a lot of movement in there. I guess MicroStrategies, if you want to throw that one.
I'd be careful on MicroStrategy.
I agree with you, but it does have movement, right? I mean,
yeah, I mean, with volatility where it is right now, which is, we're talking about vol in the, basically in the 20 handle. You can pick your poison. I mean, you're going to get stocks that are very actively traded and highly liquid. Nvidia, like Tony mentioned, Nvidia is one. It's only a $117 stock. Tesla, it's a $235 stock. These move all over the place. Even a stock like today, a stock like Apple is going to move, $4 or $5. It looks like
it already has. Yeah.
I mean, Amazon, Google, all the biggest stocks. I mean, Meta moves around $5 or $10, $15, $20 a day.
Yeah.
You can really pick your poison, and I don't think you need to go outside of like the top 10 stocks at all. Not in this market. Coin's fine, but the other, I would stick with the most liquid underlyings.
Yep.
Let's go to the next one. I found a video from mid-October during which you discussed the SPX 0DT trades and deciding to trade based on whether the VIX was up overnight or down overnight. I think the research indicated that one should trade when the VIX was up overnight, and when the VIX was down overnight, one shouldn't trade. That's exactly what that piece of 0DT research essentially said. If you're looking for the best opportunity, it's when the VIX is higher overnight as opposed to lower. What are you using for a closing print on the VIX and an opening print on the VIX? It seems like the VIX begins moving during the night. I'm not sure what time to consider for the close to the open.
You could look at /VX that trades a lot, a 24/5 kind of product if you want to, than VIX.
Yeah. You're talking about, you just use the futures.
Yeah, the futures /VX.
Yeah, exactly. So you can use /VX or /VXM. That's the micro future. It doesn't make a difference. They're the exact same, except for size. So if you look at /VX right now, it's up 55 cents. That is VIX up overnight.
Yep, that's the daily move. Yep.
Yeah, that's the easiest thing. That is your overnight move. It trades 24/5. Let's go next slide. I have a Tasty Bite account. Still, I try to keep my theta between a theta to netlick ratio of 0.2 to 0.3. What is the best way to grade my monthly performance?
What's the best way to grade? I mean, by P&L. I mean, I love your, I love your theta ratio and everything else. I mean, you can get a high theta ratio by using, a lot of contracts in a tight vertical spread. I mean, I got to assume you're staying mechanical and everything else like that when I make this. But P&L is what I judge it by.
In the end, you're always judged by wins and losses. And that's in sports, and in trading, you're always judged by, in investing, you're always judged by P&L. But I do understand that trying to micromanage your P&L on a daily, weekly, or monthly basis can be very difficult. Like for example, if you're doing things with a 70% probability of profit or whatever it is, you're still going to have, or 80%, you're still going to have 2 or 3 months a year that just don't work out. And so you can't judge your success by that kind of stuff.
Yeah.
So you have to look at it a little more holistically than that. But Tony's right. I mean, ultimately it's P&L, but you should have a sense that you're going in the right direction. You should just accept the fact that you're going to have losers mixed in with winners.
Yep.
Let's go to the next slide. And the last one. You have performed countless studies that have determined the optimal entry, days to expiration and delta, exit, and management of short options. I'm trying to find the same types of studies for long options. What is the best, the least worst? Do you have any studies that cover long options?
You're going to have to go to CNBC. I'm sorry. No, we really don't have anything like that. We have discussed a little bit in the 0-day options how you can, if you manage quickly, have an opportunity to manage winners similar to selling premium in 0-day by buying premium. So that would be the only place I would look.
Yeah. Again, that is the correct answer, in that the only place we've talked about buying premium and
Sosnov, I think I was 100% on these confirm and sends today. I don't know if do I get something?
You were shockingly better than you usually are. But the only place that
I have listened to you beat me up for 14 years with Sosma salts. My brain just doesn't work that way. You are so sharp with them. I mean, it's just natural to you. How does she do it?
The lights off, I promise you. The
lights
only
off an imagination.
Yes, exactly. We've looked at, on the 0DT stuff, we've looked at it both ways, long and short. And you can make an argument for both sides. There's far less of an adjusting edge and things like that. This has always been a game of, do you think you can beat the stock, or do you want to try to let the stock beat you? We've always played the game of let the stock beat us, but some people like to play the game of let's see if we can beat the stock. You can flip a lot of our stuff over, and because everything is theoretically kind of, so you can flip over our studies if you want the other side to it. But we just haven't done a lot of stuff on long options. It's just not our thing. I mean,
that's right, Sosnov. It's also not your thing, hockey. As Ovechkin's only 7 goals away from breaking the all-time record set by Gretzky, Sosnov.
Do you think? 2 questions for you, since you brought it up, and we're going to run out of time here.
Sure.
2 questions.
Sure.
A, do you think he does it this year? Because I think there's only
I think
13.
Yeah, I think there's only like 12 or something games from 12 or 13 games for him. He's got to almost have 1 goal a game. I want to root for him for humanity, but I think it takes another year.
Yeah, me too. And then my second question.
Yeah.
Be good for hockey if it hit.
He's got more hits than, he's like the 4th and all-time leader in hits too, which is unbelievable because Gretzky was never that type of player. But go ahead.
No, but Gretzky has an assist record that'll never ever be broken. So, Gretzky's got more assists than he's got. I forgot the statistic, but Gretzky's got like 1,000 more assists than him. Whatever, doesn't matter.
Yeah.
Does he get in the conversation for the greatest of all time, or is it hands down Gretzky and nobody else is even in the discussion? That's a good question.
Gretzky has 1,963 assists or something like that.
It's ridiculous. Yeah, he's 1,000 more assists.
Yeah. I don't think he becomes the greatest of all time, but I think there'll be those people that will say, Russian machine don't break, Sosnov. You got to put him up there. He's definitely in the top tier, top 2, 3, 4.
He has a different game than Gretzky. He doesn't make this, but like you said, he hits people. He plays physical, and he also.
It's a different game too. The game was, you had goons around Gretzky,
and he did it. He did it in a lot less years too. No. Ovechkin did it less games.
Yes, Ovechkin did less games. You could certainly make that argument, Sosnov. You could certainly make that argument.
I don't think you can replace Gretzky because he is the great one, but it's a great discussion to have.
Yep. Let's take a quick 90-second break and come back. We got a market measure next. This is Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Why are we literally rolling out the red carpet? What has this diva done? Who
I know, I
is
saw
this-
that. Why do you got a little red
this
carpet?
diva?
I don't like it. They said it's
sound.
Do we have a wide shot of the studio? They said it was sound. Yes, me lord.
And do we have to clap when you walk in?
Where are the rose petals? Wow.
Vanetta.
Hello. Yes. Good morning. Ooh. Yay.
New phone. Who dis? I did go in and get the phone at AT&T, and I didn't realize.
You went in unsupervised?
I went in by myself without a helper.
Did Beth have to pin all of your information to your jacket? It was like, my name is Tom Sosnoff. I need help, but I am an independent person, but I am looking to buy a phone. Here is how much money I have available. If I need help, you can call Beth.
I can send you some viral pictures of my corned beef.
No, that is a terrible sentence. I do not want pictures of your unseasoned beef. No, ma'am. No, ma'am. You guys are elderly?
I'm the only one in this room that's never been in an accident.
That you've reported. See, I report my accidents. You don't report your accidents.
You don't report your accidents. Other people report your
They
accidents.
hit me. There was nothing I could do. They hit me. I was standing still. They hit me.
I've heard this story.
Okay?
You're the only one in this room that's ever run yourself over.
That's true. That's true.
Classic.
That's true. You're the only one that had to sue your own property insurance because you backed your car up into the garage.
Oh, yeah.
Didn't sue anybody.
You're the only one who's had their mirror kicked off by an angry cyclist. This is fun.
Forgot about that.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live with a market measure. Even the S&P sound off down 53. I know you didn't see that coming.
I for sure did not see this coming. And you know what's crazy is that this is not quite 2 times the expected move right now, but the opening at 8:30 is going to be brutal. And something we do really well in the show is not talk about playing the overnight SPX move and how dangerous it was. We talked about it yesterday. That's why you had to get out of those SPX positions. Yep. Because you just can't control. There's nothing you can do by being long June futures that is going to protect you against expiring March positions.
Yeah,
or
it's a helpless feeling.
It's helpless. It's the worst.
Yeah.
I made that mistake about 30 years ago in the OEX pit and something like that, and I am
not again.
Back there. Never again. 10% market pullbacks. This is a really good piece today. Really good. it's an early market measure today. We put it together, and we thought we'd hit you with some good stuff. This, and then some trading, and then some.
Julia's got a special at 9 o'clock. Sound enough? I don't even think you know about it. Going to be great.
Yeah, well, all her stuff's great. So, 10% market pullbacks and their implied volatilities. Let's do it. So the S&P has had a significant pullback from the market top in the past month. It's experienced about a 10% drop from top to bottom based on closing prices, and a 10.5% drop based on intraday prices. Okay? Nothing, we're all clear of the concept.
Sure.
Doesn't feel like it's been that much because vol hasn't really gone anywhere, but still.
Yep.
I mean, it's going up, but not like crazy.
Yep.
Let's go next slide. So how often have we seen a 10% drop in the broad market? And what happened to its implied volatility? We analyzed SPX data for the past 2 decades. For the last 20 years, we eliminated all the overlaps in the same testing period. So for example, if we saw a 10% market drop between 218 and 312, and between 219 and 313, we only recorded the occurrences as one drop in that same window. All right?
Mm-hmm.
You want to see how many times does this happen?
All right,
So next
sounds
slide.
good.
In the past 20 years, there have only been 16 occurrences. So just under, well, that's still a reasonable amount.
Sure.
There have been 16 occurrences in 20 years that saw a continuous downside of over 10% within a month. The current market drop, and that's what keeps everybody honest, the current market drop is still slightly smaller than the other moves on average, but the average daily moves are almost the same. So since 2005, there's been 16 occurrences. This one, the average return here is down. The average return since 2005 is down 14. We're down 10 right now. That's before today, so today makes it 11. The duration on average is 23 or 24 days. We're at 22, so we're right there.
Mm-hmm.
And the average daily return, like this note said, down just under 0.5% per day. So does this mean clear selling in 2 more days?
Maybe.
Let's go to the next slide.
Whoever's listening, maybe.
Even though in 2020 we saw the quickest and largest move in a short window, 2008 and 2022 had more large downside moves because the duration of the market sell-offs lasted longer. All right, we're aware of that. Let's go next slide. But what about the implied volatility change in the VIX? Since the total magnitude and average daily move of the current pullback are close to historical average, do we expect to see the VIX the same? And this may be where things are not exactly the same. Let's go to the next slide. So the VIX only rose 10 points during the current market decline, compared to an historical median of 16 points. The VIX stayed below 28, the lowest peak ever during a 10% SPX drop. Did you know that?
No.
Either did I.
How would I know that?
I don't know, but I didn't know it either.
Right.
It sounds like a Vecchio quote.
It does, and I think we stole his thunder.
I think we might have stolen his thunder there. But this is very interesting because that is the kind of thing that Chris would come up with in a heartbeat. The VIX peak stayed below 28, which is the lowest peak ever during a 10% SPX drop. And I'll argue that 28 wasn't even a good 28. I would argue that too. Really, the VIX has stayed below 25.
Yep.
So this sell-off lacks the sharp volatility spike and capitulation seen in previous declines. Now, does that mean, is that a good sign or a bad sign in your opinion?
I mean, probably a good sign for everybody out there. I mean, a good outcome for everybody out there. I don't know if it's a good sign or not.
Yeah, I know. I'm torn on this one.
I am.
I don't know if it means the worst is yet to come. But
yeah, I know. I mean, when you least expected kind of thing.
Right.
You know what? You could have said that for the last 10.
I know. So I guess I have to agree with you that it's probably a good sign for the market, but it does make me think that the worst is yet to come. Yep. Let's go to the next slide. This is consistent with the option premium levels. Compared to the most recent large pullbacks, the premium for a 16 Delta Strangle on March 13th, 2025, is much lower than that of other occurrences as a percentage of underlying move. So when we look at 2018, 20, March of 20, April of 22, September of 22, and March of 25, based on where we're trading, the one standard deviation premium as a percentage of stock price is the lowest. So those who are short premium, it wasn't as bad. That's all it's saying.
Yeah.
Here's a better way to say it. This was the best down move ever if you're short premium because it did the least amount of damage. And I can attest to that because
even you are making money. That's right.
That's right. Even me.
That's right. If you can do it, we all can do it. Because we make money when it's hard. I mean, when it's easy.
Let's go to the next slide. So some of the takeaways. Train. It took SPX 22 calendar days to drop exactly 10% in the current sell-off, pushing the VIX to a max of 28 at its highest point. There have only been 16 occurrences that were greater than 10% pullbacks in any 30 calendar days in the past 2 decades. So the magnitude of this downside move is rare. The current correction has the same daily percentage move as the long-term average, close to about 0.5% a day. However, the peak VIX level as well as the VIX range during this sell-off are significantly lower than in other events.
Good job out of you, Sadna. Rump. Sadna, are you ready?
Rump.
Are you ready? Go ahead.
A rump.
Are you ready for my NCAA totals?
Yeah, I'm taking these with a grain of salt.
And you should, Sadnov. I'm down the VIG, basically, Sadnov. I was 47% on the halftime unders, 47% on the game unders, and the money line, I was about 40%, but money line pays more. So I basically scratched the whole thing and lost the VIG.
That's a big number.
It's a big number. Yeah, it's a big number. But Sadnov, you know what that means? We're due today, baby. Gambler's fallacy. That's right. We'll be back in 90 seconds. We got more Tasty Live after this with the opening bell.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live sound up. You know what comes up next?
Yeah,
the opening bell. That's right, my friend. That's right. And we're going to have a little bit of a lower opening here, Sadov. I can almost guarantee it here with about 3.5 minutes to go. Even the S&P's trading near their lows, down 59. NASDAQ down 240. They're all down around 1.25%. Russell down 26 with the Dow down 400. I did not have this on my bingo card, Sadov, with volatility up 65 cents back to 20. Volatility has kept its wings up. Let's see what volatility does to help this market or hinder it continuing going higher with volatility. Bonds are up 8 ticks, 117.31. Sadnov. Bitcoin only down 600. I say a 1% move, only down 600 after catching a little bit mid-range for the week or so. Oil down 17 cents. It too is at the higher end of its range, but maybe catching a little bit of a sell-off here. We'll see what continues for the rest of the day.
I'm going to tell you right now, nobody had this. This is the 5th year in a row where March triple witching got crushed. This is going to be the ugliest of all of them.
Yeah, I agree with you.
Okay, so here's the $1 million question. Lows on the opening?
I think so. And forget about SET. SET is going to be a ripoff.
Oh, you don't even want to know what that number is going to be. Yeah, if they open, where's the SPX? I'll make my call. Well, how much time do we have?
We got time. You got 3 minutes, 2.5 minutes. SPX closed at 56.62.
I'm going to say that the opening print, and I have no idea. I'm going to say the opening print is 55. I'm going to say 55.80.
55.80. I mean, you would think with even the S&P down around 55 to 60 that it would be 60 handles lower than that kind of thing, right? I'm just giving everybody the math.
Yeah.
You're saying it's going to be about $20 lower than that.
It could be, unless they goose them up like 10 handles here.
I don't think so. Even if they do, that it's just that SET is going to be.
I think it's going to be.
What we're talking about, the SPX opening price is the opening price of all of the S&P 500 stocks on these AM settled March 21 options here that you cannot trade on the opening or any time today.
So I think under 5,600 is a lock.
Yeah, I would agree with you. I don't think too many people would argue with you, especially the way it looks right now. Sadly.
Well, they just rallied them 10 handles, so maybe you got a chance.
What do you mean they just rallied them 10 handles?
Yes.
They're down 50. They're down 55. What are you talking about? The low is 51. They're trading 58, 59. Yeah, I mean, yeah, okay. 7, 8 handles.
It matters if you're short.
It matters if you're long too. Sure. If you got the 0 days, sure. Mm-hmm.
All right, let's get this party started.
Yep. Let's do it.
I'm ready. It's a beautiful sunny day here in Chicago. Did not expect this.
Sadnov, I can't believe I'm going to be catching fish in a couple of hours. You know what I mean? There's your opening bell.
Yeah, they rallied the S&Ps a little bit here, so it's not as bad as
they're
I
down
thought.
49. Mm-hmm.
All right, well, we've got some earnings plays to address here on the opening. I don't think anything's actually opened yet. Let's take a look at Nike.
NKE
66.5.
NKE down $5.34. Sadnov. Let's see what MU is doing. These are just all the earnings plays. MU down 6. Carnival Cruise Lines down about $1. And FedEx is your next one. It was down around 20. FDX pre-market down 25.
What was the expected move in FedEx?
You know, I didn't have a position in it, so I don't really. I thought it was around $20-ish, 22, 23. I don't remember it completely.
So I have
even the S&P down 43.
Yeah. So my biggest position would be MU. Stock's down about $5. We sold a lot of the
lows on the close, lows on the opening here. South, that's going to be a bad one for everybody.
Yeah, that's why I won't trade that. That's why I won't trade that. I just won't do it. I won't.
Mm-hmm. And you're talking about the SPX options, 0 days that have no trade today, just are subject to the print.
Yeah.
Totally agree, Sadnov. Totally agree.
Yes, sir, Senator. Looking at, for starters, we're looking at MU. Stock's down 6. Nothing done in there yet. Let's take a look at our April.
Sadnov, get yourself some ES right now, Sadnov. 56.60. Get yourself some.
I'm not a.
You're not feeling it? Oh, that only makes us so much happier.
I'm not feeling it. I am going to roll calls down in MU rather than.
Oh, I don't mind you doing that for sure.
What?
I think you should do that for sure. You got to stay mechanical on those earnings plays.
Yeah, I'm going to do that right now. Roll down my short calls. Stock does not look good. Sam, I am. I did roll down calls, and then I'm going to cover my other ones.
This is just for the earnings trade, right? You haven't done anything really for your overall positions.
I got a little greedy on the earnings trade. I could have covered them at about, I would say around 11 cents. And I decided, no bueno.
Apple down 2 and change. Tesla catching a bid. They're coming for the pigs. Sound up 3. Google down $1.
Yeah, well, Tesla could save. Meta is up and Tesla's up. They could save the NASDAQ.
Go to the whip, coming around the turn, Sadnov. Tesla up 4, Meta up 2 and change. Even the S&P, Sadnov, 56.70. Fortune favors the brave. SMCI only up 75 cents. Netflix just quote a bid up 60 cents. Let's see what the laggards are, Sadnov. I missed my E-mini S&P, Sadnov. I blame you because I was quoting the market. You owe me 10 handles. Lulu down 10. MU down 8. Goldman Sachs down 7. RCL down 7. You owe me a fill, Sadnov.
Sure. Take a fill, Phil.
Okay, I canceled it. Now I'm going to go more. Now they can't have my money.
Yeah, I don't know. I didn't cover anything yet on the earnings trades. I've decided I've not done anything. I think I'm going to cover my MU. I covered my naked puts at 19 cents. We sold them at like, I think
64 or something like that, maybe.
Something like that. So even with the stock down $8, that trade's a winner. So let's see. MU is a nice earnings trade, and we still have a lot on in there. And then
MU and back in the middle of the range. A lot of bulls at MU. I got a lot of bullish emails from MU.
Yeah, well, they were all wrong like usual.
Yeah, it was up $8 or $9 immediately after it came out.
No, it was up 5. It traded 1
5. Certainly didn't hold it.
Yeah. Now we have to do something in Nike to save our Nike position. So we're going to do this. So what I do is when I like to keep something on, I just roll. So I'm going to quick roll Nike from March. Let's see. Hold on. March. I'm going to roll March to Nike. I'm going to roll my March 66 puts to April 65 puts, and then I'm going to sell the April 70 calls. See if we get Nike. At least should be liquid today.
You would think Nike was the last of our earnings trades when we used to do the earnings at the end of the quarter. Sadnoff, it was always a tough one. Nike markets are not the best. Nike down 6.5.
They're as good as they're ever going to be today.
Yes.
So yeah, Nike is a small loser, and so far MU is a nice winner. And what was the other one?
Carnival Cruise Line and FedEx.
We do not have a Carnival Cruise Line position on, and FedEx, we have a small position on there. Let me see real quickly. FDX. FDX is I guess it's a scratch. FDX is a scratch. Scratch-a-rooney. Scratch-a-rooney-tooney. Let's take it off.
Beautiful job out of you, Sosnoff.
Okay. All right, what else do we got now?
That's it. We have time now to take a quick 90-second break, and then we can come back. We got fast market. Does that sound good to you?
Are you looking through your positions? Do you see anything that's troubling?
I am, Sosnoff. I don't see anything troubling, but a 50 handle move in ES is troubling enough on expiration. Definitely more downside players than upside players, Sadnoff. But it's not your usual suspects. I mean, like PDD is down almost $6. That's a big move in PDD if you have any of those. Adobe down $5, kind of par for the course. How are your beloved Chinese stocks? Yeah, Baidu down 75 cents.
There's not much, honestly.
Yeah. Only PDD, Baba down $1 and change. I mean, this top group here, FedEx, Crowd, Costco down $10. Not the usual suspects is all I'm trying to say.
Okay, got it.
Let's take a quick 90-second break and come back. We got more Tasty Live after this with the fast market. Sadnoff, we'll be back in 90 seconds. We've got 10 trades for you to look at.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you?
I didn't.
Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
God, I'm serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody
you.
ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Tomas, we're back, my friend. You know what that means? Time for Fast Market.
Sure.
All right, now we're ready.
Doonute. Let's see. Anything that jumps off the screen?
No. No, usual suspects. Apple sold off a little bit, down 50 cents. Tesla's still up. It's up 5. Catch a little bit of vid. Fortune favors the Braves. Side off, even the S&P's 56.73. Thank you very much. You got to play to win, Sosnoff. That's all I got.
Yeah, it's pretty much a nothing. I'm looking at the earnings plays. FedEx, we took off for a scratch. It was nothing. Just outside the expected move. And MU, let's see, still it's getting to be a bigger winner, which is a good thing. Stock came back a little bit. And what was the other one? Nike.
Nike, FedEx, MU, Carnival Cruise Line.
Nike's coming back a little bit. We got a chance. It's an outside chance. We got an outside chance for a scratch later today, hopefully.
Oh, okay. Hopefully
we'll
we
see.
can.
Might take till Monday in there. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. Always fun to have a little triple witching action. And, you know, Tony and I are going to be going on the road this year. And
we are, Sosnoff, back together again, side by side, except when we're flying, when you'll be in the front and I'll be in the back.
Yeah, but I've already agreed to share my cashews with you.
No, you will never share your cashews. You love them too much. You're just not that type of guy. But you will give the worthless almonds. The worthless almonds will get.
You can have the worthless almonds.
Mm-hmm.
Yes,
I know. I know. I set reasonable expectations with you.
Here's what I was going to say. 2 of the shows that we're doing this year are purposely planned on triple witching. Dun, 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 dun. Dun, 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 dun. But we don't have this. I can't present the schedule yet, but the show we're doing in London will be on triple witching for sure. And I believe the show we're doing in Chicago is on triple witching, but I have to check that. Mm-hmm. But there is going to be a lot of really cool stuff coming up, and expect the announcements. Looks like next week.
You get the whole schedule?
No. We are only publishing the different cities we're going to be in. You can only, this year, because of demand, you can only sign up 60 days in advance.
Got it.
So we'll be close.
Okey-dokey.
All right, let's do it. Let's go, John. Trades.
That music gets me pumped, Sosnoff. AMD!
Abhishek from San Mateo, California. Low implied volatility now, so I'm long AMD by buying a poor man's covered call. Buy the June 105 call, sell the May 120 call for a 775 debit. Let me check my Abhishek. Let me see AMD. Stock's down $2 today. We are currently, well, we're pretty flattish in there. Let me just see AMD. What's our delta in there? Yeah, we're pretty damn flat today. All right, what do you want to do here? You want to buy, he wants to buy the June 105 call.
Yeah, they're a little bit bullish in here, so I don't know if it looks like.
It's okay. Buy the June. I mean, I'd rather buy it on a day it's down $2. Buy the June 105 call and sell the May 120. I want to sell the 115.
Mm-hmm.
Sell the May 120. It's trading for 717. What did he say? Yeah, he said 775.
775. Yep.
I'm probably going to do the May 115, and that one's trading for about 586, 588. I'm doing the same trade. I'm just making a little bit. It's about 60 cents better, Abhishek, than where you originally wanted to do it. So
that's because AMD is lower.
That's because AMD is down.
$2.
Right.
Yeah.
I did it for 587. It's about mid price.
You did 587 debit, right? Because you're buying the back month, selling the front month. It's a debit, but it's still a positive theta decay trade.
Yep. All right. I like it. Stock's down on its butt, right? This stock's really been hit hard.
Yep.
Yeah. All right. Let's go next slide.
Yeah. AMD, I mean, it's really only about $7,000-8,000 off its lows.
Madison from San Francisco, California. Laddered.
Hey, Madison.
Laddered calls in the SPY. Short the April monthly, 580. The May monthly, 590. The June monthly, 600. Playing for the market trade in a range or lower, but not significantly higher. Well, I'd say if you're laddering out calls, Madison.
Well, they're bearish. I mean.
Yeah, but it doesn't really fit me. I mean, with SPOOs down 40 or 50 on the opening today, I'm not going to sell calls.
I wish you did it. I hope you did it yesterday. Yeah, sure.
Yeah, we should have done it yesterday. I mean, I'm sure I'm already short I'm short a bunch of strangles in the spiders. So I'm going to just leave that position. I don't hate this trade, but I wouldn't do it on a day when the S&Ps are down 40 to start with.
Yeah.
If they were up 40, I'd do it in a heartbeat. Let's go next slide. It's just the way I trade. Josh from Edwardsville, Illinois. TGT on its lows. Sell the 105 puts. Go Suey. Is that, let's see. Edwardsville, Southern Illinois. Is that, that's where Doug Collins went to school, right?
That was, I don't know. That was with Burt
No.
Reynolds.
It's not that. It's the Salukis, isn't it?
Correct.
Yeah,
yes. There you go, John.
Yeah.
The Salukis. Isn't that where Doug Collins went to school?
No, he went to Illinois State, the Redbirds.
Oh, he did. Where did Tony Romo go? Eastern Illinois, right?
Correct.
All right. Well, now we got the Salukis on here. All right, Josh, let's see what we got here. The 105 puts in target. TGT. Stock's down it is oh man, this stock. What happened?
What happened?
What happened was
you see what happened was Target has taken it on the chin. Ivy rank at 37, but it had not had an uptick since its highs of 142 in January, which were surpassed by its highs of 160 in October. This stock has not had an uptick since October of last year.
Love it. Love this trade. Filled. But I didn't do the Josh. I did the
Josh, Jeremiah, what's up?
Anything that begins with a J. I did the 100 puts because I like to sell the nearest out of the money.
Choo, Saznoff.
Yes. Ducks on a pond. 222.
Yep.
So, okay, Josh, we sold the puts for 222, the 100 puts in April. Let's go next slide.
Got it.
Fred from Naples, Florida. Selling a bullish ratio in May. Let's do this. Walmart. We do not have a Walmart position on. Yes, we do have a Walmart position on. I take it back. We are short the 85.90 strangle. It's pretty much a nothing trade. All right, Fred, let's see what you got here. Selling a bullish ratio in May. Sell two of the in May. All right. Tony, what does he want to do? And sell 277.5 puts. And he wants to sell
one of the 95 calls for about 275.
Oh,
and it is my first vacation without the RV. Sold the RV about a year ago, so I don't know if that's how it keep me working here.
This is the first of this is an interesting trade because Walmart is also on its butt, isn't it?
Yes. I mean, that's the retail stocks that have gotten hit here, Sadnoff, a little bit. Walmart Ivy rank of 62. It has earnings May 15th. And it, too, hasn't had an uptick, Sadnoff, since it got an uptick right around this level back in November.
So, Fred, you said 275. I did it at 294 because the stock's down a little bit today.
Yeah, and it was probably down a little bit on the close, too.
Yeah, so we'll take it. 294, 1 by 2. We sold one call, 2 puts.
Beautiful.
Let's go to the next slide.
1 call, 2 puts, no cup.
Aaron, selling a call ratio spread in the British pound. Let me tell you something, Aaron. This is, if you could get filled on this, I'd be shocked. I have a bunch of positions on in the British pound, and God help you, it's hard to get filled in there. What does he want to do? Call ratio. He wants to buy. What month is this? April.
That's correct.
No, there's only 14 days. You got to do May, right? Yeah, we're already in May. So buy one of the 305 calls, 30-50 calls. Buy one of the 30-50s. Oh, hold on. Buy one of the 30-50s and sell 2 of the 31s. Let's see something. I think you do the 31 and a halves. I think you buy the 30, 50, and sell the 31 and a halves?
I think I can.
Because I like to get as wide as I can.
You have a wide stance. I've been next to you in the bathroom stalls. Yes, you have a very wide stance.
Not the easiest trade to get filled on, unfortunately.
So I don't know if you might have a chance here to get him back at 60 if you're with the bat here.
And what are you talking about?
Even the S&P is that? You missed it. Never mind.
I'm working it, Aaron. I'm working it at 22 ticks credit. Let's see. I have a hard time getting filled in British pound. I have to leave the order in for a little bit.
Yeah.
Let's go to the next slide. Jake from Grand Junction, Colorado. I've actually been to Grand Junction, Colorado. Shockingly.
I could say no. Were you with the elusive Jules? The elusive Jules and our friend who's coming back today. That's right, Mr. Scott Sheridan, Tasty Trade World Headquarters, back from his whirlwind tour.
No.
He's like Kiss, by the way. Like he played Japan. He plays Phoenix.
How about an unbalanced iron condor? I like these trades today. Costco. These are hard fills, but let's try this.
Costco is a hard fill, but Costco's had some back and forth action. I've had a Costco position here. I've been so close to closing for a nice profit, and then the stock will sell off by $10. It's only down to 80 cents right now.
850, 800? What is he, crazy? 850, 800, Jake. Okay, what's the call side? 970, 990. That's pretty unbalanced. $20 wide and $50 wide. Let's do 20. Let's do 2030. Let's do 850, 820, $30 wide, and $20 wide and on the call side for $8 credit. There's not a lot, not a lot of trades in Costco.
Beautiful. No, Costco's not.
You got to do some price discovery in here, man, because I don't know where this thing is going to fill. Yeah, Costco's not my favorite. I'm going to give up a lot of money here trying to get a fill. Yeah, Jake, I need help with the prices. I thought it was going to trade around 8.10. Now I think it's going to trade around $8. All right, what's next? I'm working it, John. Costco's a tough one. I'm working at $8. Oh, filled at $8. All right. Costco filled. Nothing done yet in the British pound. That's a tough one, Aaron. Go next one. DCJ, RCL. After saying RCL is going bankrupt, word is out that Tom's moonlighting. I am, as a social media star, you caught me. Expecting the stock to rip to the upside? Are you out of your mind? RCL. Well, stock's basically out of business today. Let's see. Where is he going here? Oh, filled in the British pound.
Wow.
You wait long enough, Ron, you get filled.
Yes, you do. Yes, you do.
42 day to what do you mean 42 days? You got to have your choice. Oh, I'm only going to do May. 56 days, dude. Let's see. He wants to sell the 200. No, I'm going to go to the expected move. I don't like this trade. I'll sell a put spread in there reluctantly because this is a crappy ass stock to trade. 180. God, I hate this stock. 180. I don't know. 180, 175. I try to go outside the expected move. I have no idea where these things trade in here. I gave it away at 87 cents. Let's see what happens in here. Just because I'm watching. Oh, I'm sorry. 84 cents. I stink. DCJ, I'm just gonna see what happens. I don't really like trading the stock, so I'm gonna see what happens. Let's go to the next slide. Miami and Vermont Steve. Miami and Vermont Steve from Tel Aviv. Steve is all over the place, man. Steve is like poop. He's in Miami once, then he's in Vermont, and now Steve's in Tel Aviv.
Damn, right. I'm going to come back as Steve someday.
All right, Steve, what do you want to do here? You want to trade soybeans. High IVR, fair. High pop, okay. Near its lows. Let's take a look. Are soybeans near their lows? Yeah, they're close enough. Okay, 35 days to go in April. What does he want to do? Just beyond expected move. Oh, he just wants to sell naked put, right?
Looks like it.
35 days is April. We have a bunch of positions on there. The expected move in soybeans in April is 35 cents. So we're currently trading at 10.10. Minus 35 will be 9.75. Right?
Yes,
Not doing
sir.
anything wrong here.
Nope.
Let's go 9.70 and we'll go right at mid price. Let's see if we get filled. All right, we're working it. Miami and Vermont Steve from Tel Aviv. Let's go next slide. And soybeans are down a penny today. Here. Oh, I tried to hit the bid. I missed. Oh, there it is. Okay, we're filled, Steve. Sold the 970 puts for 5 5/8. That's 5.625. Let's go next slide. Mary from Moscow, Idaho. I've actually been there. That's the University of Idaho. 0 DT expected move, Iron Condor, one strike past the expected move, $5 wide, always get filled in between. I use the Android apps, Cooper Stripe. The Copper Stripe for expected move. Okay. Tony, expected move today?
Ooh, expected move today in SPX right now is going to be
$35. No, end of the day.
No,
sorry.
$68 over 3 days, Sadnoff.
No, 0 day. 43.
Well, 0. Oh yeah, you can do the zero. $42, $43. Sorry, I forgot about I thought it was AM settle. I forgot that there was also the PM settle.
Yeah,
$43 or so, Sadnoff.
Let's just go. Where are we right now? We're 56.14. So we're going to go 65. We'll go 50. 65.
Go 60 to the upside, 40 to the downside, Sadnoff. Give yourself a little long delta here. Come on, man. You can do it.
We'll go 50 above 65. We'll go 65. I will go in between the markets. Nothing done yet. Mary from Moscow, Idaho. We're right at mid-price. What's the next one, John? Eric from Bloomington, Indiana. Nothing done yet on those. We'll try give it up. Filled 170, Mary from Moscow, Idaho. And now we're going.
Actually, I think my mother-in-law was born there.
In Moscow, Idaho?
I believe so.
That's University of Idaho and also Washington State University. They're both in the same town.
Yeah.
Hood. Good IVR. Sell the 35.60 strangle. Eric from Bloomington, Indiana.
Yeah, Hood Bloom is off the rose here. When Bitcoin was doing a lot better, it was around $64. It's down around $43 and change after making a low around 36. I looked at Hood for my Option Trades Today podcast, Sadnoff. I'd be curious to see what you find here.
Markets are kind of wide.
Markets are a little wide. I think you got to go into May. Earnings are May 14th. May 16th is expiration.
I'm going to go to the expected move, which is $9. Where are we currently trading? 43. 43 minus 9 is 34. 43 plus 9 is 52. They have single point strikes, but I'll go to 55 just for the hell of it. It's pretty close. 26 delta, 16 delta. No, it's going to be a little bit more. You're going to go 60. I'll go 30. I'll go 33.60. It's kind of close. Nah, it's not really delta. You got to go one more. 32.60 for 225. It's not a filled 225.
225 it is.
Yeah, we'll see. All right, take a shot.
Why not? Got a hunch, bet a bunch.
We did everything but the SPY short laddered calls, which I didn't hate. We're just down. We're just down too much. So in AMD,
right? Because the market was down so much. Yep.
In AMD, we did a poor man's covered call, which is cool. Ladder calls we didn't do. In Target, we sold a naked put, the 100 strike. In Walmart, we sold 2 puts and 1 call, ratio strangle. These are good trades today. Really interesting from the audience. We did a call ratio spread in 6B. We've never done that before. In Costco, we did a skewed iron condor, twice as wide on the put spread. People are getting long today. RCL, we sold a put vertical. These are definitely all long delta trades. In ZS, we sold a naked put, that's soybeans. In SPX, we did a 0-day iron condor, delta neutral. We'll see what happens. And in Hood, we sold a wide May strangle. We were all over the place today. Really interesting trades. Good job by Tasty Nation.
Great job by Tasty Nation, Sadnov. Say it the way it's supposed to be said. Sadnov, where were you 10 years ago today, Sadnov? Do you have any idea?
10 years ago today? No.
10 years ago today, Sadnov. That's right.
No clue. Where?
You were at the lovely Beth, our producer to the stars wedding, Sadnov. That's right. 10 years ago today. It's her anniversary. She's still waiting for her wedding gift. Please wish her a happy anniversary, Sadnov.
She has not cashed the check yet, so I'm going to avoid it.
As a good picture of you, me, JJ, the lovely Christy Ross, Frankie with a photo bomb. I tweeted it out, Sadnov. If you go to my Twitter or X or whatever it's called these days, you can see it. But we're going to take a quick 90-second break. We're going to come back with equally as lovely Julia. Sadnov, we got a surprise for you today. You're going to be annoyed. We'll be back in 90 seconds. This is Tasty Live.
Annoyed?
Stay tuned. Oh, you're going to be, jealous. Oof.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. When Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Jesus Christ, it was 10 fucking years ago that everybody looks better except you. You look worse, you fuck. Are we live?
You're live.
Stop! We're back, my friend. You know what that means? Time to live more Tasty Live. Before I introduce Julia on the show, let me show you this picture, Sosno. Happy anniversary, Beth. Can you put it up there, my friend John, please? John, please save me. There we go. That's right, Sosno. 6'1", my ass, Sosno. You're not even as tall as your wife or Christy in this picture. For God's sake, Frankie Walsh is 5'4", and he almost towers over you. Happy anniversary, Beth. 10 years.
Oh.
Hey, Sosno. Do you know why JJ's smiling?
Why?
Can you see his hands?
Yeah, it looks like he's...
You can't see his hands, can you?
No.
That's why I'm smiling.
Yeah, well, you guys were made for each other.
Man, y'all are unhinged on this Friday. On this blessed day.
Welcome to the show.
Oh, thank you so much for having me. I don't know what I walked into, but I've been laughing, so that's good.
Sosno, 6'1".
6'1 and a half. It says on my license.
Yeah, he's 6'1". Oh.
I don't know if everyone always puts accurate information on their licenses.
It is. I mean, those girls are in heels. I mean, they're like, they're both giant.
Sure. And you without your lifters.
The lifters. I can't wear heels. I'm just like comically tall. I'm like 6'4" when I wear heels.
It's a good thing.
I think that's funny. I was going to do it on stage once, but I didn't want to, emasculate anybody.
I wouldn't have been hurt.
Okay, that's good. That's good to know for next time.
All right, what do you got for us?
All right, y'all.
Sadov's gonna be so jealous about this. Go ahead, go.
Let's do it. I went down a bit of a rabbit hole yesterday, and I found some cool results. So I wanted to talk about them. This may be surprising or unsurprising, but today we're talking about leverage.
I thought you were gonna do something about me.
I should have put more pictures in here of you. I don't know what I was thinking.
Go ahead.
And there's such a trove on Twitter. I'm really sleeping on that. Oh, y'all.
Hey, Sadov, the chat room's blowing up for some reason. I have no idea why. Maybe had a hot mic, and I was talking to the way I normally talk to you. Somebody just signed out. The whole team quit, Sadov. The whole team quit.
And just phone it in today. I don't know. Today's the kind of day when you just phone it in.
Yep.
Yeah, what are you going to do? But you know what we're talking about today? We're talking about option leverage. Tony, I'm so sorry. I didn't put any pictures of you in it, and I'm going to really make it.
Oh, my God. What's wrong with you?
I don't know. I'm losing track of everything these days. I don't know what day it is. I don't know what time it is. I don't know how to make slide decks anymore. I keep getting signed out of Google. It's over. But next week I'll remember. I guess in 2 weeks.
All right, let's go.
Let's do it. Okay, let's talk about option leverage. So options, surprise, surprise, are leveraged instruments. It allows investors to amplify exposure to price movements with a relatively small amount of capital, which is why we tend to call it capital efficiency. When you pair it with very important risk management techniques like controlling capital allocation and position size, it enables traders to achieve a desired risk return profile with significantly less capital than just going long or short stock. And today I wanted to talk a bit about measuring option leverage with a pretty unknown Greek from what I could tell, and look at some examples of how that's used. Does that make sense?
Makes sense to me.
Easy
peasy. Let's do it. Okay, next slide. So omega, also called lambda, also called option elasticity. Do not ask me why they use two totally different Greeks to measure elasticity, but they do. I'm going to be calling it omega. Found some references on the Tasty site as well. They call it lambda. I'm going to be calling it omega, but it's a Greek. It's a measure of option leverage. It basically measures the expected change in an option's value given a 1% change in the underlying. It's very similar to delta, but we're measuring sensitivity in percentage terms rather than dollar amounts. And the calculation is actually pretty simple. It's just the delta of the option multiplied by the stock price divided by the option premium. Yeah?
Sure.
Makes sense. Yeah.
I think it's pretty easy. It is actually very easy to calculate, and this kind of gives you a sense of leverage. So let's look at a numerical example. Let's go to the next slide. So, for example, a short 28 DTE 30 delta SPY put would have an omega of 0.3 times the price of the stock divided by the premium for that option. I took this quote from yesterday, which gives it an omega of 28.67, which means that all else equal, a 1% change in SPY in the price of the underlying, right, would yield a 28% change in the option's price, or about 29x leverage, right? So we're basically normalizing delta.
Oh, that's what you're trying to do, is normalize delta.
Yeah, really relative to the premium is what we're kind of trying to look at. So it's very similar to delta, but delta kind of gives you just absolute dollar amounts, right? That directional exposure. This, we're looking at it when we're adjusting for premium, and that kind of yields some pretty interesting results. Yeah.
I mean, we'll see. You're trying to complicate it.
Well,
you like to simplify it.
It is simple. It's back of the envelope, technically. And it yields some interesting results that delta, it tells you a story that delta doesn't necessarily just tell you on its own. So let's go to the next slide. So now, let's look at the same expiration, same underlying 16 delta. And that put has an omega of 28.67. Okay, not 28.67, 31.54. There we go. I was on the wrong slide, right? Which translates to roughly 32x leverage. Because remember, we're normalizing this relative to 1% price movements in the underlying, which is higher than the 29x leverage in the 30 delta case, right? So the further out of the money option actually has more leverage, right? More sensitivity to price movements in the underlying when you adjust for premium. Does that make sense?
Yeah, sure.
I think it kind of does. Let's go to the next slide. This result, kind of surprised me a little bit, but the more I thought about it, the more it kind of makes sense. So like as a percentage, right, when you look at contracts that are further out of the money, they actually have more leverage compared to contracts that are closer to at the money. And that actually does make sense because even though further out of the money contracts have higher pops, less absolute directional risk measured by delta, less delta sensitivity or gamma, and lower capital requirements, premiums decline pretty substantially when you move further from at the money. So when you normalize kind of like by premium, basically, you're actually getting more leverage as you move further away from at the money. And you can measure that with omega.
I think that goes, that's 100% correct.
Which totally makes sense to me now that I've thought about it a bit. And omega is a way that you can measure this. And you can apply this to spreads, multi-legged strategies, all that kind of stuff. And it paints kind of a cool story that delta doesn't tell you because it looks at delta in absolute terms, in dollars. But when you normalize it, you can kind of see a bit of a different picture. Yeah?
Yes.
Yeah, agreed.
Easy peasy. Let's go to the next slide. So as a result, further out of the money contract premiums tend to be more sensitive to changes in underlying price in terms of percentage. And in the case of far out of the money contracts, should be sized appropriately. Because remember, we're trying to control leverage with sizing and we're trying to use it, efficiently, capital efficiency. And so I think this becomes kind of more of a case around sizing when you get pretty far out of the money. And that kind of makes sense intuitively as traders, because at that point, the premiums drop off so much that even if you have like a pop of 99% or 90% or whatever, when you go really far out of the money, like you are still pretty highly sensitive to changes in price movements, and it might not be worth it to trade something like that if you're not collecting enough premium to kind of justify the risk, or to kind of, if that makes sense. Yeah?
Mm-hmm.
Cool. So I wanted to use Black-Scholes to simulate an example, which is kind of cool. Next slide. Okay, so let's suppose we have a 1% increase in SPY. And the Greeks just in general represent changes in risk based on a single variable changing and assume everything else stays constant. But just to make things a little bit more realistic, we're going to deviate from that a bit. So we're going to assume this is a little bit inaccurate in our simulation, but we're just going to assume vol is dynamic. So historically, on days when SPY increases by about 1%, the VIX decreases by a median of 5%. So these two changes are what we're going to put into the Black-Scholes model, and we're going to see how our premiums change. And we're going to see basically which one changes more, the 30 delta contract or the 16 delta contract. Yeah?
Okay.
Yes.
Okay, so let's go to the next slide. So when we use Black-Scholes to estimate these changes in premiums, if you look at this relative to the premium that the contract collects, and remember we're using quotes from SPY that was yesterday, just like regular old options quotes from the 38 delta contracts at the time, you actually see that the 30 delta put in response to this move declines by about 35.7%, and the 16 delta put declines by about 42%, right? So significantly more decline when you normalize as a percentage of premium, in response to this move. So more leverage, right?
Is more leverage a good thing?
It's not necessarily a good thing or a bad thing. And I think like what we talked about earlier, it's really a tool. And I think this becomes kind of more obvious or kind of more of a consideration when it comes to sizing when you get kind of far out of the money, if that makes sense. So, and the mechanics do actually account for that because we talk about the sort of sweet spot of delta kind of being between like 40 and 10. And once you go further out, that's when you kind of start to have like to, deviate from the mechanics a little bit. And that's really where our mechanics are concentrated. So in a way, it kind of does account for this, specifically when you go pretty far out of the money. But today I just wanted to kind of use a numerical example with two quotes that I just found yesterday, just to kind of demonstrate this. But I think when it comes to actual implementation and sizing, it kind of becomes more of a consideration when you move very far out of the money. Does that make sense?
I'm trying to make sense. I mean, I understand what you're saying. Mm-hmm. I'm still having a hard time where you're going with this.
Well, we're already there.
I know, but I'm like, what is this supposed to change the way I think? Just that when you're that I'm supposed to look at further out of the money contracts a little bit differently, because
I'd say differently,
thinking that right now that they're actually the safer play when you're actually saying they may even be more sensitive and actually effectively less safe, kind of? Is that what you're saying?
I would say like maybe that to an extent, but once you get, again, very far out of the money, I think that's like...
well, we understand like very far out of the money, we already know. That doesn't really work from a theoretical side because because nobody wants to sell those. They're not capital efficient. So that's why those things are different. But the other stuff, like 16 delta, 10 delta, is that what you mean by out of the money?
I would say further than that when it comes to like really serious considerations around sizing, which I think makes sense. I think that's like how a lot of like mechanical and digital vigilant traders sort of trade. But that being said, there is maybe a conclusion with like closer to at the money contracts that you can draw from this, which is that right when you talk about 16 delta contracts, for example, like higher pop, lower capital requirements. But when you normalize relative to the premium that you collect, they are a bit more sensitive to those moves. So that could make a justification, for example, like if you have the capital to move a bit closer to at the money and you're comfortable with taking that risk as a dollar amount, because it is more risk as a dollar amount, then that might be a case. And I think there's maybe a stronger case for that when implied volatility is high, for example. But it really depends on your preferences. It's really that trading is this kind of balancing act, and there's, you just have to balance all of those different variables. Does that make sense?
Sadov, I was a little bit worried with me taking off next week that, you wouldn't have somebody being able to explain things at a higher level to you all week long. And now that Julia is going to be on for some of the show, Sadov, I can see now that my audience is in good hands. Julia will be explaining things above your pay grade, Sadov, which is going to be awesome. Thank you, Julia, for reminding me that there are still those who know a lot about option trading that can explain it to Tom.
I'm hoping I can help her the way I've helped you over the years. And I'm hoping that I can.
He's too good. He's too freaking.
Really can't win with this guy.
He's got the condom salt for everything.
I'm just hoping that she can hang in there long enough so we can get her up to your level.
Thank you.
Julia, it's going to be a challenge. Get your helmet on.
We got to get a book. Frankie, I know you can hear me. Work on that book, for Saznoff and I. Will you please? It's going to be a bestseller. Sazma salts.
I'd read that book if it'll ever get out.
Your next book, Julia, you should have some Sazma salts on the back page or something like that, like a hidden bonus.
Bestseller. That would be amazing. We could have one of those discs insert as well, with some, video like ramblings. I think that would be great. Yep. I would watch that. I'd read that.
Who would?
Is it ever going to get written? No, but I can dream.
Dare to dream.
Dare to dream. Oh man. Okay, well, I've lost the attention spans in this room, so let's just jump to the conclusion. The other slide was looking like at a 1% decrease, but it kind of tells you the same story. So let's go to the last slide. There we go. So I just wanted to talk about next one, please, s'il vous plaît. There we go. I just wanted to talk about a kind of an unknown Greek. It does tell you some interesting information. Omega, or option elasticity, otherwise also called lambda sometimes, gives you the expected change in an options price given a 1% change in the underlying, very similar to delta, but normalized as a percentage, which I think can tell some useful information, but Tom does not believe so. It can be calculated very simply, which Tom doesn't also believe, by multiplying the delta of the option by the stock price and dividing by the option premium. And some example calculations suggest that further out of the money contracts are a bit more leveraged as a percentage, right? When you normalize relative to the premium that they collect compared to contracts that are closer to at the money, which makes sense with how premiums scale. But I think that this is really just makes the stronger case for far out of the money contracts and how you should size those sort of appropriately. And just to kind of reiterate, the mechanics really we mostly focus on like 40 delta to 10 delta, those out of the money. And then when you get further out, it gets a bit weird. And this kind of tells you a bit more of that story, I think.
Okay, give it to you.
Wow. 6'4" in heels, smart, and is going to fill in for me all week long next week. Man, I thought you had big shoes to fill. You're going to fill them just fine, Julia. Thank you so much for your time.
Thank you so much for having me on, guys. I'll catch you next week.
Yes, you will. We'll take a quick 90-second break and come back. That's right. We got the other fan favorite when Julia's not on, Mr. Scott Sheridan from Tasty Trade World Headquarters. He'll be up next. He's answering your questions, too. You guys did a great job all week long, I got to admit, with your phone calls. But now we got a true professional who can answer them, and Mr. Scott Sheridan. So I got 4 or 5 lines open. Phone lines are open, 855-238-2789 or 855-BIG-TASTY. The phone number will be below in just a moment. Give us a buzz. You'll just take you live. Thank you, Julia.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4 days.
8 hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
Like a
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. Let's say we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. I have to move back in order to see everything. And somehow when you're on air, you're looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Presto Mas, we are back, my friend. You know what that means. Enough out of you. That's right. Tasty Trade World Headquarters taking phone calls today. 855-238-2789 or 855-BEAT-TASTY. Give us a buzz. Phone lines open. I got 4 or 5 lines open. It's the ever-popular, back from his whirlwind tour, Mr. Scott Sheridan from the Scott Sheridan Studios.
Thank you. Good morning. How are you?
Good morning. Good morning. Welcome. Glad you're home. Glad you're safe. Everybody's good. You had a wonderful time. What'd you bring me back?
Yes, and no. So, yes, had a great time. Great to be back. My mom used to say, always great to go away, better to come home. Totally agree. Cubs cannot say enough about how gracious they are as hosts. Really,
I thought you were going to talk about their play on the field. You couldn't say enough about that either, but go ahead.
Well, I mean, I don't know that much about baseball. I don't watch baseball that often. I think the Dodgers are favored to win, and they're pretty good. They're pretty good.
Team ever assembled in Major League Sports. They're comparing the Dodgers in sports, in the history of Major League Sports. They're comparing the Dodgers of this year to the 85 Bears,
72-10 Bulls,
72-10 Bulls, 85 Bears. I've seen people come out.
No murderers row of the Yankees.
I've seen people come out and say they think the Dodgers. I don't know what the over/under of the Dodgers are, but these guys on sports radio,
120.
Oh, up by 120. They're thinking the Dodgers could the Dodgers win 140, 130.
Oh, come on.
Yeah, they said that their team is the deepest, best team. You got to remember against the Cubs.
Freeman didn't play, and somebody else didn't play.
Mookie Betts didn't play.
Oh, yeah. Mookie Betts didn't play. Oh, yeah.
Freeman and Mookie Betts didn't play.
Yeah.
Okay. Freeman and Mookie Betts are better than anybody on the Cubs, just so you know. And they didn't even play.
Well, I don't know what the over/under is on the Cubs, but I hope
85.5.
Is it?
Before the season started, it was 85.5.
Now it's down to 83.5.
I don't know. But if you want to buy something cheap, the White Sox are only 54.
That's all they are.
Yeah.
Yeah.
Oh, that hurts.
And they're
I mean, there should be something in sports where, like, you have to put more of an effort in. I mean, I'm sorry, you come into a Major League season.
They have that.
What is
in the Premier League?
What is it?
In the Premier League.
Could you drop out, right?
You drop out.
Yeah, they should do that. They should move the Cubs because they're probably a AAA team. Like the Dodgers AAA, if they're that good, they might be able to take the Sox.
Yeah. I mean, do you remember the 77 Canadians? They only lost like 8 games. I mean, you're talking baseball?
I mean, the most dominant team I've ever seen in my life is either the 85 Bears or the 72-10 Bulls.
Yeah. Well,
but the 85 Bears were dominated. They dominated.
Well, they scared people, and they did dominate. You're right.
Dominated. Yeah, that was fun. And the one game that they lost was on the tip ball, where they to Miami. I mean, they should have had that. That should have been an undefeated season. But yes. So are the 2025 Bears going to rival that? They're making some moves.
No, the 27 Bears. I saw AI has the 27 Bears going to the Super Bowl.
All right, not bad. More importantly, I didn't do a bracket, and we didn't do our annual pick a team to win. So did you guys at least do it in my absence?
Oh yeah. We're in a bunch of different things.
Yeah, and we hit 3 times this.
Tell you what, we won't tell you how much we've won or lost right now, but if you want to buy in for $1,000, you could be in.
Okay, so let me translate that for the viewers. You're getting killed. Okay, and 2, the whole bet was probably $1,000, of which you're just looking for me to cover the whole thing. So I really appreciate your generosity. I'm going to take a hard pass on this one, but I wish you well.
All right,
I do wish you well.
Right.
If Tom's offering, It's like what we say in Vegas. If they're offering it, you don't want it. Same thing with Tom. If he's offering a bet, you don't want it.
Yeah,
But good
All right, I can't help you any more than that. Tony bought in.
Okay, you already have 16 teams out. Who do you have winning?
Oh, who do I have? I have St. John's.
Oh, nice. Did I assume St. John's won yesterday? So that's going to be right. Did. Okay, so now they play Arkansas, which is going to be great. Calipari versus Patino.
Yeah, and they don't like each other.
Well, I'm sure they don't. And didn't Calipari take over for Patino at Kentucky? I don't think there was anybody in between.
I don't know, but I don't think Bill Self and Calipari like each other either. But anyway, that was last night.
Yeah, I don't know what happened to Kansas this year, but they no more.
Who did they look bad?
I didn't watch the game, but they didn't have. I mean, that was not a Kansas performance, and I mean, I guess with the portal, they lost. Who'd they lose to? 7 or 10, wasn't it?
Arkansas?
Was it Arkansas?
I think so.
Okay, whatever. There was some team that I heard had like 5 D2 transfers. And so this whole transfer portal thing, it's just totally changed the way sports. I actually like it. You know, so they're not forcing these kids to sit out. I mean, look at Indiana, the football team. Didn't they have like 11 starters or something that came from other schools?
Yeah, I like it too. We all like it.
Yeah. So I'm glad you like it. Glad you like it. All right. So why don't we do you want to do phone calls? Let's get to the list.
Sure. 855-238-2789 or 855-BE-TASTY. That's the phone number. Call. Give us a buzz. I still have 3-4 lines open, so please give us a buzz. Talk to Mr. Scott Sheridan. Listen, if you don't call us in today, and we had such great calls all week long, Mr. Sheridan will cry.
All the great calls all week. You had to say it's me. Now when nobody calls in, you go, it must be you. I know how this works. You know what?
Sound up in my line. We had great calls. We couldn't get to all of them.
And honestly, Scott, we spoke so highly of you when you weren't here. I mean,
I'm sure you did.
He's the best. He is the best. He is the freaking best. He's the best.
Accolades were just flowing.
Yeah.
I mean,
Yep. I'm sure. You know what? I didn't watch any of it, and I didn't have any Taiwanese sources filling me in details, but I'm going to sell that with both hands. All right. Top 15 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Tom, view number 15. Hood at a 63. For everybody else, Tesla at a 64. NVIDIA at a 25. MU at a 29. Nike at a 38. Apple at a 54. Meta at a 40. SDX at a 22. PLTR at a 65. GLD at a 42. Amazon at a 45, AMD at a 16, TQQQ at a 58, MSTR at a 29, Microsoft at a 36, and number 15 for Tom. Hood at a 63. Rounding out the next 10, iBit at a 33, Google with an L at a 42, Netflix at a 78, Baba at a 49, Costco at a 50, AVGO at a 43, TGT at a 38, Boeing at a 42, and XLE at a 57.
Sadnov say something nice about his list or he'll cry.
I mean, you know what? We didn't even do the list when he wasn't here because nobody could live up to those. You know, nobody could live up to the.
Appreciate that.
He's the best, Scott.
I mean, Tony and I were like.
He is the best. He is the best.
Tony
that's
said
a love
to me,
letter.
Will you do this list? And I go, I can't. And
did you miss him, Scott? I have one question to ask before. I have one question to ask before we get to the one phone call. Did you miss Scott, Tom?
Nope, not at all. I did think at one point, not that I missed him, but that he made a big mistake not coming on the trip. But then that left my mind.
Where will you wear that shirt with your name on it, Sadnov? That was the trip to wear it.
Wait, honestly,
I mean, you're not going to wear it when we go to London, are you? That would be
good. Honestly, what?
All I want to say is, I don't know, did you see Ricketts after we talked to him?
Yeah.
Because we asked him.
Was he as fond as us? Did he miss us? Did he say he missed us?
He's a really nice guy, and you can tell how good of an owner / leader he is by the way the rest of the staff responds. Really, again, just A+.
We asked him if he thought it was okay if you wore a jersey with your name on.
I did see that. He said
he said he would never do it, but you know.
No, he did not. He said yes. Okay, revisionist history. It's recorded. I saw it. Actually, the 6 played it. It was on, I don't know where she saw it, I think on.
He said he would never do it. And especially if you're a guy. That's all he said. That's what we heard.
Well, okay, well, here's the story. Is JJ listening?
No.
Okay. He wore his one night, the first night, but I gave the 6 mine. She wore it. You guys said that was acceptable for the 6 to wear it.
I mean, for women, I'll give it to her, but for guys, it's absolutely not. 100%.
I didn't wear it. So I didn't wear it, but 6 did. Now, here's the crazy thing. Have you ever been, true question, I'm not trying to be funny here. Actual question, have you ever been to an opening day?
I've never been to.
I've never been to an opening day game, and I'm going to 2. So I went, obviously, to this. I went to opening day. And then the Cubs reached out and asked, the Cubs are opening against the Diamondbacks here.
Yeah.
They said, do you want to go to the game?
They play an exhibition game or something, I think.
Today, I just took the Diamondbacks. I've never been a preseason. I said, "There's no way the Cubs are gonna be ready to play this game. There's no way any of the starters are playing." But anyway, so I'm going. What day is today? Friday. This Thursday, I'm going to opening day for the Cubs Diamondbacks, and I said, "Listen, I don't want to overstay my welcome because I'm going to Tokyo, so I'm going to hit 2 opening days. Never been to one. I'm going to hit 2."
Beautiful. Good job out of you. Yeah. Can I hit these 2 phone calls we got?
Hit them.
855-238-2789 or 855 BTH. Every time that hangs up and online opens up, we're going to go to Chicago. I got Hayden. Hayden in Chicago. Thank you so much for calling in.
How's it going, guys?
Good morning.
Good morning.
Hayden.
Hey, I was just calling in because the CME added Solana futures this week, and it doesn't look like there's a lot of places you can trade it, so the volume's pretty low. And I didn't know what it takes volume-wise for Tasty to add new futures to the platform.
There's no hard set number. It's just we really like to see how the markets are. It's more how tight the markets are, and obviously more liquidity, more volume is typically tighter markets. I'll have our team look into it. I didn't know that they were at it. I'll have them look into it.
Hey, Scott, I met with the CME this week when you were lollygagging around in Japan. And so, Hayden, I met with the CME this week to talk about those Solana futures. And they haven't been able to get enough market-making firms yet. That's why most of the retail platforms haven't put them out, simply just because there's not enough volume yet. I believe the micro is 25 coins, and the mini is it 500? I think so.
No.
I'll have to check for you, but I think it's 25 and 500 the size of the coin, and I think it's like
that's a 500 would be $1 million. Oh no! Well, I'm sorry. I'm thinking of ETH. Where's
no? It's like a 30.
Sorry,
it's like a 30,000 or something dollar contract. The other one's really small, but according to the CME, we met with them. They said so far they haven't been able to get any of the market making firms to create any liquidity yet. So they're still working on it.
Okay, awesome. Well, I'll sit back for that. Thank you, guys.
Okay, sure.
Tom, did they talk about options with that? Just out of curiosity.
No, they're not even close. They haven't been able to get. They're trying to get some futures volume going. I met with Craig earlier this week. He came over and we talked about it. And he's like, they're just not there yet. But he said as soon as he thinks the volume's up to good retail level, they'll give us a call and tell us to connect.
Right.
There you go, sir. Appreciate the call. We're gonna go to Ontario. We got Rob. Rob in Ontario.
Hey, Tony, how are you?
Good, man. How are you?
Not bad. It's Brad, B-R-A-D.
Sorry,
first
sir.
of all, I want to give... Yeah, it's okay. First of all, I want to give you an award for 50 F's a minute. I've never seen that on YouTube before. I was really impressed with you a little while ago. And the second thing is...
that was some of my best work. That was some of my best work there. Actually, it wasn't even some of my best work. There are many times behind the scenes when I have to put Tom in his place, and you just got a small glimpse of that today.
Yeah, I was watching Julia cringe there, and I was just going like, I was waiting for Beth to yell Omaha from left field someplace, right? For sure. But anyway,
thank you for your support, sir.
Yeah, speaking of 50 F's a minute here, Scott, like we got to do something with Canada here, man, because they're killing us up here. I guess we can't get this thing through. Could we at least have some kind of test account or something with you guys? And I know I asked about this about a year, 2 years ago, but we need some help here, man.
You couldn't let us win. You couldn't let us win, right? You had to score that last goal, right? McDavid had to put it in the net. You see what you did?
Yeah.
Go ahead, Scott. Sorry.
Yeah, no, I wish we could. Unfortunately, from a regulatory standpoint, we can't even take test accounts. So I wish there was something we could do there, but we can't.
Yeah, I mean, it sucks. I think you're going to have to become the 51st.
We dropped the ball on this horribly.
Right. If it's the 51st state, no problem. So,
yeah. We dropped the ball on this.
Okay, so is this thing dead, Ben, or where are we? Because I have to
not dead.
We got to do something else. I've been kind of waiting around here for a while, to say the least, and I got to move to something else here because my current charges are kind of killing me, and I've been waiting on you guys. So,
can you move over the border?
I'm close enough. I'm about a stone's throw from Detroit. So, and based on the way the tariff stuff and all that, yeah, based on all this tariff stuff and that, the way that it's going, I would say shortly we're going to be part of you anyway.
Yeah.
We're working on it.
More people moving up north.
We're running out of options on the Canada side.
But we're still working on it. We'll see what we can do.
Yeah.
Okay. Yeah. All right. Thanks, guys. Have a wonderful day.
You got it.
Thanks. You too.
Wish we had better news on that front for sure.
Can I ask one crazy thing? Do we have any
up here the same?
Yep. Go ahead.
I can't wait to hear if you're going to ask one crazy thing because you don't normally hold back. So this must be a good one. What do we got?
Okay. There's something I didn't understand. Do we have any other calls, Tony?
We have one more call. Yep.
I take the call first.
Awesome. Let's go.
Don't forget this.
Oh, don't worry. I won't.
Okay.
California, Garrison in California.
Hey, man, Bat, you made my morning a few minutes ago with that slip up.
Thank you, sir. It was not a slip up. It's how I speak to him on every break. You just heard it.
Good to know. Hey, got a question for you, maybe more for Scott. Is there a way on the platform to do first triggers and OCO triggers? I mostly sell straddles overnight, and
all coming.
I usually try and adjust them. And is there any future plans for that, or am I missing something on how I can already do it?
No, 100% coming. You're not missing anything. The additional order types are all in the works, and I think coming in the next month or two.
Okay, cool.
Wow.
Good to know.
Wow. You went away. You came back as the same Scott Sheridan. Got it.
Wait a minute. Unless Tom can spend the weekend. If Tom can spend his weekend coding this stuff for you, maybe we could have it by Monday. How's that, Tony?
Better.
Okay, I'll look for it Monday. Thanks. All right, have a good one, guys.
Thank you, man. Appreciate it. Sadly, we got a lot of work to do this Monday. What were you going to say?
I mean, I think I was going to. Well, I'll tell you what I was going to
say. Wait. Hold on. Lancaster, Pennsylvania, Sadnoff, which I have been to.
Okay.
Because that's where my father spent 3 years enjoying himself at a college. Connor from Lancaster, Pennsylvania. I've been there, my friend.
Yeah, Tony, I just want to say it's pronounced Lancaster here by the locals. My question's for Scott,
it was Lewisburg. Actually, it was Lewisburg. Anyway, I was in the wrong county. Sorry.
Oh my God, I got to deal with this all the time. It never stops.
Yes. So Scott,
I'm sorry,
I was just wondering.
Connor, I digress.
Lancaster, Lewisburg. Who cares?
Go ahead.
Scott, I was wondering what was your favorite food over in Japan?
Oh, no question. Just the sushi I was talking about
Italian.
before I went on there.
The burgers.
No, wait a minute. I will say, speaking of Italian, the sushi, it's amazing. I would say we had some at the baseball game. I mean, baseball game sushi, you're thinking like in Chicago or somewhere in the States, you're probably not doing that. It was unbelievable. Like I would put it up basically against any restaurant in Chicago. But everywhere we'd say a ton of fish. Now I will say we did try to go to lunch at the rated number 3 pizza place in the world. They don't take same day reservations. So we just showed up. Tiny spot. It reminded me of what was the Great Lakes Pizza, with like 4 tables.
Yeah.
Same kind of thing like that. And they looked at us and went, no, you're not coming in here. So I missed out on the Italian, but I did want to try the pizza. But what's crazy is, and I think this gets back to eating more on the whole food kind of level. There was so much food everywhere we went because the Cubs just kept putting food out, but it was all like, it wasn't greasy, fat, deep fried stuff. So I kept eating, but as JJ said, he felt like he was eating like he was going to the electric chair, but I didn't feel like I was full because it was just like, again, just good food and, not the stuff that I would normally eat. So, but the fish, shouts out again to the whole experience. But if you ever have,
shouts out to the fish in the Pacific Ocean.
No, just the whole experience. But the food we had, the Cubs, 6 straight days. But I needed to come home. I couldn't do a 7th day of a Cubs outing.
Good job out of you.
Thanks for taking my call, guys. And Tony, kind of watch that language, I guess, moving forward.
Hey, in Lancaster, Pennsylvania, my mom would take me for shoot fly pie. That's where the Amish are, right?
That's correct. That's their best dish.
And
that's their best dish. Right. There you go. See, I knew I had it in my head. I'm sorry.
And he corrected you and still didn't get it right.
All right, Sosnov, go ahead. You had something to share with us. I'm sorry I kept you waiting.
Well, I was going to share 2 things. The first thing was to answer the guy's question on the programming stuff. I'm going to take a course over the next couple of weeks and learn how to program, and then I'll have it done before our own team will do it.
Nice.
But that's
you're going to go. What's that school where they do it online for like an hour? What's it?
Yeah, right.
Got it.
Evelyn Wood.
Okay.
Evelyn Wood. No, but what I was going to say is
Kaplan. You're going to do the Kaplan. Mm-hmm.
Whatever.
Yeah.
What I was going to say is I don't understand this whole 51st state thing, because let's just say Canada was the 51st state, okay?
They can keep the national anthem, we've been told. Go ahead.
Okay. Canada's bigger than 40 million people, is bigger than, let's say, California. They'd have
bigger than U.S. Steel. Go ahead, yeah. Mm-hmm.
They'd have 50 or 60 electoral votes. It would basically cost that current administration the entire election and all of the House and the Senate. It doesn't make any sense why they think that would be
okay. You're making
we only give them one vote, Sosnov. They get one vote.
You're making the assumption that we're going to be
one
able
vote,
to
one
vote.
Governor, one senator, one everything.
Okay. Assuming
if we can't vote,
the electoral college
matter.
is still in place.
Right. No.
The whole thing doesn't make it. That's how ridiculous the whole thing is.
If you can't see the future, on the 3rd term, Trump does away with that.
Oh, God, that's what Scott just said.
Right. So, just you're assuming we're going to be able to vote. And let's see.
Come on, Sosnov. Get with the program here. Get your head out of the sand. Get with the program.
By the way, one last comment. The S&Ps, the opening price, Tony, way higher than we thought.
What was SET? What is it?
I want to say it was 56, 16 or something, or 17.
56, 17, 80.
Yeah.
Yes.
Significantly higher than we thought.
Yep. Yeah, we were like 55, 80 or something like that. Yep. Yes, you're right. Yep. And even the S&Ps had just put a little bit of bid. They're down 29, but they've had a $10 handle for most of the morning. Scott Sheridan, thank you for coming back. It's always a pleasure to see you. You're a breath of fresh air and a ray of sunshine.
Can I just say?
Here we go. Oh, my God. No.
Next week.
I love when you say, yeah, God, next week what?
A week without Tony is like a vacation for me, too. So Tony will be off.
Oh, Tony, where are you going?
I'm going fishing down in Cape Coral. If you find me and see me, take a picture with me. I'll send you some swag.
Spring break?
Yes, spring break. Spring break.
Oh, nice.
We're catching redfish. We're going to fillet them, and we're going to cook them on an open fire. My neighbors are going to hate me. It's going to be great.
Wait, is Coral Springs your house?
Cape Coral. Yes, that's where my house is.
Cape Coral.
Yes.
That's the house is.
Yes.
Is your boat back, or is it still down in the like somebody's yard.
The boat is fine. We got it off land a year and a half ago. It's just fine. Got a little leak. Got a little leak. We got a cup every once in a while. We throw it over. So that's good.
Wait a minute. Now that you don't have the Winnebago Uber, what do you do?
Uber. Hey, seriously, I'm driving them. I'm leaving tomorrow. I'm flying home. I'm driving them.
Are you guys having fun?
That would be good.
Can we just tell the story of Jules? Jules and I share a clerk. It's like late 80s, early 90s. Jules and I sharing a clerk in the OEX pit. Jules calls the kid down into
in the biblical
pit.
sense?
What?
In the biblical sense?
No. He calls the kid down into the pit. He goes, "Hey, what are you doing tomorrow?" He goes, "I don't know. I got no plans." He goes, "Here are my car keys. Drive my mother to Florida."
It's one of the greatest things I've ever heard.
The kid's looking at him like, driving your mother to Florida? He drove his mother to Florida.
Oh my God.
And he goes, "How am I supposed to get back?" Jules says, "Just take a plane. I'll reimburse you when you get back." Kid's like, "I don't got any money." Oh my God, it's great.
Oh, Jules, the best thing he's ever done. He peaked at that moment there. That was awesome. All right, Sadlov, you ended strong. We'll end right there. Great story, Mr. Sheridan. Thank you for your time. We take a quick 90-second break. We got Liz and Jenny next. Peace out, you guys. See you at 2:30.
Have a good break.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all 3 guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up. So make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. I know the chat isn't going to go as crazy as it did when Tony Batista was on, but he was in fuego today before his vacation. Were you watching this, Jenny?
Oh, I had which part, Liz? Which part? I did have them on.
I feel like he was all hopped up before his vacation. So I wanted to give a shout out to Frank in the chat room. I'm sure he had a field day with this.
No one's been so excited to leave for vacation than Tony Batista. He's ready to go.
He's ready to go. Julia's sitting in Julia's sitting in. I'm sorry, what'd you say?
Is this his first time not taking the RV and actually, are they just flying there instead of taking the RV and the dogs?
I think so. Yeah, he's got somebody watching the dogs, I think.
Okay.
Yeah.
Okay. Well, I was a little nervous when I heard him say, he goes out in his boat and he goes fishing, and I got my boat shortly after he got his boat, and I don't go too far from the shore because I get nervous about what if something happens. And I heard him say they're going fishing and they want to catch some bigger fish, so they're going 7 miles out, which I started having heart palpitations when he said he was going 7 miles out.
I've done that. We've done that before. I've done that with my brother so I know he's in Cape Coral, I think. So my brother is off Marco, and we've gone pretty far out. But Jenny, I know
with a professional captain.
No. With my brother's boat. They have a boat.
Oh, and you've done that with your brother.
We have, but I will tell you, they do. You can get Lake Michigan has no one that far in. Do you know what I mean? There are other people that are doing this, so it's not. I know that sounds weird. You're in an ocean. It just seems it's not because you do have to go pretty far to get it, but you just follow all the safety measures.
Well,
I don't know if his boat can go that far out. Because I don't know if he's got a fishing boat. Brian had an actual fishing boat. His wasn't like yours is a speedboat, for lack of a better term, right? Is that?
No, Tony's is a fishing boat. His is like center council fishing boat.
I've seen yeah. So that's totally, those are a little bit different too, I think. I don't know, but you got to go out to catch fish.
I try to stay close enough where if something happens, I can swim to shore.
I agree with your assessment with that, because you guys aren't also, and I don't know if Tony's a professional boater, but I would stay close to the shore. I think that's smart.
If something happens, we can all jump out and swim to the beach.
Yeah.
I think Tony's maybe if you're going to rank professional boaters and captains, I would, if I'm a 3, he's the 4.
I don't know. I think he's got a little bit more experience than you in boating. I don't know. Maybe he doesn't. But I don't. I mean, and I'm kidding about this because I think you're a fantastic boater, Jenny.
Oh, stop it. Let's get into the market. Should we pop in and see what's going on? SPOOs are only down 25, which doesn't look too bad considering they were down 50 at one point. 50 is the lowest I saw them.
Yeah, 50. I think 59 at one point, but I think that might have been pre-market because I think they did pop up a little bit. But yeah, no, either way, this is not what I had in my handbook.
I didn't want SPOOs down 50 today, but 25 is better. But yesterday during our show, we were down and then we rallied, but then ended the day down. So it is this market is on a roller coaster. just like Cupcake said. And Liz, thank you for posting this because here we are.
This is every time you call me. No, my favorite comment on this was, we're only going down. How come there's no picture of you two going up? The next time we get on there, I'm going to get a picture of us going up.
Now, we don't know these two ladies.
No, we
People
don't.
do ask us that, like, are these your friends? No, we don't know them.
Never seen them before in my entire life. They look like they're having fun, though, but we do not know them. The funny thing is, I think we're sitting in front of our daughters, because that's Annabelle behind you.
Oh, it is. It is. Mm-hmm. Yeah, you're right. You're right.
Yeah,
and we're the only ones.
Yeah.
That is so funny. And, I've been in plenty of rides enough to know the point when they take their picture. So when I was just recently there with Lily, she was holding her hands up the whole time. I was, me, I'm holding onto the bars right before the camera, put a smile on my face and lifted up my hands. Then right after, put my hands right back down.
Oh, that's funny. That is pretty funny. That's a good move. That's a good move. But yeah, no, this was fun. We got to go back. This was Splash Mountain.
Oh, yeah. So we had passes to ride the new one, and then it was broke down the whole day.
Oh, was it really?
Mm-hmm. So it was down all day. I wanted to go to Bob's List just to see what we had. So many tweets yesterday. I was going to go to Bob's List just to see Micron, Nike, FedEx, Lennar, and Carnival. I'm curious to see if they're all down. Remember, I was talking about.
No, they are down, and down. Carnival might have been unchanged, I think. I'm not sure.
But in this market, I was tempted to play all the diagonals to the downside because we're just in a different market. Micron earnings good. It looked like it was going to be up, down.
You know what? It was funny this morning when I logged into Micron because, like I said, I had that diagonal in, or I still have the diagonal in, which was fine. But last night when I looked, and I didn't look early. I mean, I think I looked at, 4:00. The market was up. In Micron, not the overall market. Yeah. Micron. So I was like, oh, okay, fine. It wasn't up big. I think it was trading 108 when I looked at it. And now, it's down. And it's down more than its expected move. And we know that because we have that 97 put.
Right. We sold the 97.91 put spread, and it's down almost $8. So I know we were within the expected move, but that was only because we didn't want to risk more than $400 or so. So we brought our spread up and to have our risk defined. Now, you had said yesterday, if it goes through our put, we're going to treat this like a naked put. And sure, let's just roll that put out in time.
Yeah, taking a look at this, and this isn't what's interesting about this, and we alluded to this yesterday. It's kind of, maybe we shouldn't talk like this anymore. But I said you're not going to lose the full amount until it goes straight to your long. And we're just a little bit in. $65 move isn't bad. Because we collected 133. We collected 133. So our break even on this isn't too far away from here.
Yeah, 95.57.
I know we're going to treat this like a naked option. I know we're going to treat this like a naked option, and I know this is, nobody knows anything, but can we leave this till the end of the show?
Well, but right when I logged in to get ready for the show, maybe at 9:30, our trade was actually up $10.
Ooh.
So yeah, I'm with you. Well, let's leave it to the end of the show.
Only because this boozer only down 26 now. I know this is just stupid thinking, and we're gonna do this before the show's over.
No, I agree with you. I just want to take a look at those other earnings. So CCL up 18 cents, a non-event.
Yeah, I thought CCL was unchanged. Nike took it off the chin, I believe.
And we did Nike here. Oh, but this is okay. We sold, it's right there. We sold the 67 put. It's down almost $5. It's at our put. We're up $25. Let's just get the heck out of that.
Get the heck out, Jenny.
Now, would we ever, is 30 rank? Do we want to keep Nike going?
No, honestly, maybe if we do, let's do it Monday. I think we just get out of it.
Yeah, let's get out of it for now.
Especially with the earnings in a down move.
Yeah. Okay, so we're out of that. And honestly, I know we kind of prefer shorter term. I know everyone's rolling out to May.
We know.
we know. But with you gone, so next week you're here, but then you're gone. I'm tempted to start moving things or new trades, putting them in May, because I'll have that whole week of guess where we're not really going to be in the account too much.
And it is a lot trickier to manage, right? When you're
right. Right. Okay, so that was Nike. We saw, so that's down, Micron's down, and Lennar is down.
Yep. They were all down, and they were all down pretty big.
Mm-hmm. Yeah.
Now we do, Jenny, we have a couple in the money signs. We've got a great, and I want to give a huge shout out to Kai. Love Kai, and I love that he did this for us. So we've been asking for this for a while, and he's been really producing for us. So Jenny and I, we love to watch. We watch the show, all the shows, as often as we can, but sometimes we don't get to, sometimes we miss it. And so the market measures, options, drives are really good. We've always wanted a recap. And so Kai's been giving us that. And this week it's pretty big. So we've got, I want to dedicate a little bit of time to the recaps of the research pieces that Kai did for us.
Right. So we see from Jake, we've always said, we'll go into the office and we'll ask people, what did we miss in the groundbreaking research that you guys do every week? If there's something important, we want to know. And we don't need to know the in-depth results of the study. Just give us the takeaways. So give us the trading takeaways that retail traders could put into action. So we don't need to know every slide. We just need to know the important takeaways. So I'm glad that he's doing this, where he's giving us the study and then giving us the takeaways of every study.
And I will say the one this week, that study that Jacob gave us from the SIBO floor that we did live on the SIBO floor was probably one of my favorite market measures we've ever done.
Oh, I loved it. And
our viewers did too. And it was really good. And I like art. I know I'm biased, but I like our takeaways better than the boys because we have a smaller account.
Right. They trade differently. You trade differently when you have unlimited cash.
Yeah. So it is nice. Everybody can go back and watch that market measures or the live from the SIBO on Wednesday. You will see the slides and the market measures that we did.
I just want to look before we get into Kai's recap.
We got to get all those in the monies. We got to hit those.
Oh, yeah. I'm like, is there anything really moving? Okay, so all the in the monies, Micron will deal with end of the show. OKLO, we know this is, we were assigned.
Yeah.
Oh.
Yeah. Close that. Close that bad boy.
Okay, so here, when we're assigned, this was a spread. We were assigned at 40. And we've got the 35 put. We know we can close this. It should close for about 35. So 35-cent credit if we have to give up a little bit. I'm going to go 35.
I mean, you can see what the 35 is worth. It's not worth anything. Jenny, you're at the 29 and there's no penny. You're going to have to pay over.
No, we're taking in a credit. No,
I understand. We're taking in a credit, but there is no extrinsic value.
Right. So we should be able to get filled close to 35.
Yeah, I mean, I do, but yeah.
But OKLO is a little bit wide, so fine. I can give up. Here's me trying to give up only 3 pennies, and then I'll see if I have to give up a nickel.
Oh, good job, little Oklo.
Got an extra 2 cents out of that, Liz.
I don't like calling it Oklo. I like OKLO. I don't know why.
I know. So we have nothing in there. It's down today. It was up yesterday. It's been bouncing around. If we want to get back into it, it would just be
This is something I don't mind getting back into because this is, I know you have it in your account. I have it in my account. JD has it in his. Let's just do that.
I just pulled up a $5 wide spread for $2. The margin in here is high, so I just pulled up a $5 wide spread trying to collect, and I could shift it, but I tried. I think I wanted at least $2 here.
Yeah, that's perfect.
Okay. And because these markets are a little wide, I'll give up a couple pennies. Okay, so now we're in, and that's far. That's May.
Yes, that is.
That's May, and I'm going to put in a GTC right away.
I like it.
Okay, so now we've got something in OKLO, and we don't have to worry about it. What else is red and in the money? Snap.
It's just a long option, right?
We're just long a call.
I'm pretty sure we probably just switched it because we were short of put and decided capital efficiency.
Right, and we want it to be long snap. Now, instead, do we want to go to May and just let's just sell the 9 put for 90 cents. That's not bad.
I agree.
Okay. So we're switching our long call, which is like back to a short out of the money put. 90 cents on the 9 put is pretty good. I mean, I know it's 56 days, but it's pretty good.
That's not bad at all.
No.
I have, I rolled my son's, I had him roll his put in Snap.
I'm just flipping these. So TSM, Taiwan Semiconductor, another, we were assigned here. I knew our buying power looked off.
Oh, that's got to be well off because Taiwan Semiconductor is expensive.
I opened our account and I was like, geez, why do we only have like $10,000 or $11,000 in buying power? But because we have all these assignments.
Yeah, so close that thing as well.
The same thing here. We had the 190, 180 put spread. Jeez, that's not good.
But those are left. It was very similar to Okla. When you have nothing else left to lose, you leave them on because there's nothing to gain and nothing to lose by closing it early. So now we're just going to close this and move on.
And our puts the 180, it should close close to 180. We're taking the credit. I know I'm not going to get 180.05. I'm going to have to get 179.98. Give up 2 cents.
Yeah. Look at you.
There we go.
Getting filled left and right, Jimmy Andrews.
Did you even look how much capital was that giving us back? Because we were long 100 shares of.
I did not. I will check right now. It gave us back like $4,000.
Okay.
Like something.
So then the question is, do we want to be back in Taiwan Semiconductor? We had a put spread, it blew through it. Do we want another put spread in Taiwan Semiconductor?
I don't mind.
I don't mind either. I'm in Taiwan Semiconductor.
Yeah, it's got a decent rank, right?
So let me see something.
It's got a 47 rank. We were looking at Nike. Nike's got a 30 rank. I don't mind being in TSM. We don't really have any other. Let's pop into there. Yeah.
What? This isn't a third. If we want a third, we have to bring it up. Here's a third. 170, 160 for 335.
Sounds good to me.
I know it's close, but if we want a third, in this market, we're just trying to risk less.
Yeah, no, I agree. Okay, so that's working.
Right, that's working. I'll penny it down a little bit. Oh, you know what, Liz? I wore, and maybe it's not the right color blue, but I wore blue today for you in honor of Kentucky, in honor of your Kentucky party tonight, in honor of your basketball party. I've got blue on.
Thank you very much. I've got all the senior boys from our high school coming over and their parents and the coaches coming over today for our end of the year party. So it'll be fun. And like I said, shameless self-promotion. Kentucky tips off same time the party starts. So it should be fun.
Good. What time is that?
6 p.m.
Yesterday I asked my husband so many times. I was like, what time does Kentucky play? What time does Kentucky play? And he's like, look it up. I don't know.
6 p.m. Party starts at 6. They Kentucky tip-off is at 6, so it'll be fun.
I'll have it on. He was crabby yesterday. He was watching basketball all day, and one of his Final Four, I think Clemson, was already knocked out. So, he's usually a really calm person, except when basketball's on. He's always yelling at the TV. So he had, the 4 games playing at once and yelling at the TV, and the poor dogs are scared.
Oh, no. Well, that happens. It happens. Okay, so I've got all the coaches coming. So I've got the freshman, sophomore, junior, and then the two varsity coaches coming. So I was telling my husband, I was like, you know what I'm going to do? I'm going to get a whiteboard down here, and I'm going to give it to the coach and be like, explain to me UCLA. Because if I've heard him scream, UCLA one more time, which is one of their plays.
Oh, how funny.
Yes. So that's my plan. He's always yelling, and like the other one's like, Sino, I want to know what these plays are. Now, I've watched it so many times that I should know, but I don't. So I'm going to give him a whiteboard and have him draw it out for me.
And didn't you play high school basketball?
I did. Yeah. But no. But you call the play something different. Like everybody's is.
No,
like,
I know.
But we didn't have a UCLA play.
Oh, I know. But I just meant from him calling it and then you watching it, maybe you would have.
I kind of know what it is. But yeah, so it'll be fun.
Well, you'll have fun at your party.
I know. I'm excited. Okay, back to it. So we've got a lot of stuff to do today. So you've are all the in the money signs gone?
Everything except Micron.
Okay, and we'll do that at the end because I'm hoping it comes back.
Okay, and so I will say, like, people can see from us leaving things till the week of, close to expiration, to expiration. Look, we were assigned in Taiwan Semiconductor. We were assigned in OKLO. It happens. That's what happens if you're not rolling. Our mechanics are, when you get to 21 days, roll out to 45 days. And those are our mechanics. We violate a handful of rules, but we've spent our life breaking rules.
The rules there are no rules. No, we're kidding. We try to follow the rules. When
we feel like it. So, okay. So, Micron's getting away from us, but if it does, whatever, we're just going to roll that put.
Yes. So
I'm going to pop this open just to make sure we weren't assigned in anything else. Just to glance through and see if we have stock anywhere else.
Oh, Jenny, like I said, I know I keep reflecting on when you were gone. It was Assignment City USA. And like we alluded to this, when you have viewers on, you really don't get, not viewers, when you have guests on, you really don't get to talk about this. Every day we were assigned in something. Sometimes I would come in with negative buying power. I was like, what's happening?
What the heck is, so obviously we were assigned of Lunar, LUNR at 100 shares.
No. I think we bought that.
No, trade price $15. So when I see trade price $15, that's even. I'm assuming we're assigned on the 15 put.
Oh, that's a ridiculous stock. Get out of it.
No, I don't know. What do we just leave it at this point? Let me see.
Yeah.
Assigned 100 shares at 15.
Just leave it. It's $7.
I just wonder. Sometimes this is when I'll look at. Can I buy so here's a call for $2. We can buy a call and give up a dime for $2. What are we going to get back in buying power if we sell the stocks? I don't, sometimes these become cash secured. No, 300. So we'll just leave it.
Yeah, it's fine. That's 6 of one, half dozen of another.
Yeah, that doesn't matter. But I will look at that to see if there's a big difference. Sure. One day, Liz. One day, RSX is either going to come back or disappear.
I like it. I'm just leaning in. I love having it on our sheets now.
Same with SDCCQ.
Yep.
I guess that's it. No, nothing else.
Yeah, that looks good. Jenny, because we're going to manage Micron afterwards, and maybe we'll go to Twitter afterwards. Let's jump into Kai's thing. I'm excited for it. It's very heavy today. He gave us 3 different pieces, lots of slides. I think there's lots of slides.
Okay, but this is in case you weren't watching every minute of Tasty this week, and in case you missed the market measures sponsored by the SIBO, here's a recap. And this is just a brief recap. We're not getting into the weeds. We're just giving you the takeaways.
And so we encourage, if there's something that happens, to go back and watch them. And we're going to do the same thing. If I see something here that is, groundbreaking for me, I'm going to go back and watch the market measures. But all we asked Kai for were the setup and the takeaways. We don't want the sausage in the middle. The setup and the takeaways.
All right. So first one that he sent us, how long does market chaos last? Which, hey, I'd love to know. A comprehensive analysis. How long does market chaos last? Okay. Let's see. Yesterday I got a text from someone that I don't hear from that often. So I got a text from someone, a parent from grade school that I haven't seen in a while. And they asked,
how long does market chaos last? Was that your text?
Basically, like, how long? So now I didn't have an answer for them last night, but now I'll have an answer for them.
Funny. Okay.
All right. A customer wrote us about the statistical behavior of the VIX during exciting times such as now. How much does it move? From where to where? How long does market chaos last historically? And what is VIX in simplistic terms?
Okay, so they decided to take a closer look. We really nerded out on this one, and we'll include additional slides for you to view at a later date. Okay, so clearly they nerded out, so you can go back and watch this. How long does market chaos last? Okay, next slide.
Yeah, so if you want to nerd out, go watch this one. You can find it in the market measures. If you can go to the archive, search market measures, and find this one. How long does market chaos last?
Don't you wish the next slide just says like 10 days? You know what I mean? Okay, takeaways. When the VIX pops, I'm gonna do red circle, red darken circle to red darken circle. Okay, so when the VIX pops, edge comes after the volatility peak. IV high equals high premium, okay? The volatility often bakes for 30 to 40 days until it stops making new highs. Okay, so 30 to 40. After peaking, VIX typically drops 40 to 55% within 30 days. And this is when probabilities start to work in your favor. Okay. Small events typically resolve in 45 days. Major crises can take months. Okay.
All right. Trade small, trade often. We've heard that before. When volatility first spikes, reminder to be patient. Premium sellers who wait for peak confirmation outperform those who rush in too early. So, but how do you know if you're rushing in too early or if you are patient and you're getting in at peak confirmation? That's where, I guess, if we wanted the weeds, if I want to know, like, when is peak confirmation, I'm going to have to go find the middle of these slides.
Yes, we might have to find the middle. But this is pretty interesting. So my takeaway from here is small events. Now, are we in a small event right now? I know when you take a look at, COVID, it took months. Volatility stayed high for months. But most other things, okay, so 45 days. That's a good kind of wraparound on how long market chaos lasts. They had said, if you go back, I think it's been 22 days for the 10% correction in SPY.
That's what I wanted to see. How long has this been? So we started on February 19th, and this is March 20th. So it's been a month.
Yeah, well, I heard it this morning, 22 days for the 10% correction that we've gotten so far.
Okay. So we could have another month of this. If it's on the 45-day scale, or if it's a bigger world crisis, then it could be months.
Now, you don't see the violent up moves that you did in the major major crises as you've seen in COVID. It was a massive spike. 2008, it did step up. I will give you that. But you don't see it
after 2008. After 2008.
Yeah.
But I'll tell you, so, and I remember doing this on the show. I remember doing this on one of the road shows saying, I remember putting some money into like a fund that tracks the SPY when my son was born in 2004, because I was leaving the trading floor and I just put some money in, and this was 2004, and I put some money into a fund and I just ignored it. And then that went through the 2008 downturn. And in 2011, when I started at Tasty and I was transferring some of that money into a Tasty account, it was less than what I put in 2004. And that was in 2011. So that was, how many years later, and it still hadn't totally made a comeback.
Yeah, 2008 was the largest. It took the longest time to come back.
Yeah.
That was a big correction. Okay, so this is good. So yeah, about 22 days. So that's my takeaway is about 45 days. So we could be in the middle of it. Now, none of these are. That's what I said. I wish it was great if like the takeaways just said X days. Like, remember when we used to grab TP and be like, give us a number. What is it?
Right. Well, my old buddy texter last night said they heard wait till we're down 20% and then load up.
Well, I mean, I think that they're probably listening to another network, because I heard the same thing this morning, that we're not there yet is what I think. But everybody's got their own, you jump in. Yeah, people could be right, people could be wrong. Okay, let's go to the next one.
Okay, why one ratio isn't enough for strategy evaluation.
Okay.
All right, interesting. Why one ratio isn't enough for strategy evaluation.
Okay, so this is the first slide.
Okay, this is the first slide. When underlying share common metrics like the same IV, traders often simplify strategy evaluation by using a single ratio for risk return. However, relying on just one ratio doesn't fully capture a strategy's potential. Using multiple metrics offers a more comprehensive view of risk, return, and consistency.
I did see this. So this one.
Okay, great. If we miss anything, you can fill us in.
Yeah, so this is actually a pretty good one, and this is something you and I talk about on a daily basis. So here, let me just give you this. For example, the credit to buying power ratio, which we use all the time, right? That ratio where we'll be like, oh, you're getting X amount, and TP does the same thing. Return on capital for what you're putting up, okay? For example, the credit to buying power ratio can be used to compare different underlyings for the same strategy, but how can it be used to compare different strategies with the same underlying? So meaning your risk reward scenario for a $10 wide iron condor is amazing. But if you're doing it for a naked option, it is not. You can't go you can't use buying power for a naked option versus a defined risk strategy.
Okay, so right at the bottom it says the answer is that it can't. So
there you go.
I'm curious to see what's on the last slide. Takeaways here. The credit to buying power ratio can be used to compare the profit potential per unit risk for different underlyings of the same strategy, but it cannot be used to compare different strategies. And that makes sense.
It makes perfect sense. And then different strategies have different risk reward profiles, correct, which the credit to buying power ratio doesn't take into account.
That's fair. So therefore, comparing strategies only using this ratio can misrepresent the relative profit potential and risk of different trades.
So you know what my takeaways are here? You can it's as if you do have to do apples to apples. You can say I'm going to look at Micron's buying power versus what I'm getting versus American Airlines or U-All's buying power versus this if you're doing the naked options. But I'm not going to say in Micron what is my buying power, credit to buying power versus a $10 wide or a naked option. That's what I'm not doing. Different strategies in each underlying.
Right, and we did that this week when you talk about, U-All or American Airlines comparing a naked put here and a naked put there and my buying power and what's giving me a better ROC. But when you're looking at the same product and different strategies, and we say this all the time, you can't take a $5 wide spread or $10 wide spread and say, oh, if the naked option uses $3,000, I'm going to do as many credit spreads here to equal that $3,000 that the naked option would use. No, we never do that. So they're completely different strategies and you have to view them differently.
Yeah, I think each strategy gets its own bucket.
Mm-hmm. Good. That was another good one. Okay. Okay, VIX volatility. How fast does the VIX spike or drop?
This seems very similar to the first one, right? And I'm guessing they're getting lots of questions on this.
Right. I mean, we're in a market where mostly when the market falls, it's short-lived and we get a quick pop back. Now we've been in this market, this downturn for a while now, and people are wondering, when is it going to stop?
Yeah.
So this makes sense. How fast does VIX spike or drop? And honestly, we talked about this. People who had a lot of vol positions or VIX positions trying to hedge a bearish portfolio, I don't think VIX ever got up as high as it should have with this move we've had.
The highest it got to was 28.
Yeah.
Which is not high, by the way.
No, it's not. Yeah. I don't think so.
Yeah. Okay. So due to heightened VIX levels, we've received many questions about its volatility speed. Will the current VIX ever come back down, and when? Oh, I would love to know this answer. I hope it's on the next page.
Observations from Tasty Traders suggest that the VIX rises slower from lower values than higher ones. The VVIX and VIX show a strong correlation supporting this idea, as shown in the option jive on February 26th.
Okay,
so if you have more questions on that, go watch the option jive from February 26th on the VVIX and VIX and the correlation, talking about how the VIX rises slower from lower values than higher ones. And if you're thinking of like the percentage moves, then that does make sense.
And let's break this down. So they're just saying when the VIX is 12, which we've seen it, right? We've seen the VIX at 12. When the VIX is at 12, it's rising a lot slower. When the VIX is at 28, if you get a violent down move, it can skyrocket up. So it moves faster from higher levels and slower from lower levels, which actually makes sense.
Sure. Especially like if you've got the VIX at 12, you're thinking, this market's not doing much. There's not much fear here. And so if you get a down move, it's not moving up that high because people are still thinking, there's not that much fear in the market. And even with this move, the VIX has just slowly stair-stepped up. And I know you said you and TP have talked about that when he was on.
I did with TP, and I talked about it with Tony from Mexico too. And I would highly encourage you to do the same thing because it was interesting. Because you're going to have both of them on not next week, the following.
Right.
Yeah.
Okay. All right.
Okay, and then this market measure will answer these questions in detail and analyze how the VIX behaves when spiking or dropping 5 points, depending on its starting value.
Okay. So this graph shows the total amount of VIX spikes and drops per year, along with the average VIX value from a 7-day cycle. As the average VIX increases for that year, there are more large price moves. So the green is total spikes per year, red total drops per year, and then this like bluish green line, average VIX per year. So
Okay, that you can see when you just look at 2008. That is you've had more spikes and more drops, and that's the year that the VIX was the highest.
Right. And 2018, that was the December, right?
That was December.
That was that December where we had that really big sell-off in December, and the VIX really spiked very quickly.
Well, and then there's 2024, where it's a contentious point whether the VIX hit there or not. Remember, that was like, it didn't hit there. It was like, but it did.
Yes. Yes.
So what's so funny is only traders can look at this and be like, I know what that was. I know what that was, right?
Right. So funny. And 2015 is when we had that August. I believe 2015 is when we had that drop in August, which was short-lived. By September, everything was back to highs.
Yes. Mm-hmm. And then look at that. Look at 2017. I mean, you've got a VIX. That was like this was not the worst, but you remember that year where it's like watching tea dry. I think that's the year you filmed the football commercial.
I want the VIX back to 18.
Jenny Andrews.
Yes. And that was when we did calendars pretty much every day, and every day we'd be like, how are we going to do another show? There's no premium anywhere. We might. If you had a choice right now to go back to those days, would you?
No, I mean, I like high implied volatility. I do like the market conditions changing. That was a very slow bleed. But the market was high. Remember, the market was high and just inching higher and just staying and just it was the what's that called? The cliffhanger from Price is Right.
And I can't remember 100%. I'm not sure, but I think the year I'm like my Tasty account, premium selling account, made the most money, did the best was 2018.
Your premium selling was 2018?
I think so. I think my best year was 2018.
So I will tell you, the big spikes, as much as we're premium selling and I like high implied volatility, the big spikes took a bite out of my account. So 2020 took a bite, and then the big spikes take a bite. But look at 2025. We are nowhere near the spikes of 22 or anything like that. 25 is nothing in 2025. That spike is...
Like, if you think about it, Liz, like I think I remember we had a really good year in 2018. We had a good year last year where we had these spikes. I think like our better years are years where we have these bigger VIX spikes.
Yeah, I think you might be right.
Yeah. So, but why does this just look like this? Because we've only
last year was one of my best trading years.
Last year, right. And we had some volatility.
Mm-hmm. Yeah. Interesting. This is pretty cool. So wait, what is it telling us? How fast it comes down? What are we looking for here?
Yeah, we're only focused on the green bars. What's in the red, VIX level, and then how fast it comes down. So
let's go to the takeaways.
Okay, here we go. All right, this table shows another reason why we put on your trades around the 45-day cycle. Okay, average VIX for 50% spikes or drops, 7-day cycle, 15-day cycle, 30-day cycle, average duration for VIX move in days, and average duration as percent of cycle.
Okay, so average duration for VIX in days. So you've got 5, 9, and 15. That's the average duration for a VIX move, meaning up or down, because it's in both directions. Mm-hmm. Mm-hmm. And then it says average duration as a percentage of cycle. This number will trend towards 50% as we increase cycle duration. Okay, so it's a higher percentage of the cycle, the less the days there are. So that's going to come down.
The days.
Yeah.
The less the days.
If the VIX is around 20, there's a 50-50 chance of it experiencing a spike or drop. Okay. Below that value, it's more likely to experience a spike. Okay. So right now, you don't have to go to the platform, but I'm going to tell you exactly where VIX is. So VIX right now is 20. It's 20.37. So it's up 57 cents today. 20.37 is the VIX. So there's a 50-50 chance of experiencing a spike or a drop. Below that level, it's more likely to experience a spike.
So we should have known yesterday when VIX got into the 19 handle that it was more likely that we'd get a spike today.
And above that value, it's more likely to experience a drop. So is 2038 above 20? It is.
Get long for Monday.
Long for Monday.
We're kidding. But that makes sense. If VIX is 20, that means there's something going on, right? 20 is above average. If VIX is 20, that means there's something going on. So can something continue to go on? It can continue to spike? Yes. Or do things settle down and then it would come back down to its usual levels? I mean, that makes sense.
It does make sense. That makes a lot of sense.
As the cycle duration increases, the average duration as a percentage of the cycle reduces. Thus, the VIX is expected to mean revert within 20 days or so once it hits its highest or lowest point in the cycle. So have we hit the highest point in the cycle yet? Now, have we hit, if we go to VIX and take a look at that VIX chart, it was down 50 now again.
I know, I saw that 48.
So have we hit the highest point? Was this, 28, 29, was that the highest point in this cycle? Or have we not seen it yet?
Wait, did it say 20 days from the highest point?
As the cycle duration increases, the average duration as a percentage of the cycle reduces.
So
that's the VIX is expected to mean revert within 20 days or so once it hits its highest point. So within 20 days. So here March 11th, and now we're at March 20th.
It's been 22 days since the S&P high.
No, it's been longer than that. It's been longer because today's March 21st and that was February 19th. So it's been a month.
Well, they were just saying from the high to the 10% down move. And like you're looking at what the date is, but you're seeing go back to SPY. I'm sorry if you don't mind for 1 second. So here's from there to the drop.
To the bottom. Okay, so from February 19th.
Yeah, I understand like a month of time. Like I understand what you're saying. Duration wise, it's been there, but they're saying from the 10% drop to right there.
That was 22 days.
That's 22 days. That's what I heard today. That's what I heard today. You can count them if you want, but it looks about accurate.
Oh yeah, that's right. From here to here. I was just adding in this week of time that's been
correct. And I understand. That's why I wanted to clarify what I was saying, and I know what you're saying as well. So like if it's 22 days from there to there, was that the VIX high? What's the date on the high of the drop?
So this lowest point is March 13th.
Okay.
And if we go to the VIX, the highest point, the 29, it got to like 29 something. That's
March
11th. March 11th.
Where was it on the 13th? Did it come down? You don't have the 13th. One more down. 13th. There you go. That was the high.
26 was the high on the 13th. So it hit the high before we hit our lowest day.
Yep.
And now we've been. So if this was the 11th and we're at the 20th, it's been 10 days. So maybe they're saying 10 more days. Then we'll have 20 days if things are settling down and we're just going to stay in this range. Who knows?
And I want everybody to understand, and I like that you and I are going back and looking at these charts and kind of breaking it down. These are just statistical numbers. I mean, this is just research, but that doesn't mean it's going to be exactly at the 20-day mark, everything, you know what I mean? Close all water sites, we're fine. Situation normal.
Yeah, this is just like historical research, but this isn't like, oh my gosh, all right, so we've got 10 more days for the VIX to kind of come down and settle down, and then we're just going to sell strangles and it's smooth sailing.
Yeah, it's not. No. Okay. Very good. That was I really like the recap, and I love breaking it down with you. It was kind of fun.
I did like the recap, and if anyone wants more information on any of those, you can go to the tastylive website and go to on demand and find the market measures. And the one was also an option drive. One referred you to an option drive, so you can find all of that on tastylive.com on demand.
And this is real time. This was this week's stuff. Right. So it's not, it's a recap of this week's, which was really cool. So I got to give Kai a big shout out again. Okay.
So I'm going to pop into Twitter.
Yeah, that's what I was going to say. I think we've
got
Let me
just refresh and go. I'll refresh and go top down.
I've got a Jack Tucker sighting.
All right, let's see. Okay, on the top here, Marky Stunks. There are millions of new traders. Most lose money. Not with Jenny and Liz, y'all. Oh my gosh. So now this brings back.
Whoa! Did they get back on?
Wait a second. Okay. Now I feel like this is a made up video, right? This is a made up video.
No, they reversed. That's what I'm saying. They got to say respect for this one. They reversed out of it.
But
because I mean, they wouldn't say respect for this one if he didn't get back on.
But what I want to say is, when I lived in Spain, this was exactly how you would drive around on the buses, and this is no joke. So this brings back horrifying memories. When I lived in Spain, it was before like more modern transportation, and you would drive on the edge of the mountain in a bus like that. I would fly into Madrid and have to go to southern Spain, and I would get on a bus like this and drive on the side of a cliff to get to my university in southern Spain. And I would sweat the whole time thinking, please don't go over the edge of the cliff. And after I left, like 5 months after I left, a bus went over the cliff.
This explains what your fear of driving to me completely. I now get it. I understand I understand the hidden trauma now. I get it now.
This is exactly how I would have to drive in those buses from Madrid down to Granada and drive on the edge of the cliff.
Now, Stonks, I did post a picture of Jenny and I on a roller coaster yesterday. I don't think there's any actual footage of her in these buses unless she can produce one.
And do you want to know a fun fact about these buses? Because this was in the 90s. So this was in the 90s. Every seat had an ashtray built into the back. So you would just like pop down your ashtray from the back of the seat. So there's like a person sitting on that seat, and then behind the back of that seat, you'd pop down the ashtray, and every single person was just sitting there the whole ride.
Those were the days.
Smoking Fortunas. That's what they smoked, Fortunas. I don't know what they smoke in Spain now, but the whole bus was smoking Fortunas. And
that's pretty funny.
Oh my gosh. I can't believe he posted that picture. Now I'm going to have nightmares.
I know this. I mean, honestly, I see where your trauma stems from. This is live action footage.
All right. Listen, Jenny forever. Good morning, ladies. Go ahead, Liz.
No, go ahead. Sorry.
I went with the April 4 vertical call credit spread on MSTR. Oh yeah, because they wanted a bearish position in MSTR. Went with the April 4 vertical call credit spread and had my upper protective call. You both have taught me that. The Trump pump reversal worked well for a quick 50%. Great. I'm glad it worked out. Are there market internals that you watch in triple witching? Oh yeah, it's triple witching. Are there things we're watching in triple witching?
No, I mean, a lot of it has happened, right? So VIX is already, I think the futures not expired, but yeah, they rolled this morning. So you do usually see, I think, some movement, but you don't know which direction. I mean, I think they said, I think Tom said today that this March triple witching is usually very bullish. So like historically very bullish, except for the last 4 years, which have been bearish. So this is the 5th year in a row that it's bearish.
That is bearish. So yeah, and they've done that. They should bring back a piece. They have done pieces talking about every month-to-month triple witching. So you said in this one, were they just talking about March and talking about how March is typically bullish but bearish the last 4?
It's historically the most bullish, but in the last 4, historically meaning years and years ago, but the last 4 have been bearish, and so this will make the 5th bearish in a row.
And so this is a little different than when you've heard us talk about, or TP has mentioned, like the end of the month or end of quarter.
End of month, end of quarter. You're going to have people on. Well, no, I be there.
End of month, end of quarter. That'll be end of March. You're gone. It's Monday. You're gone.
It's Monday. End of month, end of quarter, Monday.
You're gone.
Okay, so
right.
Thank you very much, Liz Jenny Forever. I love it. Jack Tucker sighting. We see him.
3 tranches, 0 DTE, collected 17,650, entered around 9 a.m. with short deltas at entry 18 and lower. Okay, so 55.60, 56.70. So these are wide. Like, look at that. That's almost $100 wide. $110 wide. 55.60, 55.70 are his shorts. Like, that's what Vol is doing for him. He's made that really wide.
So, and what I was going to say is, if you can look at the screenshot, or can you click on the screenshot where it shows the calls and puts? One up, over. Yeah, that one. No. Yeah, that trade page.
This one?
What I was going to say is, look at this, and I don't know what time this screenshot was taken, but I usually think he goes to the expected move for the cycle, meaning that brown bar. He did on the 1.
But today he said he went more around the 18 delta. Probably because you could still and collect a lot with the move down today and the spike in the VIX.
Jenny, these are Jade Lizard tranches.
What do you mean?
Look at that.
He has long puts. He has long puts.
There's long puts. Oh yeah, there's long puts. Okay, I was like, wow, he's doing Jade Lizards. But this, so $25 wide. But yes. Okay, yeah. There you go.
Long puts. You just don't see them. But what I'm shocked by is there's a 0 DTE and it's $100 wide, 110, 55.60, 56.70, $110 wide. That's bonkers, and still collecting 580 in the 0 DTE. Jack. Well, I don't know why I was too much.
The expected move for the 0 DTEs was pretty big with this implied volatility.
So I'm going to pull these up now. He put them on at 9 o'clock.
Yeah, here, I'll give you the strikes.
50.
Just go with the first. Just go with the last one he put on. 55.
Oh, this is the AM. That's why it looks so goofy.
Yeah. 55.60. Hold on, let me go back to him.
Yeah.
55.60, 55.35. And then 56.70, 56.95.
Wait, 56.70, 56.95. So look, he could buy this back for $225 now.
Yeah,
he made it more, half, because I think he collected 560.
And
so it's
on
50%
that particular
winner.
one, he collected 580. That's the one I gave you. He collected 580.
Yeah, so it's 50%. It'd be coming off for 50% now.
Pretty good.
Or more. I mean, more than 50%.
Yeah.
Jack, I don't know if Jack closes them or if he just leaves them, but
I mean, honestly, I couldn't. Jack, I'm not gonna lie to you. I couldn't hold this.
Not that. No, I couldn't.
I couldn't either.
But nice, Jack, nice. I mean, it takes nerves of steel, though, when you're in this market. This market's been crazy to have that many on.
So I was going to say game recognizes game. You know who was very interested in Jack Tucker? Tony from Mexico.
Oh.
Yeah, that's what I said. I was like, both of those guys are big by big. So I was like...
Well, I'm going to have Tony from Mexico on while you're out of town. We can talk about it.
Yeah. I showed him that, and he was like, "Oh, let me see more." But I was like, "This is what he's doing," you know. Yeah. So it's pretty interesting.
I just want to make sure we got to everyone's tweet. I think so. I think we did. Oh, Mikey, I was just thinking about you, Mikey. Had some coffee in your mug today.
Look at this. TGIF, ladies, listening to Jenny, that time when I lived in Spain reminds me of the bump when Tom talks about that one time I was in Russia.
Mikey, have a good weekend.
Okay, what is Frank? Can you click on Frank's too? I just want to see what he's. Just click anywhere in there. I want to see what he's. Scroll up.
Follow us on X and RT. This post for future rowdy contests.
Oh, I have no idea what this is.
I don't know. Oh, here.
Yay!
Oh, but that's Drake. That's the Drake.
Oh,
Bulldog.
so this is his like hold on. This person is his. Give me a second. It's his best pal.
Who's best pal?
Frank's. It's one of his best friends. Is one of these guys.
Oh, nice.
I'll tell you which one it is. Okay, wait. If you go back to it, I can tell you which one it is.
Oh, here. I've got the message from Frank. My best pal in the middle, adjusting his tie last night at the Drake
game. That's what I'm saying. It's wait, you can't tell from there.
Is this guy right here? Is this guy? Because he said adjusting his tie. If you watch, I think it's this guy.
No, it's this one.
So Frank, my best pal in the middle, adjusting his tie.
It's this one. You can't see it. Oh, keep going.
You got to watch for who's adjusting his tie.
No. I know which one it is. He's pointing to him. The one, his hands on his head. He just took his hands off his head.
Oh, okay.
Yeah.
Okay. Well,
yes, that's awesome.
That's awesome, Frank. That's awesome, Frank.
Super fun.
Very exciting. Very exciting. Okay. Do we need to do anything else?
Micron.
We need to deal with Micron.
Micron.
Can you
that going to be our closing trade for the day? Didn't go as planned. I mean, whatever.
No.
We're down a little bit more than we were.
We closed the 0 day, and we're going to roll this to the 56 day, and I'm going to roll the 97 put all the way to the 90 put and take an $1.
You can go to the 85 if you want.
No, I'd want to get some money.
I do too, but I'm just saying, like, you can and not pay anything.
Yeah, so we were at the 97, and I can roll it all. This is what duration does for you. Roll it all the way out to May. And if I go to the 90, I take an additional $1.60. If I roll it to the 85, like Liz mentioned, you can roll it for even. So we took about $1.30. So I want to work with something.
No, I agree with you. Okay, so ship that. Everything else has been pushed out as we were going, so we're good there.
Okay, so Micron's out to May, so now we don't really have to worry about it. I'll put in a GTC on that May put, and that's it. I think from now on we're going to be moving everything out to May.
Yeah, I think we'll do that all next week, right?
Right. Okay, Liz, have a wonderful time at your basketball party tonight.
Thank you very much. You have a wonderful weekend too, Jenny. I know the prodigal son returns today, right?
Yes, he's driving home tonight, fresh off of Green Beer Day. Green Beer Day lasts for 2 days at Miami. Since Wednesday, Thursday, there's been green beer parties. I don't know why they do it after St. Patrick's Day.
Trying to get rid of the old green beer.
So he's coming off a green beer bender for 2 days. We'll see what time he gets home today.
And he's leaving for Vegas tomorrow. Viva Las Vegas. All right, everybody have a wonderful weekend, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you on Monday.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. My favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Baller, with me as always. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddy, Mikey Baller. How are you, sir?
I have mixed feelings. I have great happiness because I am tied for first in the Tasty bracket.
Wow. I'm probably in last place.
I think I only have one that I got wrong, which was Clemson. And I have sadness because yesterday, Micron was up $5, $6, $7 after the close, and I was like, okay, thank you. We're finally going to get some reprieve here, and it opened down, and now it's just crumbling along with the rest of the market. So, yeah, a little mixed feelings on the day, but what are you going to do? What are you going to do?
The up move in Micron would have been nice for both you and I. Unfortunately, I was the only one that benefited from it. I had this nice little strangle that I took off this morning. That was one that I had rolled a couple times. I was short. I could pull up the order chains here too. I was short the 9100 strangle here. Started as the 75-110, rolled up on the puts twice, so we had this nice move higher. I rolled up there and ended up being a perfect trade. So sorry to hear that yours stunk.
Yeah, that is par for the course the last couple months here, but that's why I went to June with the diagonal spread. I went to June because May is just, I don't think, not enough time given this market that we're in. Maybe we see a little rally into the summer months, but 90 days to go. I need 10 points to the upside, and we'll be fine with it.
I do have an update on the Robin Maria bet system. We had, if you're wondering, you had
the big upset.
There were a couple good ones. I mean, Drake and McNeese were both really, really nice. The unders were really a tough battle. So the money, but everything we basically scratched on, we basically just paid out the juice, which is, annoying and is quite significant because, unlike our beautiful markets that we trade every day that are penny wide, they're 10 cents wide when you're betting, because usually your 50-50 shots are like minus 110 on both sides. So you're giving up 10 cents of juice versus 1 cent of juice in financial markets, which is significant. But for the spread bets, we went 40%, which is relatively good. I mean, like that's a pretty good hit rate. Because you're taking money line dogs and you're doing the 1, 2, and 3 seeds minus the spread. So your odds are right around that. So that was pretty decent. The first half unders were at 47% and the game unders were at 47%. So we basically went 50-50 on those, but we started off really strong. The first 6 games, we were 4-2 on the first half unders, and we were 3-3 on the game unders. So we had a pretty nice little start there. And we went on just an absolute debacle of a streak in those middle games. Basically had four straight games where the first half under and the game under both didn't hit.
Yeah. Well, yeah, I mean, I feel like if it's kind of a double down in some ways, because if the first half under hits, then you're in a good spot for the total game under. But if it doesn't, then they're just going to keep rolling with zero defense. And
Yeah,
it's unfortunate. I was watching some games and I saw some offensive rebounds, kick it out for three, and they'd make it, and I'd be like, "Ooh, Nick didn't like that one."
Oh, dude, there were so many like right at the end of the Clemson game that just completely useless layup. That was the over under. So that killed that over under. There was another one that was like really, really close. I think it was the St. John. No, we won St. John's. I think forget which other one. Texas Tech was like, I mean, all of the ones, they were all right on the number. A lot of them were. The majority. The only one that was like passed, in a big way was the Kansas-Arkansas game, which Kansas lost because they stink.
Do we have an update on Gus? Do we know what game he's going to watch?
Ooh, I do not know. He was there. Well, he'll be. Wait, was that? Yeah. So he was there for Texas A&M, which was Yale yesterday. They won. Texas A&M won that game. I do not know which games are today though, that are playing at that stadium. He's in Denver.
Got it.
Yes.
Got it. Well, I think we have a little layoff here. Actually, there's a game that starts in like 10 minutes here, but
yes.
Yeah, I've got Oregon, naturally. I've got Alabama, and I've got Vandy. We got Vandy beating St. Mary's, so that's my leverage spot. Basically, all my leverage spots, I picked teams that were like, it was like 7 versus 10 or like 8 versus 9. I was always going with the dog in those because those are the situations where like you can actually win the game in theory, unless you're McNeese just blowing out everyone.
Or Drake. Come on, those were both 11 and 12 seeds. So
I picked Drake just because of Drake the rapper. That's
not my middle name.
And your middle name, of course. Yeah,
that's
strong middle name.
That's right.
But yeah, MU teased us. It's down $9. I rolled that into a calendar spread. So I bought back the 0 day that was worthless. And I was going to go to April for $1.50 to roll to the 105 strike, which is where my long is in June. But I went to the April 4th and I saw that the 105 was trading for like 60, 70 cents. So I was like, okay, I'm just going to go to that one because I would rather have a faster decaying short option. Just in case we do get a rally, I would rather not roll into this sell-off and then have a loss on the short option 2 weeks from now. So giving up a little bit of premium, but there's so much can happen in 90 days. So just being a little more aggressive with my short option in the near-term cycle, giving up some of that premium because I know I have so much time and I can roll. I can even roll from the 14 to the 27. I could diagonalize it if we get a quick rebound. I could roll from April to May. I can do a lot with this position. So with the added time on the long option, that leans me towards being more aggressive with the trade overall.
Very nice.
Yeah, Tesla seeing a little rally today. I'm up $100 on that calendar spread. What are you? Did you close it?
No, I'm still holding it. I got the crab trade, so it's not moving as much because I do have risk to the upside, but holding it.
Yeah. Holding.
The only other things I did today, I closed out of the Coinbase call spread that I sold, and I bought in some risk on the GLD crab trade that I had to the upside. GLD having a little bit, or gold itself having a little bit of a downside move today, which is probably helping you as well. Did you do that put diagonal too?
In what?
GLD. Remember we were talking about it yesterday?
Yes, I did. Yep.
So that's got to be a nice little.
It's up 30 cents, but this is a long May, short April position. So if we get a continued sell-off here below 275, that's when I'll close it, because then it'll probably be closer to a $100 winner. But I do have that gold butterfly on that I took the risk out of and secured a 60-cent net profit overall. But I still have the 29.20, 29.30, 29.40 5-day butterfly in gold futures. So that's actually coming into play here, because 90 points could easily be taken out of this thing. It's not projected to, but we could see 3 more days of this sell-off. That would bring me right there.
Yeah, why not? Quick little market update.
Yeah.
And we can get into it. E-mini S&P 500 futures having a nice little bounce here. Only down 28. We got as low as 56.51. So we've had about a 75-point intraday range. Yesterday, it looked like we were rallying into the close a little bit. It looked like we were going to have a nice little bounce here into the end of the week, but no siree. A little bit of a chop back and forth for this week. We'll see if that ends after expiration, which is today. Big triple witching day of options, stock options. Monthly expiration, you have index options like SPX, as well as the futures, all expiring today. So big day for liquidity, no doubt. NASDAQ down 82. You got the Dow down 177 and the Russell down 14. So the Russell really the weakest of the group. I think, as you mentioned this morning, Tesla kind of being the only stock on the Mag 7 that is really bucking the trend here. Apple up a couple and change. Amazon has just looked like duty, and Google is just awful too. I mean, these are up, 10, 20, 30 cents. So nothing really to write home about there. NVIDIA as well, giving up yesterday's gains. Oil futures up 13 cents, 68.20. You got volatility futures up 50. They got as high as 2013 today. You have the VIX sitting at 1985. It's been very, very range bound for the better part of the last couple days here. Bonds down 7 ticks, as we talked about. Gold and silver both taking a tiny, tiny breather here. Gold down $23, silver down 52 cents. And then Bitcoin has been kind of stuck around this 85 handle. Futures are down 300, spot down 800 from the mark overnight.
Yeah, kind of an interesting market today with all the witches coming out.
Yes.
I was expecting to see more of a one-sided move, but I think the indecision of the market overall is still pretty apparent. The last 2 days have been just a digestion fest.
I thought today was our bounce.
Yeah.
You go into the weekend, you take a little volatility out, you have the sigh of relief. That was what I was hoping for today.
Yeah, and historically, the witching hours, triple witching, quad witching have been pretty bullish overall, at least a little bit. So kind of sad to see this not coming to fruition today.
Who knows? We still got some time left. I mean, the way this market just bounced like 20 points here in the last 15 minutes.
Yeah, it feels like they're trying really hard to bounce, but there's something behind the scenes, the Wizard of Oz behind the scenes that's keeping it pressed down.
Yes, of course.
But yeah, that is the only adjustment I've made today, that MU adjustment. If you have any trade ideas, questions, please pop them in the YouTube chat. I see some people in there already. Welcome. We're streaming live on the YouTube channel, so you can just pop over to Tasty Live. You'll see this video front and center. And you can click on the link that I've pinned to the top of the YouTube chat to get your Cherry Picks newsletter, free newsletter. I'll also throw in the Tasty Crypto newsletter because that one is coming out tomorrow morning.
Beautiful.
And you don't want to miss it. So yeah, let's get into it.
Let's do it.
Happy Friday to you both. Happy Friday indeed. How does a 32 strike short put in Hood expiring in May look to you?
Ooh.
Little Hood action.
I think I did a trade in here not too long ago. What did I have here? I did like a crab trade. I basically scratched out of. So I'm open to that. Which strike were we looking in May?
The 32.
32. Trades at $1.
Yeah, I'm going to bump it up to the 35.
I was looking at that too.
The 35 is where it bounced from. That really doesn't mean a lot, but the 35 level area is where it bounced from in March and also where it bounced from before 2025. So I would rather just take the directional lean. I can just roll this perpetually. $600 or $900 in buying power, right at the expected move, collect twice as much. So I'm going to go to 35, but I'm in.
I'm going to make it a little spicy here. I'm going to do, take a look at this here.
Build at $1.80.
There you go. I like it. I'm going to do the same thing. I'm going to sell the 35 put, but then I'm going to add the 45-50 call ratio spread. It trades at another like $1-ish in credit. You can move it further if you wanted to do this for like a no credit. You know, you could probably go. No, you can't because the 55 strike is the next one out of the money. So you're really stuck with this one. But so you're selling the put at $1.80, same thing Mikey did. And then you're getting this call ratio spread on for another $1 or so. It does add risk to the upside, but your risk is at like 58, 59-ish, which is, you know, essentially where we capped out at. Spent a couple days more to the upside, but for all intents and purposes, I would call that the high. And it plays into the skew. It will use a little bit more buying power. Mike, yours is probably at like $800, right? In buying power.
Yeah.
So you'll use a little bit more because you do have upside risk here. But I'm okay with that. I've got some capital ready to roll. So we're gonna do that.
There you go.
287.
Nike earnings trade gone wrong. Long the May 70 call, short the April 70 call, and short the April 70 put. Net credit of 50 cents. I mean, it's got to be a winner, right? You did the call calendar, long May, and then you sold the put. So it's got to be
in Nike.
In Nike, got to be a winner. Right? Maybe not. Net credit of 50 cents. I mean, yeah, it's got to be a winner. Because you're right there.
Yes, give me 1 second.
Maybe it was a loser this morning when it was down at 64, but right now it's got to be a winner. But yeah, and if you look at it in isolation, if you're trying to like keep the short put on,
do we have the strikes? What's the strike?
70. It's just 70 strike across the board. Like 70 call calendar with a short put at 70 as well.
Are we looking May, April?
May, April,
and the short puts in April or May?
April.
Okay, there we go. All right, so let's just look at the change here. So you can move one of the columns to change. All right, so $3. Let's just make it $3.40. The put we'll net this out to $3. So you made $3 on the straddle. You have the long put out in, or is it call? Did I mess this up again? Call.
Everything's calls.
Okay, everybody.
Except for the
everything's
short put.
Yeah. Got it. Short put. So you made $3 on the short put. You lost almost $3 on the long call. You basically should be at a scratch right now. You might be up like 30, 40 cents.
Yeah.
I mean, this was you kind of this was neutral to slightly bearish, and you got a little bit too big of a move to the downside, but you really didn't get hurt by it. So that's a positive.
Yeah. But yeah, I would close out of the call calendar and just leave the short put personally.
Yeah.
Coin put spread 150, 140 in May for $2.
I need an even bigger move.
Yeah.
I already have one that's in the money, so I think if I don't have a position, I would put one on here.
Yeah, $1.90, and you're in the earnings cycle, so I wouldn't expect to have like a home run on this, but you could get 50% profit if you get a decent rally.
Mm-hmm.
Don't mind it.
Might be one for you.
Yeah.
Scared?
I am scared. I kind of like the calendars here because like the diagonals are expensive.
Yeah.
And the calendars I really like in this environment because especially with the earnings announcements that straddle the monthly expiration. So like if you buy May and you sell April, you're getting all that April premium that's before the announcement, and you're buying the May premium that's more expensive, but you know that premium's going to stay there a little bit. So I think that's what I'm going to do. I'm going to do a...
the 175, 165 put spread in April. $3 and change. 30-ish delta. I mean, your break even is down at... basically the lows of last year. That's a little shot.
Yeah, I like that. Yeah, I was going to say
$600 in risk.
Yeah, I like that one. I was going to say long May. If you could do like the 210 calendar
for
you
can roll this into the earnings too if you wanted to.
Exactly. Yeah. So either one, but
I like it.
Yeah, I'm gonna do the calendar here.
All right.
I'm a calendar head right now.
Calendar Johnny.
Yeah. Calendar Johnny taking advantage of the earnings cycle just in terms of IV staying there and the ability to roll into it. All right, I'm working at 675. I'm gonna see if I get filled there.
Are we gonna go green here on the NASDAQ?
Yeah, yes, we are.
Are we saved?
Pump it.
Come on, baby.
I'm seeing some tickers tick green on my screen here.
I know, it's nice. Let's look at
it. It is my favorite color. I haven't seen it in quite some time.
FedEx getting murdered. That's not a good one.
Good thing I avoided that.
Yeah, Boeing, Tesla, Intel, Meta, those are the leaders of the S&P 100 right now in terms of percentage. But yeah, having a nice little rotation here. Beautiful.
Lisa has a 0-day Iron Condor and SPX. Sold the 10 delta on both sides. Credit was $1.15. I know I can have a huge loss on these. What amount of stop loss would you recommend since I can't be at a computer? $5 wide call spread and $10 wide put spread. I'm with George. I would not use a stop on these personally.
Mm-hmm.
But you're at 10 delta, so you're at. If you have the exact strikes, that would be helpful. But I mean, we
can put them on right now. I mean, it's probably right now it's marked at $1. So if you did this earlier this morning, considering where the market is right this second, it's got to be basically worthless at this point.
Yeah. I would say I would put in because you're at a 10 delta and you need a big move for you to get tagged, I would put in a profit target order.
Yeah.
But yeah, I mean, you have 5-point wide on one side and 10-point wide on the other. So using a stop, I think, would be tough there.
Really tough.
Yeah.
I think if you're putting this sort of trade on and doing this sort of thing, and you know that you're not going to be around, I think you should make sure that your size is well within your risk tolerance. Because, it's one thing to have a stop limit. If you have a stop market, that's it adds an even worse dimension to it, because who knows what you get filled at. You might have some crazy intraday move where bid-ask spreads widen out and you could get inadvertently, filled on a trade because it's a market order that you don't want, to get filled on. So I would avoid any of those on a 0-day trade and just trade very, very small.
Yeah. And another thing with the 0-day stops is that, if a spread goes in the money, it's going to be trading for 50% of its width. right? So if you have a 10-point wide put spread and you put in a stop at $5, that literally means that you're going to get stopped out the second it goes in the money, and you only need 10 points of a rally, which we just saw a 30-point rally in 30 seconds.
Yeah.
So you're getting stopped out right when you go in the money, and if the market reverses, you've just booked a loss for $400 on a trade that would have been a winner. So I totally agree with the sentiment here of just instead of using wider spreads with a stop, just narrow the spread and let it run, because the 0-day stuff, like there's so much craziness that can happen in a day, especially in the last hour of the day where you see a lot of activity. Like you want to give yourself the ability to have a profitable trade. You don't want to get stopped out and then watch it reverse, and then what you would have had would be out of the money strikes that are booked loss now. But that's just us. It's up to you at the end of the day. Let's see. Let's see. Palantir, April 75 put.
Okay, what do I have here? I think I put this on yesterday. I did a crab trade. So I am long the May 95, and I sold 2 of the 105s against it, bought one of the 115s to cap the risk on the upside. I did the whole package at $6.05, marked at 581. So I do have some long delta here. I did in my Johnny Trader account a iron condor, which I ended up rolling to like kind of a tight iron fly, but I think really that's the way to go here because of the capital requirement, $3,000 just to be naked here. But you could sell a pretty wide iron condor here. If you go to around a 30 delta, it's going to trade for $3 and change in April, let alone in May. If you go to May, you can go even wider, obviously, because you have earnings and obviously more time. So that's going to price in there too. But high vol for sure. I think spreads make sense here. So just to limit the buying power.
Yeah. And going back to the Lisa question with the stops, if you have a 10-point wide on the put side and a 5-point wide on the call side, and you put that on this morning, those wings are probably losing value now with the market flat. What you could do is just bring in the wings. So sell out of the 5-point wide and turn it into a 2.5-point wide, and sell out of the 10-point wide, turn it into a 5-point wide. And like that's where your stops probably would have been anyways. And now you can just let it go. You know?
You don't have 2.5-point wides SPX.
Well, there you go. So yeah, you're right. So you got to do. So it would have to be on the put side. You could you could bring in your 10, turn it to a 5, and that would be the stop.
Yeah.
Your kind of synthetic stop. Let's see. Neri, the P&L year-to-date margin interest, I'm not sure about that. I would reach out to support@tastytrade.com. They'll be able to confirm that. At what point should I roll down or out a profitable covered call? Should I be looking at the Greeks, implied volatility? It's really as simple as how much extrinsic value can you make remaining? And if you roll down, if you're rolling a call down in a profitable covered call position, you're probably not rolling it down that much. But I would just be careful of not rolling below your overall break even, which is where you bought the shares less your credit received from the call. So if you have the strikes, we can look at it.
Yeah. Just keep in mind that the short call caps your upside. So you have to kind of ask yourself, okay, is this value reasonable enough to cap the potential for a move higher above that strike. Like I'm sitting here, I have a SoFi position where my call is basically a 50-ish delta here, or I have two of them. I have basically two covered calls here because I have that in the money put that's basically 100 shares. But 70 cents relative to a $13 stock, it's enough for me to hold this for the next 27 days or hopefully a couple, 2-3 weeks, and this comes into 25 or 35 cents, and then I can roll it out. But yeah, I mean, at a certain point, it's risk that you're holding. It's risk of giving up the big move to the upside. If this was trading at a nickel, why would I hold that position? When you can have big moves in the market and you would miss out on it for X amount of dollars left in the call.
Yeah. And with covered calls, if you're seeing a value, if you're seeing the short call lose value, the only time I'm considering closing it and like moving it would be if I'm at 60-70% profit. But what I would also consider is like if you let it run and try and get a little more premium, if you eventually get a rally towards your call, that would be the time where I'd look to roll it out in time or roll it out and move it up a couple strikes and be offensive with it. So I prefer to be rolling covered calls when the market's rallying versus when it's selling off.
Yes.
Especially because covered calls don't have any upside risk.
Yes.
People talking about bread, buttermilk.
Were the ladies talking about that? Were Liz and Jenny talking about that or something?
I'm not sure.
Right.
What are your thoughts on capturing elevated volatility? Do you stay in April or do you go to May? My concern is that May is well over 50 days. So, yeah. I mean, your elevated implied volatility is always going to be in the near-term cycle to a stronger degree than a later-dated cycle. You can see that by the expected moves. You can see that by the implied volatility numbers. So, yeah. If you're trying to capture a pure IV premium, going to April will help you do that versus going to May. But May is still going to have it. It's just not going to have it as much on a ratio. If you were to visualize what is this total premium and how much of this total premium is implied volatility value versus time value, the April cycle is going to have a much bigger chunk of implied volatility value versus time value. The May is going to have a bigger chunk of time value versus implied volatility value. A leap is going to have way more time value versus implied volatility value. So that's kind of how you can visualize it. But yeah, neither one is wrong because you're going to get more premium going to May than April. And premium still, especially if you're like just selling a put, that premium's still going to decay on a directional move. So I think that also plays a role. Like, what is the strategy? Is it a strangle or is it a directional, neutral to directional trade, like just a short put or just a short call?
Well,
if it's just a short put, I'm probably going to May. If it's a strangle, probably going to April. Let's see. $57.80 call and $55.65 put from Lisa.
Okay.
So yeah, you're still got plenty of room.
57.80 call, 55 something, 55.70,
55.65. Yeah,
55.
So you would need a gigantic move for you to get tested here.
Yeah. And this isn't, you're going to, if you're $5 wide, your spread's even in the 1 day, how much cheaper is this spread? Is this total position going to get throughout the rest of the day? It's probably not going to move all that much. And that's because there's, you're still at a 1 standard deviation on the upside. So for this trade to manage early, you'd really have the market basically do nothing at this point in the day.
Yeah.
Now that you're still, kind of at a 1 standard deviation, this isn't going to move all that much. So I think, again, it just goes to the fact that you got to kind of, if you're trading 0 days and you're not around, you should plan to just be the size that you're comfortable with and let it go. I think that's really the only way you can trade these.
Especially these ones that are significantly out of the money.
Yeah. Yes.
But I do think because you're so far out of the money, the put side, you can move the 55.55 to the 55.60 for 5 cents and remove $500 of risk if you're really that worried about it.
Yeah. Or just close it. It's trading at 10 cents, 15 cents. But then again, you're trading the whole package at $1.15. So it's like any adjustment you're doing is eating away at if you're trading 10 deltas, you gotta be able to take risk.
Yeah. Let's see. MU and Marvel smash earnings still get taken to the woodshed. These 1K call diagonals are killing us. Do calendars. Sure. I mean, the calendars are hurting too, but the MU position, that is really why I went to June, because I wanted the ability to roll to April and roll to May, and we're still not that far away from it. Like the June 105 is still within the expected move of the June cycle, which is good. But yes, calendar spreads, certainly less risk, and you hedge your long options cost a lot more. If you didn't have an existing position, what would you do now in MU?
I think I might sell this put. 85 strike May put, $2.47. 52-week low is 83.54. So this gives you a break even basically right at the 52-week low, which obviously it can go through that. But if you like those sort of things, it certainly plays into that.
I just got filled on my coin calendar, 675 for the 210, long May, short April.
There you go. I did my naked putty, 85 strike.
Naked putty.
MU.
There you go. Yeah, 85 short put, or if I didn't have a position on in MU, I would do the same exact trade that I just did. I would buy the 95 June and sell the 105 April for $1.40 for $7 total, and do a $10 wide diagonal if you're bullish. But yeah, I like the short put too. Let's see. Nike position is post earnings. Got it. The 70 calendar and the 70 short put.
Okay.
It was a 70-75 diagonal with a 65 short put for a debit, and he rolled it to a 70 everything for small credit.
It's hard to track.
Yeah.
There's a lot going on.
Ryan's got the 65 short put in Nike post earnings.
Okay. What expiration do we know?
I do not know. Probably May.
I would guess. I mean, the April's trading at like 85 cents. Yeah. $1.50 out in May. I don't hate it.
Mm-hmm. What are you doing with your Nike position?
Nothing. I have a junky little call diagonal. I'm out about $147. I'm long the 75 strike in May. The weekly 77.5 I don't think is going to come into play today, so it'll just expire. And if we get a little bit of a $2, $3, $4 up move in the next month, I'll probably close it out and move on. It was a small little nibble of a trade in Nike, $2.32 of risk.
Yeah.
It's kind of a nothing trade.
What are your thoughts on a 1x1x2 put ratio on the E-minis futures? 45 days to go. I like
one
it.
by one by two. But are we talking about at the money? And are we sell, buy?
We are, I don't know. It's a put ratio.
You guys got to give us like long or short, like
one by one by two. I assume it's buying one, buying another, and then selling two further out of the money. I like put ratios in E-minis at these levels.
You're saying long, shorts? Because I'm guessing it's short, long.
Yeah, let us know, Lucky.
Yeah.
Let us know what you're thinking.
More info.
SPY has higher IV rank than IBIT, not higher implied volatility, but still. Yeah, that is interesting, actually. Yeah, Bitcoin's volatility has come down quite a bit.
Significantly.
It's coiling. It is coiling. Okay, so Lucky is buy one at the money, sell another further out of the money, and then sell two further out of the money.
So 1 by 3.
1 by 3.
Yeah, I mean these are, if you're doing these in E-minis, the thing that we've talked about ever since the Japanese yen carry trade kerfuffle is you have to keep your size in check here. So I don't care if you're doing 111, 121, 112, any of these trades where you're selling multiple to basically finance the closer at the money option. I don't care about how far you think they are out of the money. The biggest issue is the exposure to volatility and the margin requirement there. So let's just look at these. We'll say 40 days out. We'll go April end of month and we'll buy, and it doesn't matter like which strikes if you do I guess it'll change a little bit, but just doing it, buy one, sell one, and then sell two further. Let's say these are just junky to try and make this basically a nothing trade. You can move this even further out of the money, here, we'll do this. So you do this for a tiny little credit. You'll use 14,000 in buying power, doing this 112. This option, you should be going out and just buying the wings, because buying the wings for cheap, even if you're going to the 4,000 strike and you're buying a 1 delta option, this will save you when or if there is a big down move and a huge pop in volatility, right? I mean, if you're doing these, like this sort of trade was bread and butter and easy all of last year, pretty much. I mean, it was free money all of last year. And then you had the carry trade where you had volatility explode, and people that looked at this and said, oh, well, I can put on this trade and basically finance this long put spread, and only use 10 grand in buying power. That's no problem. These can go to multiples of whatever the buying power is. So whenever you're doing this sort of setup, 1 by 3, 1 by 5, 1 by 4, whatever it is, just keep in mind that this buying power is dynamic and volatility will have a huge impact on this. And if you're trading, I would per 100K, I would look at doing like one naked position.
Yeah.
Like so you're naked 2 here. So if I was putting this trade on, I'd want to have 200K account size.
Yeah.
I would not want to have you can put this trade on with 50K or 25K, but you can be, squeezed out of this and then, it's a problem. So that's my long-winded rant.
Yeah. Jonathan said he had these on August 5th, which was the Japanese yen unwind, and it was very scary.
Yes.
Buy the wings. And define the risk. Because again, and another issue is like the wings right now, like I'm looking at the 5,600 long, 5,400 short, and then a 5,300 short twice. And then I'm just looking at buying like the 4,500 for an example.
Yeah.
Like you're giving up a couple $100, but if we get a 500 point sell off in the E-minis, those couple $100 wings are going to cost you thousands of dollars.
Yes.
Just to
and
buy
you'll have to buy them because you're not going to want to exit the position because the position is going to be a big losing trade. It's going to blow up everything that you have. So buy them at the start, and then you'll be able to hold the position because really what you're playing for when you're doing these 1-1-2s or 1-1-1s or any of that is like you're really playing for this long spread to come. That's where your big money is at, is this long spread. The credit you're getting is just financing the chop, sideways, where if we go higher, you make a little bit. This is really where the meat of the position is. This is what you want to come into play. And so if you get that move, but volatility expands and it's a big move or it's a quick move, you get squeezed out of the position and you're like, well, shoot, that's what I wanted to happen, but now I'm screwed. So you got to buy the wings. Buy them.
Yep.
Do it.
Buy.
Save yourself.
Yeah, and Jonathan makes a good point. When you don't think about the debit spread of part of it when the volatility is happening, you might just be better off just selling one put at the low delta if that's what you really want. It's like a net credit that's $1,500. Yeah, that's another point too. It's like, yeah, and the nice thing about that is if you just have the short put, if you do get tested, you could buy back the short put, roll it out 60 days further, and move it 200 points lower.
Yeah,
or you can do, other stuff like buying wings to hedge the delta, et cetera.
Even if you're selling the short put, though, you got to buy the wing too. If you're in a smaller sized account,
you might as well.
You have to. You got to.
VIX hitting the lows of the day.
Beautiful. Crush it. Send us rallying into the close today.
Crush them. Yeah. It's kind of interesting because this is the second day where we are seeing a red day, but the vol crush is just because the range is so narrow relative to what we're used to. Like, I don't know what I'm looking at. Down 12 and just staying there? Like, what is that?
Yeah.
XYZ. May 5570 strangle. This is not a fictitious stock anymore, people. This is now Square, which is block. 5570 strangle.
It's always had really high margin requirement. I don't know why, but it's always had. $1,800. What are you thinking?
The May 5570 strangle, and then you buy the call in June at the 75 strike.
At the 75.
So you're looking for a rally.
Yeah.
Your longer term call hedges some of that risk to the upside, pushes it out quite wide on the strike plane, but
you don't get any of the buying power relief though.
Yeah.
Like I would almost go, and if I was doing this sort of trade, I'd probably go to May and buy like the 40 or the 45 strike put, and you'll cut your buying power pretty significantly for pretty cheap. I mean, even buying the 40 strike, cuts your buying power in half, and it only costs you 25 cents.
Yeah. So another thing you could consider is moving the 70 call to the 75 and just creating a calendar spread up there. That reduces your buying power by $400 or $500, and it removes all of your upside risk, basically.
Yeah, because you had when you had the 75, you have an embedded call spread here, so that's why your buying power here, you'll see it move. If we remove this here, so when we have just the naked put, you're using 1900 in buying power here. When you move this to the 75 strike, you're going to be using another $500 in buying power because you have that risk on the call spread.
Yep. So yeah, if you go with like the 55 short put and then the 75 call calendar, you have no upside risk and you remove that additional buying power.
Mm-hmm.
And that's kind of what you're playing for anyways, right? Your longer term long call tells me that you want this thing to rally, but you don't want it to rally into your embedded short call spread. So I would go with this type of trade instead. Should be illegal to use XYZ as a ticker. Yeah, I agree. I thought it was. I thought it was off the market because all the companies that are putting out educational content use XYZ. So now what?
Yeah, I don't know.
I really believe that they knew that educational content was XYZ and they figured that they could use it technically. So they switched it to it. So now anyone that searches for XYZ stock on Google gets the block treatment.
Conspiracy theory.
Yeah. So now what's the next one? ZYX?
Okay, E-mini's only down 10. Come on. NASDAQ down 11.
Yeah, this is the end. It's got to be the end.
Don't say that.
But yeah, it's been a big rally from the lows, that's for sure.
Oh yeah. They looked ugly this morning. But it looked ugly yesterday, and this has been a nice little churn. It's good. I've been doing exactly what we've been talking about for the last couple weeks now, of just taking stuff off that has worked, reducing size, reducing delta. All that stuff has helped because you've had two-sided action. It's been a trader's paradise here.
Yeah. And interestingly enough, well, I guess not interestingly enough, because we're in a triple witching scenario, but or quad witching, right?
It's the same thing.
One of the witches.
Yeah.
SPY volume 40 million today. IBIT only 11 million. We saw many days where IBIT volume was more than SPY and the Qs combined. So that's another interesting thing. I think that speaks to the implied volatility comment about SPY having a higher IV rank than IBIT right now. Are we bottoming? Dare I say it? Don't say it. Shh. ETHA nearing bottom or still drowning in crypto bro tears?
Yeah, it's been death. I wish there was options to trade here, because that would open up a lot of doors for us. But yeah, I mean, this thing is. I blame Ryan.
Yeah, I mean, Ethereum is just a dog. But
Bitcoin hasn't been strong either. I mean, it's been chopping around, so it's all moving in tandem.
Why do people get so euphoric the moment the market has an update? The trend and uncertainty is still sus. Sell the straddles into the vol and chill. That's a nice phrase. Sell straddles and chill. Yeah, I think it's just because everybody's long, right? Even if you're not trading, if you have a job that has a 401k, you are passively long.
Yeah, I mean the world is always long. Yeah,
the world is more long than short for sure.
Yes,
but yeah, I just want two-sided action. That's all.
Which
I want.
We've had, which is great. Yeah. I mean, this has been perfect. Changes in vol. I mean, this has been, vol up, vol down. It's great.
Yeah. And this has been a good, this has been a great rally. If you did if you put on a 0-day trade yesterday, if you put on a 1-day trade yesterday, took a little heat this morning, but if you let it go, you're golden now with the E-minis flat.
Yeah.
We're at the bottom of the YouTube chat. Do we have any? I don't think we have any earnings next week.
I haven't looked. Is that next week?
Yeah. Lulu is the 27th after the close, so Thursday. And Dollar Tree. That's pretty much it. Walgreens is nothing. Paychecks, nothing.
Oh,
so yeah, we're at the end of it.
Dollar Tree is DLTR, right? Yeah. Yeah.
And then one last question about the short put call calendar in XYZ. Instead of the calendar at 75 or 70, what about a diagonal long 70, short 75? Yeah. It's very similar. You're just giving up more of that credit, the net credit, and you're getting a higher profit potential to the upside. But that's really the highest profit potential to the upside setup, is if you do a diagonal spread with a short put versus a calendar spread with a short put.
Beautiful. That it?
I think that's it.
Cool.
Thanks for tuning in, everyone. If you have any other questions, you can always reach us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. Go get your Cherry Picks newsletter, totally free, pinned to the top of the YouTube chat. I'll drop in the Tasty Crypto newsletter as well right now. And yeah,
sign up for our digital collectible coming a week from Saturday.
Correct. Next Saturday, not this Saturday, next Saturday, it's going to drop at 10 a.m.
Yes.
Check it out. Totally free. It's all about manipulating, managing strikes with strangles, short puts, futures options, everything you need to know. It is certainly a gem that you will want to keep forever in the NFT form, which you can do. Go Houston.
There you go. NASDAQ green.
There you go. Look at that. That's it.
Boom.
I'm not going to jinx it. I'm not going to say anything. I'm just going to sign off. How about that?
Good.
Have a great weekend, everyone. We'll be back same time, same place, 11 a.m. Central on Monday. Peace.
Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Feel like your wardrobe is missing something?
Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
We are back. It is Friday, March 21st, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. It's been a yo-yo kind of OPEX Friday, Ilya.
That it has. There's not a whole lot to hang your hat on here, but it is certainly moving.
It's moving up. It's moving down. It's moving back up. We had $4.5 trillion worth of notional value worth of options that were expiring today. That's a lot of volume and flow to make its way through the market. In 5 futures this morning, we noted how the top of book depth in the S&P 500 futures was actually fairly shallow. It was only a few million at the time. So it creates a condition where the market can easily be pushed around. And we've seen that over the course of the day today, where you've had this movement where you sell off, you bounce back. Dr. J, who's going to be up next year, he tweeted out earlier that, today we're going to close green. He doesn't make the rules. Sounds in jest, but on an OPEX Friday, that may not be totally out of left field. So let's talk about this market, Ilya. We do need to take a brief reprieve of today's OPEX market action and quickly discuss what's on the calendar for next week. However, next week is a busy week. Busy week. Some items of interest that could absolutely move markets. In particular, I can't help but notice that we start to see some PMIs come out at the start of the week.
That's right.
PMIs, of course, kicked off this whole growth scare in markets back on February 21st. So tell me about these PMIs. I know that you have something that you're writing up about them that will be on the Tasty Live Traders blog.
It's there now, and folks can go check that out. And we did a good bit of talking on Macro Money about it yesterday. I'll embed the video in the article so you can watch it, you can read it. But you're absolutely right. This is really the main issue here, that we really started to have markets care about what's going on in Washington, D.C. once it showed up in this data. Obviously, the markets were not at all surprised, or certainly shouldn't have been, that there's a tariffs effort, that there is a spending reduction through reducing the size of government effort. We knew this. We knew this in November. We knew this going into November as far as the platform that was being advertised. And of course, by November at the absolute latest, we knew this would be the platform that would go into effect once the year started. So that part of it, the markets clearly took in stride. Mm-hmm. It's when the implementation started to show up in consumer confidence and most egregiously in business confidence data, these PMIs, that the markets went, wait a second, we are no longer cool with this. This was fine when it was an idea for policy and we were going to see how it was going to get implemented, but we weren't going to just freak out for the sake of doing it. But once it started to show up in the data, and this was the data that it really started to scream out of, that's where the markets got their growth scare. That's where stocks decided to respond. And the expectations for this data is not good. The baseline forecasts envision a contraction in the service sector in the U.S. You get a sense that that's going to give us net with still affirming manufacturing a scratch, essentially near flat growth for the U.S. In March. That's a third one in this continuum. January was bad, but the market said, okay, it's 1 month. Then February was worse, and markets freaked out, clearly. This has the potential to be another step in the wrong direction and a third step. Any 2 points make a line, but 3, now you have a trend. And that's, of course, concerning. It's interesting in the context of what the Fed said this week, because, of course, Powell made this whole song and dance out of it's only in the soft data, that is, the surveys. It's not yet in the hard data. But the more it shows up in the soft data, to Powell's own point, you're going to very quickly see it in the hard data, and then NFP is 2 weeks away. So you get to a place here where you could very quickly return to, oh my God, recession type of price action, really across the range of markets.
You make your way into the second half of the week. Retail sales from the UK might pique interest in the currency markets, as is the release of that inflation report they have come Wednesday. Do you see anything from the US side after Monday's PMIs? Should we be paying attention to the PCE, or do we, make the usual PSA that PCE, while important to the Fed, we kind of know the numbers, so probably not going to be a big move?
I don't think it's the headline number here, unless, of course, there is some sort of a wild surprise. The interesting bit here might be that the components of CPI, the components of PPI that took those numbers lower and gave us ostensibly this appearance of cooling and of resuming disinflation. A lot of those elements are not going to carry over to PCE. And so PCE might actually be a bit stickier, but the markets know this. And this is the whole thing with PCE. Once CPI and PPI are out, you can construct a really good PCE estimate. And so these numbers rarely surprise. It'll be interesting from an academic perspective to look at whether the innards of this data, like the CPI, speaking of hard data, suggest that the essence of disinflation is core services, because this is where growth is. And the implication is, if there is a weakening impulse to prices in the very part of the economy where prices have been sticky, because that's where the growth has been, well, then you do have hard data that's telling you that there is a recessionary something that's starting to come together. So this is going to be interesting, maybe not in terms of the immediate price action response, but if you were then, after this data, forecasting what the Fed might do next and how quickly they might do it, it would be a grounding in hard data to have a third consecutive month here where it's core services that's losing steam. CPI is going there, PCE is a little bit behind, but it would certainly tell the Fed, hey, it's not just surveys. You need to pay attention.
We turn our attention to these markets on this Friday with, again, a good deal of two-way action for stocks in general. S&P 500 here, now only off by 0.11%, currently sitting at 5706. We did hit a low of 5651 earlier, so a nice, healthy 50-point bounce. We are back above that one-week moving average. And Ilya, yesterday on Overtime, we were talking about the duality of this potential chart where it could be a inverse head and shoulders pattern, looking at a bottom, carrying you closer to 59.90. Or if we see the uptrend break here, it could be something more of just a continuation pattern, a bear flag, more or less, that's drawn here in the NASDAQ. But we haven't really seen a breakdown in either direction because we want to see what this daily close looks like around OPEX, and the S&P has erased all of its move to the downside. So what have we learned? What have we learned since you and I spoke at 4 p.m. Eastern yesterday?
We haven't learned very much. We've learned we learned yesterday, let's put it this way, that the markets were good with the Fed outcome for a day. We learned that they stalled the subsequent day because the initial response to the Fed was, if you are a sentiment bull, if you're a stocks bull, very encouraging. Fed comes out, says, okay, everybody, we see you. You're not crazy. You're not seeing things. This is not a mirage. Yes, sentiment has fallen off. Yes, we've noticed it. Yes, we are attuned to the growth side of our mandate just as much as inflation, and if we need to act quickly, we will. So we don't need to change anything now, but we are paying attention, rest assured, and we do see what you see. Okay, markets say, la-di-da, this is exactly what we wanted. Good. Bonds go up, dollar goes down, gold goes up, stocks go up. Classic, the cheap money is coming to save us kind of dynamic. And then the next day, it all stops. And we were talking about, okay, well, maybe this is just OPEX. People are getting ready to shuffle a bunch of money around. Nobody wants to have conviction until that happens. Understandable. Let's see what happens after the dust settles. And the upshot now that the dust ostensibly ought to be settling is nobody seems to be the wiser. And that's really interesting here because it's telling you that the promise of cheap money maybe has lost its luster in this environment because people don't think it's nearly enough and people don't think that there's a sense of urgency that is sufficient in terms of turning around the ship here on growth. I don't want to be too cavalier about making that assessment on a Friday, especially an OPEX Friday, because it's entirely possible that people are looking at this and going, you know what, if I was going to have conviction, you know what day I'm not going to have it? On a Friday, on an OPEX Friday, given all the weekend risk that we've been seeing. Come back to me on Monday. Maybe that's what's going on here. But if you thought that you were going to get some sort of clearing of the weeds and more clarity, no. And if you thought that the Fed was going to have some follow through with the markets embracing its dovishness, for now at least, no.
We look at next week's calendar. This should have been a good week according to seasonality, and we got a bounce-ish, maybe. Well, going into next, thus far in the first quarter, the best trading day, historically speaking, over the past 70 years, going back to 1950, is March 17th. The second best trading day for the S&P 500, going back to 1950, is March 26th. So we have that to look forward to next week. What's been a historically very good day for the first quarter. Maybe that's what helps get us off the mat. Obviously, we're not hanging our hats on a single number as such, but I think that's ultimately the case here. You know, I think if you have a position or you've been entertaining a particular view, there hasn't been enough evidence set forth by markets right now to push you one way or another. And I think I speak for both of us because you were short and got out and have been waiting for a rally to re-enter short.
Yeah.
And closer to the bottom, I got some long deltas and looking for a little bit more acceleration, but not seeing it. But then again, the position isn't going anywhere, so why would I cut it? So I'm kind of stuck right now, and I feel like you're kind of stuck right now too because you're not compelled to re-engage from selling without clear evidence that the downtrend is continuing at this point.
That's right. I mean, there's nothing to say here that inherently sort of compels one to go, you know what? I've seen what I need to see. This sell-off is resuming. There's just no way to know that here. The price action is not giving you anything consistent. And if you had to go by the last convincing thing you saw, which was the reaction to the Fed, as we just discussed, it was encouraging. The markets seemingly liked what the Fed told them. And so now the question becomes, well, ostensibly, this makes the path of least resistance higher for risk, lower for dollars, higher for bonds, at least going into the next piece of hard data, which, if you think the PCE is not a big deal, as we seem to, is NFP, and that's the first week of April. So, and at the end, obviously, the first Friday of the month, coming up on the 4th. So you've got 2 weeks from today to see sentiment melt up, basically around the simple and straightforward idea that the markets always enjoy so much, almost always, unless, of course, they don't, and be afraid in that case. Cheap money is going to come and save us all. We can shrug off pretty much any risk because as long as there'll be money tomorrow and it'll be cheap to borrow it, we can just roll the dice again. So why do we need to be worried about money we lose today? So this is a movie we've seen time and again. The Fed just needs to come out and say that the free money has arrived. And whatever fever that the markets are experiencing breaks. We saw this in very stark relief during COVID. We watched the Fed learn this, sort of how you implement it during the 2008 financial crisis, where we got these dribs and drabs of QE. The Fed looked at that and said, well, it worked to erase the panic, but it didn't give the lasting sentiment boost that we wanted. Next time we do this, it's going to be open-ended to really tell everybody the turn is nigh. During COVID, it worked like a charm. So we know that the markets love this and that they can put up with a lot if the free money is coming. So we'll see. But at the moment, you don't have that kind of logic building here clearly because the market is not going anywhere.
For the Nasdaq right now, we see the move off the low today comes at the swing low that we had on March 18th. That's right around 19,600. Meanwhile, the highs, you can see some lows carved out here at the beginning of the month. Swing highs that we've had recent days up closer towards 20,150, 175. Until we really see acceleration beyond those 2 points, it's a choppy sideways market with vol decompressing. So I suppose that's the good news for people who are in a situation similar to me. If you're short put spreads right now, the market just bouncing off the low and sticking here and not moving lower with volatility eroding, that's not the worst outcome. Obviously, a little bit more upside potential would be welcome, but at the end of the day, data burn helps. So the decline in volatility is definitely something worth watching. Do you think that we need to see another spike involved? We can go over the VIX real quick here, but do you think that we need another spike in vol here to get the markets moving to the downside, or could this be just orderly where you have a VIX that's 18 to 20 and we just continue to bleed lower little by little?
It could be, and that could be actually the more ominous kind of a thing because it would be more difficult to kind of manage. It would be the hallmark, as a matter of fact, of what is a lasting, protracted down move. If we take a look back at what we saw in 2022, obviously that was an awful year for stocks. And it began, as you might expect, with big spikes in vol. But then from, I want to say, April-ish, early May, spikes start to get lower. They start to come in. I mean, at one point, you're all the way back down to lower levels than you have now, 18, something like this. But the entire year, you're going lower on stocks. So vol can go up, vol can come down. But the trend was obviously and unmistakably an orderly decline. I mean, if we take a look at what's going on with the S&P over this period, it's not an elevator down kind of a market. It's steady, it's persistent, it marches down as a trend up would develop. Only this one is pointed down in an orderly fashion. And you could see that here.
Yeah, this is a rapid bleed out recently in stocks. That was a very rapid bleed out recently in stocks. Yeah. I keep our attention here on SPX because this has been the line in the sand. Like, do I want to just take a stab at here looking for a bounce or get really bowled up again.
Yeah.
You see swing highs that you have in July, swing lows that you have in October, early November. That's where we've been cut off on our rebound in the market in the last few days. If we take a trend line from the highs in October and then run them across here, 14th, 25th, and then January 13th, you see that there would be some overhead resistance on that trend line right in the same area. I see enough up here where if the market can get back into this zone, you start to actually feel much better about stocks. I know there's a lot of technical wood to chop and climbing to the upside, but then the path of least resistance in my eyes does just become higher once more. So SPX, let's get through like 56, let's get back above 5,700 here to feel comfortable and good about things. Obviously, today we're not quite doing that, although we are rebounding. The close today with all this trading volume. And again, it's 1 million contracts traded in ESM5 today right now. We have healthy trading volumes here today. We should expect two-way volatility over the course of the rest of the session.
And we are on support. If you look at where ESM5 is sitting, look at a 4-hour chart, 8-hour chart. That's right. You're right on sort of internal range support. So if you were going to bounce from a spot, this is about as good of a spot as there is. But of course, at the same time, look at the way that you have this structured here. It's perfect. You can see that there is a climb here off the lows, defined by higher highs and higher lows. You see that the most recent move to test the bottom of the range violates that continuation. And so now you have to ask yourself, well, what's going to happen here? And am I looking at a bearish breakout that's already in the making? And I would say you have to wait for that range support break. But if you do, and if you get it, it's going to start looking like whatever rebound was there is already aborted.
It looks like it could be a bearish rising wedge, which in context of the down move would be a continuation effort lower. So
and a classic one.
Right. You see here the low comes in at 59.79. So we're talking about another 2.5% of the downside or so if that were to transpire. I don't think we should completely rule that out. These markets are very touch and go down here, and the catalysts that brought us down here haven't dissipated. Although, I just need to point this out, the momentum in the GDP indicators has started to settle. Right. Yes. I'm looking at the New York Fed nowcast at the moment because their figure isn't as egregiously influenced by gold imports the way that the Atlanta Fed's has been, to the degree that like the Atlanta Fed's had to write blog posts explaining why their numbers are so weak. Yeah. The New York Fed nowcast hits a high of 3.12% for Q1 as of February 7th. It falls off to 2.67% as of March 7th. Now, during that same time span, that's when you have the Atlanta Fed GDP Now tracker going from 2% plus growth down to -2 and change. Okay.
Right.
Since then, though, the New York Fed nowcast has bounced back to 2.72%. So for the past 2 weeks, after the digestion of those poor figures that ultimately led to the big decline in all these growth indicators, the ensuing data since then have not been pointing to imminent recession. They haven't been pointing to an imminent slowdown. Things are slowing, but are we looking for a sharp decline? No. And to that end, the Atlanta Fed has started to, again, tell us, if you were to remove the gold imports from the trade figures, right, we were to set that aside and go, this is really unique, a one-off, it's not something that we should necessarily be paying attention to, where would the GDP tracker be? And it would be in positive territory closer to plus 1%. Not exactly something that makes you scream. It's not great. It's not the 2 to 3% real growth we had, but it is not recession. And if it's not recession, then the Fed doesn't need a cut for, well, thankfully, a good reason. So maybe the market can hang its hat on that, but we need much more. And next week is the 1-month anniversary of the PMIs that did this to us, that helped produce this decline. So that becomes a big one. Yeah. Those are weak again. Next week, the lows that we just had here near, 55, 59, I think we're going to see them pretty easily.
Yeah. I mean, if the PMIs give us a third point in the trend they've been developing, it's going to be very difficult to write that off. And the sense of urgency that the Fed had is going to become questioned. People are going to start to say, well, look, we know it's survey data. So for a month, okay, fine. Okay, for 2 months, fine. 3? No. This is different now. PMI data is so closely watched because it has a very strong historical connection to the trend in GDP. And when you look at the composite PMIs, and people composite PMIs so closely, is because it is a great forward indicator of GDP. GDP is a quarterly release. It's notoriously lagged. It's notoriously late. So people need a sense of the business cycle that's higher frequency, yet reliable. This is why the PMIs have been looked at as so valuable. They offer exactly that. So when you get 3 months of this, it's like, well, okay, so you've given us 3 months of bad data. That's a quarter's worth. This is coming into the hard data now. If you get that third month, pretty much as a fait accompli. So if that's what's going on, how do you not see a lot of dovish repositioning at the Fed? And how are you not concerned that there is a global downturn? So yeah, if you get a really weak PMI result, weaker even than what is expected, it's back to the lows we go.
Russell 2000 is leading to the downside, off by 0.7%. Small caps not having a good time. Before we turn our attention to bonds, just a quick, brief look at what's going on a sector-by-sector basis. Ilya, on overtime, we like to track 25 different sector ETFs. If you're a bear, you probably like what you see because 21 of the 25 are in the red right now. Yes, they're all red, right? But it's not exactly steep losses. Nevertheless, who's the big losers? It's actually the month's big winners: GDX, GDXJ, XME, XOP, OIH, XHB, home builders, home construction. The rate-sensitive stuff that did well as rates came in, the metals and mining, those are all being sold off today, which we're going to get to with gold, with silver in a little bit. On the flip side, do we see growth proving ultra-resilient, getting some back? Not really either. So it's a mess. It's a mix that's still messy. Nothing that you want to really write home about. So we're not going to write home about it. We're going to move on to the bond market here. Bonds were up again today, but they did lose their gains. We head over to what's going on in the ZN side of the world. 117 and 14 ticks right now. Earlier in the session, very annoying. Earlier in the session, we're back up to 18.6. So we now have these big wicks 2 days in a row. Yes. And quite frankly, this is not the only time this month that we've seen this. Over the past 2 weeks, we've flashed up into the 118 area only to be knocked back down immediately. What do you make of this? Is this a local top now for bonds?
I don't think you can confirm that here. I think you just have to have the intestinal fortitude to look at this market and go, the low was in January. Since that low in January, we've been stair-stepping higher. We have not violated that dynamic. The trend is up. We're inching up off support, a support that was former resistance and very clearly, very obviously got tested multiple times and held. The highs off the last test have become higher. The lows off the last test have become higher too. This is a really annoying, choppy, grinding uptrend. And the thing to do with uptrends is to stay long.
I'm still in the short put spread here in ZB. It seems prudent, particularly with those PMIs coming out on Monday.
Yeah.
We don't need to overthink this right now. No. The recession fears are there. When did we start to see the turn in the figures over the course of the month? They were the GDP figures, the trackers that we're looking at, they were sliding coming into March. They were sliding into the middle of the month. So I don't think that we can say that we're expecting a blowout number to the upside. Although,
No.
again, the non-farm payrolls, people are talking about imminent recession risk, a negative number, and then it's good and it's above the break-even rate that you need to see the unemployment rate stay below the Fed's year-end expectation. If that were the jobs growth pace,
It was weaker than
year.
expected, for what it's worth.
Yeah,
just not.
It was
just not anything crazy.
Right.
Well,
So
within kind of normal month-to-month oscillation that you might see revised very quickly into a different kind of thing, but with the passing of a single month.
Right. So lots of false starts. I think it's prudent to remain long, though, as well.
Yes. And this has kind of been my song and dance, both going into the Fed after CPI and after. That who knows what stocks are going to do? Who knows if stocks are going to like the idea that the money is going to be cheaper as they have before, or if they're going to adopt what happens when you typically have the real kind of recession risk actually dawn, which is the markets stop responding positively to the promise of cheap money until it actually hits, because what they perceive is a real bona fide downturn. And they need to actually see the action. So, unclear if stocks are still going to be willing to embrace cheap money as an idea to rally onto itself. What's clear in my mind, though, is that if the Fed is resistant and the data is bad, that's more easing that's going to get baked into the long end, because the markets are going to say, okay, well, if not now, then later, and if later, then faster and harder, because you'll be behind the ball. If the Fed embraces the need for easing sooner, well, then the whole curve shifts, because then we are in the middle of a cutting cycle that's accelerating because the Fed has agreed with the markets that there is some sort of pressing growth concern. And that's just a level shift in rates. So either way, assuming that the recession scare stays and doesn't suddenly evaporate as it did in August going into September, when U.S. economic data rapidly turned, where the markets were afraid of gathering recession from about April until mid-August, and then in mid-August the data turned and it went away. It was a false start. Unless that's what this is, and it doesn't look like it, but unless that's what this is, either way you find your way toward lower long-term interest rates.
I couldn't help but notice amidst all the talk of the GDP trackers, not that the Fed cares about inflation anymore, but our March inflation tracker from the Cleveland Fed is now coming in at negative. There's a negative sign there flashing in front of the month-over-month reading. Yes, it's flat, but we're beginning to see that they're tilting on the other side. Disinflation can be good in bits and spurts. The Fed doesn't want disinflation. It wants CPI that's like a 0.2% month-over-month run rate. It will not be satisfied with this, and this is the kind of thing that can bring forward rate cuts. So I suppose if inflation falls off and there's uncertainty around the economy, that could be a reason why the Fed starts cutting, but they can't do anything until inflation actually dissipates, given that what has now become the annual seasonal bump at the start of the new years, where January and February have produced these hotter than expected readings. In any event, we see here 117 and 14 ticks in ZB, ZN, only off by 0.04%, still hanging out above 111. It still looks like it's a bull flag to me here. That's been forming up. It's taking a little bit more time to just get going, but hugging that 1 month moving average, the yellow line here continues to show constructive price action, and vol has come in. It's pretty cheap if you want to get some exposure right now, not in bonds per se, because I mean, it's 28.4 IVR, but in ZN, which is half the contract size of ZB as is, if you're looking for upside exposure, this isn't a bad time to put some of that in your pocket, particularly if you're an equity market bull. Right? If you're an equity market bull and stocks are taking another leg lower, it's because we're worried about growth. If we're worried about growth, bonds do pretty well during that situation. So I think Z and ZB are great to have, particularly if you're trying to bottom fish in ES or in Q.
I mean, I'm there. I have exposure to the long end. I've had exposure to the long end. As I say, it's grinding, but you have to, I think, take a step back and go, yes, this is not the way that you wanted this trend to unfold, perhaps. You perhaps wanted it to work faster, but this is the bond market. You have to let the bond market do its thing. It is slow and meticulous by its nature. It is very, very liquid. It is not nearly as temperamental as equities or a lot of other assets, certainly not as temperamental as commodities. It's much closer to how currencies behave. It's slower, more kind of deliberate in what it does, but when it rips big. So this is one of those things I think you just have to settle in, let the price action guide you, and just walk with the market.
Let's take a walk over to what's happening in metals right now, which are having a pretty uncomfortable kind of day. Ilya, it was another one of those situations where you see this pullback and volatility start to transpire. We run into those two significant technical levels, the extension of a triangle that we have June, October high, November low, that's 30.39. More recently, the January, February swing triangle, that's about 30.60. We peek into that area, we pull back off of it today. We are still above the 1 week moving average, however. That is the line in the sand for me to see if we're going to have a chance at perhaps a little bit more of a pullback. That's coming in right at 30.22.80. So not exactly the best bit of price action, but it's going to be a close at what will be the highest weekly close ever for gold prices. Silver, again, you see this drop off in vol as we came into a local top once more, and then silver gives it up. So I think this is increasingly becoming the tell here. When we go into these rallies, we're seeing that volatility is dropping down into the rally, at least over the past few weeks. And then gold and silver haven't been able to sustain the gains, at least immediately. This is a pullback to the 1 month moving average here in silver. It's an area where we've had some prior swing levels established, particularly on December 12th. That's a bearish outside engulfing bar key reversal high. And that's exactly where the 1 month is right now. So am I going to give up any of my longer-term metals positioning? No, because this isn't entirely unexpected on OPEX day, where these have been some of the leaders this month and this year so far. I'm just going to press on. But the market's unfolding in a manner that's totally seems like it's behaving in a way that's consistent with how it's been behaving in recent weeks and months, which means that the underlying fundamentals are well moored. So no reason to get off the train.
I agree. I think when you look at this, especially in the context of everything else you're seeing in markets today, stocks aren't really making a big run. They're off the lows, but they're kind of soggy and fractionally underwater. We'll take a look at currencies in a second, but the upshot there is that the dollar is a little bit higher, mostly. Bonds tried and now are, as we just looked, fractionally underwater. It's almost as if the dovish Fed trade is digesting in markets. And gold, obviously, and silver too, but really gold was out in front on that idea. It had a much more convincing move going into the Fed than did stocks, than did the dollar, than did a lot of other markets, bonds. Gold really seemed to be screaming, the market is positioning for the central bank to give the markets some dovish crumbs for them to hold on to and to get a sense of where the Fed is tilting in all of this. Obviously, we already knew that the Fed was cutting rates. That's not an issue. The question is, are they going to do more, and are they getting worried? Have they taken stock of the data, and are they dismissing it, or are they saying, yeah, okay, this is a reason for us to sit up in our seat? And they very clearly said the latter. So if this is just a Friday digestion thing, where the markets go, right, the main thing that happened this week was the Fed. Okay, we're through OPEX. We're not going to throw ourselves directly into a new thing. And the question now really is, what have we learned lately? Because if gold was already pre-positioning for the Fed to be dovish, and now there is no more speculative interest in that idea because event risk has become reality and there's nothing else to say from the Fed until there is more data or until a Fed official speaks. That's next week. We don't really have much to say, so maybe there's tactical unwinding here. And the markets go, right, there's just no more speculative impulse in this. All the speculative impulse was spent on Wednesday. And indeed, look at where we've been since Wednesday. Nowhere. So you get this sense with that shooting star on Wednesday that gold heard what it thought it would hear, no more, no less, and stopped. And since then, we're coming back in. That in no way challenges the longer term case for higher gold for me. But it does suggest that maybe there is a period of speculative digestion where we're looking for a new catalyst that takes us back a little bit. And that's a good thing because I would love an opportunity to get back long. I got out of this much too early. In fact, that break above 2850 or so, I was already out of the market by then. I was getting in around 2600, give or take, 2650, near the lows of the most recent rise. And I got off the train way too early. So I'm going to be looking to get back in. Any pullback here is something I'm looking at as a place to buy as soon as whatever shakeout occurs appears to settle.
If we're looking for price action to unfold in a similar fashion, we see that we have the breakout through the former all-time high. We set a new one, we pull back, and we treat that former high as support. And then we bounce up to a new high. So if we're going to continue that kind of cadence here, a drop into 29.75 or so, I mean, give us another $50 to the downside, another 1.5% in gold. And you have first blush, probably a convergence with, again, that yellow line, that 1 month moving average somewhere in that area. And that's going to be really potent support up front. Because if you start to lose that over the next few days, you also start talking about losing the uptrend from the late December and February swing lows. And that's a multi-month uptrend where, okay, then you think about 2850 coming back into play. Right? So this is, there's areas to be constructive still. I'm still constructive. Obviously, I'm not changing my positioning. I don't hear no bell. But if there are technical areas to look to, we have them close by, and we shouldn't be afraid of, again, vols coming in. Gold vol coming in as we go into a high has been something that precedes a near-term top from forming. We had seen this in recent days where gold vol was falling off as we were rallying into a high, and now today the bill comes due. Copper ever so quickly down by 0.05%. It's another day where you have this move back into the 1 week moving average and it's immediately snapped up by the market. We do put in a lower high today. We have a lower low than yesterday. So maybe it's a sign of some weakness here in momentum. I'm out of any positioning right now. I'd like to see a pullback closer to the 1 month, which has been viable this year. This just seems too far too fast. And with an IVR of 41.6, someone who's not in the business of selling calls in metals, I just need to wait right now to get a better price. So I think that it's time, with 15 minutes left, Ilya, that we make our way over to the energy sector here, which I was trying to figure out, is it uninteresting or disinteresting? Disinteresting and uninteresting have different connotations. Uninteresting is kind of like boring. Disinterested is like doesn't care. So we're going with energy is uninteresting today. It's not that I don't think energy. I don't think that energy doesn't care about OPEX. It's just Oil's up by 0.46%. Perhaps an important turn developing since March. We can call it March 5th. Every session we're closing between 65.50, 67.50 in CLK5. Yesterday we break through that little band of $2 range closes. Today we're off the lows, off that 1 week moving average, moving back above the 1 month, moving back above an area where the market's been effectively swinging against. Now, are we completely out of the woods? No, we have to get the uptrend back in place from the December lows. But even so, Ilya, what to do here with oil? It's still at 22.2 IBR. You can sell the put spreads against recent swing lows, but vol is starting to come back in. I suppose if you've been doing it, selling iron condors around 68, 70, 72 when we're up in this area, it's worked out. It hasn't been the most attractive trade from a risk to reward perspective, in my view, but it's been working. So I guess if you want to avoid the equity market noise, there's something to do in crude. It's just not my cup of tea right now, but there has been something to do, and it has been working consistently. So if you are one of those people, don't ignore CL right now, as boring as it would appear.
I mean, for those of us that like directional opportunities, this is no man's land, because you've bounced to former support become resistance. You're sitting directly on it. This market has been stair-stepping down. Look at what happened the last time we did this back in February. We had a stair step. We got under. We retested. We made a new low. Is that going to happen here? We'll see, but there's nothing that says that it won't. We keep retesting the underside of the preceding support, the preceding step, and it's wick, wick, wick. We try to get up there. We stall on the line directly. This thing cannot break back over. So if you look at, let's say, like 68.50, something like that, that is basically a line in the sand here. And you're getting repeatedly told by the market, I don't want to. Day after day after day. At the same time, you're not getting a convincing reversal lower, and maybe that's because of what's happening with the digestive nature of sentiment. I mean, S&P tells you sentiment does not have conviction here. Not yet. It's still figuring itself out. If crude oil is primarily motivated by a growth scare, as equities have been, and as a cyclical commodity like this you might expect would be, this is perhaps a similar kind of indecision as what you have in the broader kind of risk-on complex. A similar kind of thing to what you see in the S&P or the NASDAQ or the Russell. And that basically tells you, look, just as you wouldn't want to make a bet there, you don't want to make a bet here because the bet's the same bet. Is the market going to be worried about recession? Or are they prepared to say, whatever is coming, as long as there's cheap Fed money, it's okay? So, for me, this can keep climbing. It's okay. I am looking for it much as a selling opportunity as I would in stocks. In stocks, I'm still open-minded to the idea of getting long for a tactical position if the risk-reward makes sense before I flip to my longer-term bias. Here, that's not on the menu. You're already up against immediate resistance. There is terrible risk-reward then to enter long. There's no confirmation to enter short. I'm sitting on my hands.
Hand sitting indeed. If we get a move a little bit higher from here over the range that we've seen, I mean, we're looking at effectively, we're not quite there, but we can pull this back a little bit more. We'd be looking at there we go, 52-week range now. The Fibonacci's of the 52-week range. A little bit higher puts you up at the 618. Actually, does any of this matter? It's just a sideways range, Ilya, right? Yeah. If you get a rally into 70, you're at the midpoint somewhere that you could look towards for a short iron condor position. What bothers me, right? If there's geopolitics in the background, I'd like to see a little bit more volatility. It certainly seems like there's more geopolitics going on right now.
Yeah.
Forget Russia, Ukraine, but Israel's back in Gaza. There's been tensions with Iran. We're doing more with the Houthis. maybe some of this grind higher in oil as a result of supply chain fears, but you wouldn't see it in the vol. There's no evidence of any geopolitical risk making its way through. I wouldn't necessarily want to just sell calls here. I wouldn't fade off this move in oil just yet, right? Don't like running in front of a geopolitical event risk train. Natural gas.
And by the way, if you wanted to look at the world's other big oil buyer, China, lots of conversation, obviously, if you end the conflict in Ukraine, what happens to China's ability to buy cheap oil? Everybody's been really focused on the Fed. I'm not sure how many people have noticed. Chinese markets have fallen off a cliff into the end of the week. Both mainland and in Hong Kong, where you've had some strength recently. And
China shares are down 4.1% this week.
Yeah, I've argued it's the most obfuscating of strength in let's say like a large cap ETF like FXI, because of course it's Hong Kong and looks like it's mainly powered by money running out of China rather than any kind of optimism. But you see that here and you go, okay, this is not a good story for energy demand, because so much in China has been hinged on this idea that finally Xi Jinping and company are going to see the light, and they're going to understand that they're not going to convince people to engage with demand until they engage with demand. They need to go out there and say, we are buyers. And if you're not a buyer with us, you've been left behind. This was why the stimulus in the U.S. during COVID worked so well. And you can have 1,001 arguments about it was inflationary, it was too much. Yeah, maybe so. We don't live in a world where a crystal ball exists. But the reality is you spent a bunch of money, you pushed through demand in an economy that didn't have any, and what could have been a catastrophic depression because you turned off the global economy for at least, let's say, half a year, most generously, wasn't that. And China hasn't learned this lesson, apparently. So if we're starting to see pessimism creep back in because they're still not serious and all the hopium dissipates, I don't know how you extrapolate that much upside to crude or to copper, for that matter. Nat gas, though, is an animal unto itself, and it cares not for any of these things.
Natural gas is at my personal line in the sand. I picked up a short put spread the other day when we got to that 1 month moving average. Yesterday kind of threw that plan into a wrench. I'm seeing if we can hold above 4 here. The low is $4.02 on March 13th. If we can close above there, I'm going to stick with it for another day into next week. But I'm not liking that price action for sure. And it looks like it's a change in the trend from what we've seen. So this could be a quick in, out, 20 minutes in and out, and it kind of just takes the money from us kind of trade. But that's fine. It's part of the game. We move on to currency here, Ilya. I find that the currency markets are rather uninteresting today. Using that one properly. 6J here is the one that I have my eye on the ball, only because it's trying to hang on to its 1 month moving average the past few sessions, which has been a great piece of trend support in recent weeks and months. It's not exactly holding up there. The euro, on the other hand, we just found out today that the new chancellor, of Germany, has struck a deal with the Greens to get this 1 trillion euro spending plan passed, along with a whole host of constitutional amendments that will be put into play to remove the debt brake. So talk about buy the rumor, sell the news. We have this all priced in already. So the headline's not exactly moving the market right now. And on an OPEX Friday where traders are taking profit and repositioning based on what's happened in Q1 so far, the euro has been a high flyer. It looks like it's being sold down a little bit. I don't know if it's much of anything to write home about.
No.
Just going into next week, though, generally with 1 minute to go, what do you think about what's happening in the broader U.S. dollar here? Are we carving out a local low? Has everything else maybe carving out their own local highs?
Maybe, but much as we have everywhere else, we don't have confirmation. At this point, we're scraping bottoms in these anti-dollar moves. We're scraping range consolidations. We see it in the euro, we see it in the pound, we see it in the Aussie, you name it. We're basically in some sort of a digestive range where we're consolidating on those currencies the losses that the dollar has sustained, and the dollar is trying to make something of it, but it's not making it out of those ranges. And so to me, this looks like consolidation. There's every reason to think, I think the dollar has more room to fall. The BOE was a little bit more hawkish than expected in the voting pattern this week. We get this news out of Germany that you just mentioned. I think there's every reason to think that yield differentials are going to keep shifting against the dollar. And in that environment, I think this is digestion. If we got a larger bounce, I would get out of my exposure and wait and re-enter. I don't even see a reason to do that here.
Fair enough. We look to the calendar for next week. For Monday, we find ourselves having a glance at those PMIs. Ilya is going to talk more about them, obviously, on the macro money video that you can see if you go over to the Tasty Live Traders blog. You can read his write-up about the PMIs, why they matter. These are the ones that kicked off the growth scare back on February 21st. Incidentally, the last OPEX Friday that we've seen here. So Monday.
Be wary, folks. Be wary.
Monday's going to be an interesting day. As we typically do at the end of every one of these shows, a brief bit of education. Head over to tastylive.com, top banner, learn beginner futures to find this great coursework put together by the fine folks on the Tasty Live research team. Ilya, all futures contracts have an expiration date. So if you are a single stock options trader, this is not necessarily new to you. Less than 2% of all futures actually go to expiration. So folks like you and me who are trading gold or oil, we don't need to worry about surprising our spouses with barrels in the driveway one afternoon. That's not where you want to go. And typically the Tasty cycle is 45 in, 21 out. You want to exit your position before you roll over the decay curve. So taking delivery is never really a consideration that you ever have to worry about. At the end of the day, though, we have products with multiple months out in advance for enhanced liquidity and opportunities. Always check the open interest and volume of the strikes that you're operating in so that you have peace of mind that when you're getting into a market, you can also get out. You don't want to ever Hotel California yourself into a trade where you're welcome to get in, but you can't leave. So
Nice.
Go learn about futures expiration, tastylive.com, top banner, learn beginner futures, or click the link here at the bottom of the slide. It will take you there directly. Ilya, you and I are done and dusted, but we have another fun week coming up next week. Tony's out, so you and I are going to be doing some last call work with Tom. We'll see everyone then. You'll be back for first call on Sunday. We'll see everyone for overtime and Futures Power Hour. But until then, good luck trading. Tasty Live programming continues next. Dr. James Schultz with From Theory to Practice. See you soon.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition, the extra long show edition of what it is that we are trying to do. Yes, that is correct. We are going all the way to 3:15 Eastern today, 2:15 Central. So if you have a question for me that's been burning through your skull, you should drop it into the chat box, and I will try to get to as many as I can right around the halfway mark of the show, or maybe about 20 or 25 minutes into the show. But thank you guys so much for watching the show. Thank you guys so much for watching all the shows that we have on the network, because it really only is because of you all and all y'all for my Olive Branch, Mississippi crowd that might be watching the show, that we are able to do what it is that we do. So thank you guys so much. If you're watching over on the Tasty Live network, and it is real time, it is around 2 o'clock Eastern on Friday, March 21st, Merry Spring Equinox to all of you out there who might celebrate, then I would pop on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. You can celebrate, you can commiserate if you're a bull, if you're a bear, if you're both, if you're neither. Man, it is a good time had by most. But Josh, bring us into the market. Man, I don't even know what's going on anymore. You mean S&P is down 9 on the day. They were just a tiny bit green a couple seconds ago, I think. You've got the risk-free instrument also down 9 on the day. That would be the NASDAQ futures, extremely high-risk product. But we know it more as a practical application of a risk-free instrument, from the standpoint that it is not risk-free at all. The Boomer is down 11. The Russell 2000 Futures Index down 10. Still a little bit of red on the screen, but man, it was a lot more red earlier this morning. And then when the market opened, we're going into, options expiration. We're going into triple witching and all that kind of stuff. And so the markets have been, they were weak overnight. They were weak into the morning. And then they caught a little bit of a bid, caught a little bit of strength here just recently. And I actually tweeted out, let's see, this would be maybe 10 o'clock or 9:30. I can't remember. I tweeted out when the market was maybe down 45 or 50. And I said, look, we're closing green. And look, I don't make up the rules, man. This is not my call. This is just the way it has to be. Right? I mean, it's so obvious. I don't know how you could possibly not see this. And so we'll have to wait and see if we are going to close green. But the fact that we even touched green, I'm going to go ahead and take myself a little victory lap on that Twitter call. So that's 2 Twitter calls in a row now. That is the longest streak of our career. And so yeah, market's still a little bit red, but we're actually going to take a real victory lap in our gold butterfly, because that guy paid off. Can you guys even believe it? So this morning when the market was, when the market was down and everything was weak and whatever, like the metals were super weak. Like gold was crashing, silver was crashing, even my platinum bros out there, y'all were having a struggle time on that guy too. And so our butterfly paid off nicely. We're going to look at that guy here in a couple of minutes as well. But you got bonds down 10 ticks. You've got notes down 2 ticks. Excuse me. Yes, you still have gold down 23, but I mean, it was down another 20, I think. I don't know that we got below 3,000. In fact, I don't think we did, but it got really close. I think it got down to hold on, let's actually take a gander at this, because we've got so much time and we've got the extra wide lanes, and it's let's go ahead and enjoy it. If I go into gold, so you can see here that the low for the day, it got down to 0410. So 3004.1 was your low on the day. And then, Peter Schiff rallied up all of his troops and he started buying that dip, and he bought it back to 30.20. Now, earlier, I guess it was overnight or whatever. I mean, you had, gold up to 30.65, it looks like. And so it's been to much higher highs than where it is now. But still, I mean, beggars can't be choosers, man. I mean, gold over 3,000, for all the gold bugs that might be out there, might be watching the show. I mean, y'all deserve yourselves, some victory laps in your own right, for sure. But our gold butterfly actually paid off. I can't believe that. We're going to talk about that here in just a couple of minutes. We got volatility is up a little bit today. Volatility futures up 20 cents. You can see they were up a lot more earlier when the market was much, much weaker. Volatility futures right now are 1955. They were up to, 2013 or so. And then you've got the old VIX, the old VIX is actually down on the day. So that's a little interesting, down 10 cents when the VIX was up to 21.14. So it was up about $1.50 higher than where it is right now at 1968. And again, if I go into the markets here, if I go into ES, you can see that, markets are down 13, 14 right now, which, that's not amazing, I suppose. But, man, it was a whole lot worse just a little bit ago. You can see the low on the day. Hold on a second. The low on the day, 56.51. So it was just a clean 50 points lower than where it is right now. And so ES down 13, that might as well be green. Right? ES down 13, that might as well be green. That's very similar to Uncle Jay wears the purple tie. Out with the black, you got to hang back. He goes with some gray. It might be okay, but you just don't know for sure. Same thing with ES being down 13. It basically feels green. If we go to NASDAQ, you guys are in for a very long show today, by the way. If that's how it starts in the first 4 minutes, that is not a good sign. But if you look at the NASDAQ, you've got 90. So we were just just a little something off the top. Nothing crazy. We were 250 points lower than where we are right now. You've got NASDAQ down 20, basically just knocking on the doorstep of UNST on the day. It also was a little bit green just a few minutes ago. I think as we were starting the show, or maybe right before the show, it kind of poked its head above the Mendoza line there and was green there for a second. So we'll have to wait and see. This is the most important OPEX in the history of OPEXs. So how is it going to close? How are the next 90 minutes or 105 minutes going to go in the old stock market? I don't know, but you can only find out here on the Tasty Live Network. You can't find this information anywhere else. Like looking at NASDAQ futures, looking at ES futures, this is the only place where you can see these things. So I'm really, really glad that you are here. So there's a little bit of market commentary. It's not going to do a ton for you, but it's pretty much on par with our usual market commentary and also anything that you would find anywhere else. And so if you have a question for me, I would drop it in the chat box. I see some people have already popped in. Weiss is in the house, or Denu, Sam L's in the house, Joel's in the house. Man, Emmett's in the house. Emmett took me down with that Nike earnings play, which we're going to have to take a look at here in a minute. But thankfully, it's not too bad yet. But that could be something we have to battle here for a couple of months. But all right, so I'm going to get to as many of you guys as a minute. Let's go in here, though. Oh, we got to go to gold. Let's do gold first. Because I know we have an extra long show. But, man, this victory lap, this thing's going to be a piece of work. Because it looked like it was going to be gone. It looked like this thing was dead to rights. we put this trade on. Let's bring up the chains here. So something weird happened, by the way, this morning when I went to close out my gold position. Now, I don't know. I don't even know what. It was so weird. I was looking at the, hold on a second. 320, 223. Huh. This is so weird. It says I closed it yesterday at 223. That can't be right. Because that the shite. We still had this on. Did I put this in? I think the GTC thing took me down. So take a look at this, guys. I was so confused this morning. I was so confused. Because when the market was, going down and gold was going down, it was like 935, 940, whatever. I was like, man, I got to get in here and close my gold trade. So I actually went in, and from what I could see at the time, and I was looking at the activity tab, and so maybe we'll look at the activity tab in a second. It looked like I logged in at 940, and it looked like at 938, I closed it for $8. I know I didn't close it yesterday during the show. Did I? Did we close this yesterday during the show? Somebody set me straight. I don't think we did. In fact, I'm pretty sure we didn't. Now, we certainly talked about it for no less than 13 minutes, but we didn't close it. We left it on going into today, of course. Well, anyway, hold on. This is such a mystery to me. I feel like the GTC thing took me. I'm not doing GTCs anymore because I don't even think I did it right. You would think. A monkey can figure it out. Well, I certainly can't. And so let's go to the activity page. So, yeah, here it is, right here. Yeah, this is what I saw this morning. So I don't know what that chains are letting us down, which is very surprising because normally they're incredibly reliable. You need to get amped up, you go Rooster. Like you need to get amped up, you go with some Dem Bones. Like you need something to kind of chill you up, but maybe get amped up at the end of the song, you go with some Wood. This is basic change strategy, but it really let me down here just a second ago. But if we look at the activity tab, this is what I saw this morning. I was like, oh, okay. I was like, we got filled at $8 on the, on the GTC order, which is what we put in. Now, I don't know what this business is all about. We didn't put anything in for $7. Again, I don't think I did it right. But then when I looked at it, and I don't know what this was all about, whether it was my fault, whether Scott Sheridan and the boys are doing some crazy stuff in the account, I don't know. This could be, Jajun doing some weird stuff in the account. I have no idea. Could be Tom Sosnoff getting in, kind of usurping, overriding some of my trades. It's happened before. But I had 2 puts left over. I looked at the butterfly. I'm like, okay, it's closed. I made a couple bucks on the trade. We paid, here's the opening trade right here. We paid $5 for it. I closed it out for my $8. I made $3. I made $2.80, whatever. I'm like, it's great. I thought it was gone. I thought it was never coming back, and boom, here it is. Right, incredible. But then I had these 2 short puts left over. I'm like, I don't want to have these short puts left over. I'm like, why do I still have 2 short puts left over? I thought this thing was done and dusted, but it was not. It was neither done nor dusted. And so I was like, well, let me close out of these weird 3,000 puts that I have on. And I'm like, I'm not doing GTCs anymore because I have no idea what I'm doing. And so that's what this is here. I don't know what happened. I wasn't getting in. I wasn't trying to scalp gold options. I wasn't trying to do any of that. It just was a leftover in my portfolio. And so no idea what happens. The chains let me down. Tom Sosnoff getting in the account, scalping gold options. I don't know. I don't know what's going on. But we did make a couple of bucks one way or another. And so whether we made $2.80 or whether we made $1.70, however you want to slice it up, it is some green number, which is amazing because I figured this thing was going to be right. And so a nice little couple of days for us from an expected move butterfly standpoint. We nailed the SPX trade, 450, got rid of that guy at 22. We nailed the gold trade, got in at 5, got out at 7 or 8. It's anybody's guess at this point. And so yeah, I will take both. And I will run like a thief in the night, as the Batistas would say. Maybe it was the Batistas. Maybe Vinny's getting me back. Maybe he got into my account to scalp some gold options and leave me with a couple short gold puts that I'm glad I checked it because I didn't really want to go into the weekend with 2 short gold puts in, the big boy Shooter McGavin, / GC contract. That is definitely not something that I was really hoping to do. So gold, yeah, it worked out pretty well. And so I don't know what more I can do for you guys, man. I told you guys to get short gold. I told you guys to get short gold at like 3,006. Now, sure, you had to endure it all the way up to 3065, but you should be ready for that. You should be prepared for that. Like, why do you think we have the bathtub of filth? It's for moments like this, right? And so you absorbed it to 3065, but then you got it all the way back down. You made yourself 2 points. I told you to get short at 3,006. You close it out at 3,004. Boom, there's your 2 points. And of course, silver and the Hunt brothers, it's a good thing they're in the pizza business now because silver has seen better days. Silver down 49 cents today. And I think when I said to get short silver, it was like 34.50 or so. And so I gave you $1 on silver. I gave you $2 on gold. What more can I do? I'm going to search. I'm going to try to figure it out. I'm not going to spend a whole lot of time on it, but I'll spend a little bit of time on it. But I think we pretty much gave you all we can give you. So there's gold, there's silver. Boom, there you go. So those are 2 nice trades, all kidding aside. Obviously, expect to move butterflies. When they work, they're amazing. When they don't work, they're, some level below amazing, let's say. And so, all right, what else do we have in the portfolio that needs our attention? Yeah, we got Nike. We have our Emmett special here. We have our Anka special that pops up from time to time. Now we have our Emmett special, which also pops up from time to time. I think Emmett's made me some money before, so I'm certainly not going to throw him under the bus too many times. A couple times, of course, but no more than 2 or 3. So Nike here. So Nike down from earnings last night. I mean, I don't know what they said. I didn't look at the call or anything. I have no idea. I'm just interested in the market reaction because, I mean, the market reaction to earnings reports and earnings calls, as you guys know, if you've traded them, it's completely random. You have no idea, right? Tom is 100% right on this. If you had the numbers beforehand, you don't know how the stock is going to react. Now, you might think, oh, Jim, that's crazy. Like if I had the NVIDIA numbers beforehand, right, where, its revenues are up $1 million, profits are up $1 million, they're paying new dividends, they're doing this with, the Black Hawk or the Black whatever it's called. They're doing this with AI. They're doing all these things. The stock is going to rally. You got to be a little careful with that because, man, on the conference call, like Jensen Huang, like if he pauses too long in a statement, the market doesn't like it, they'll send it down 8%. Like easily, man. You guys know this if you've traded earnings. Sometimes it's a real head scratcher. Sometimes you're like, man, that was the greatest earnings call I've ever heard. And why is the stock down 6.5%? Like it's some pretty wild stuff. It really is quite random. And so Nike's call, I have no idea what it was. But again, I'm not super interested in that. So for the Super Bowl that we have on right now, there's two pieces to this. Thankfully, the management is going to be fairly easy and fairly straightforward. If I break this into the two component parts, you have a long call spread and then you have an extra short put. So this is going to be super easy because the long call spread is not worth anything. They're trying to tell me it's worth a penny. It's not even worth a penny. Trust me, it is not. So this guy is going to expire today. It's going to be over and done with. It's just going to disappear and go away. So I'm not going to have to worry about that. But the short put at the 69 strike, that is in the money. So if I don't do anything with this today, then I will be assigned 100 shares of Nike stock. Now, if you wanted to use this as a strategy to get into a long-term holding in Nike, you're going to hold this thing forever. You're going to reinvest the dividends. You're going to dollar cost average. You're going to will it down to your kids, grandkids, whatever the case may be. You can certainly do that. You could 100% do that, and that's a very popular strategy in the options world, the short put space, and all those things. That's what makes short puts so advantageous, in my opinion. One of the reasons that makes them so flexible. I'm not going to do that though because I don't really want to get long shares in Nike. I guess we could to kind of add to our repertoire of long share positions. I don't know. Should we do this? Yeah, this might be kind of fun. Huh. So we've got Bank of America. And we've got, let me think here. Yeah, it's only a $67 stock. Yeah, I think so. Let's go ahead. I'm gonna allow assignment to happen on this. So this will be fun, right? This will be fun. We don't do this very often. Oftentimes you're like, man, I don't want to get assigned. Like this is crazy. It's like the boogeyman jumping out of the bushes. Like, ooh, assignment. Like you better watch out. It's really not that big of a deal. And especially now that I'm kind of like ready for it. I suppose the times when it jumps out of the bushes, you're not exactly looking for it. But let's use this as a way to establish another long stock position. So that would give us 30. We have Bank of America, and they're all effectively going to be different because you have I like this a lot, actually. So Emmett, thank you. This actually worked out extremely well. So we've already discovered our first teachable moment, Emmett. So thank you for this position. And I'm not concerned about it. I mean, it's barely in the money, so it's not even really that big of a deal. But we have Bank of America. We have Nike. Also, shout out to Josh, who, he's the one who was kind of the brainchild for this idea to begin with, kind of getting more stock positions in the portfolio to kind of try to appeal and try to reach out to our stock investing brethren who might be watching the show. And you might be thinking, hey, I'm looking for some more tools in the toolbox. I'm looking for different things I can do, over and above reinvesting dividends, dollar cost averaging, kind of a passive approach to the markets. And so this is kind of a way to kind of extend an olive branch to that crowd and say, hey, we're all on the same team. And we're all trying to do the same thing here. So Nike, let's wait. I'm going to get assigned on that. And we'll just take assignment. And then we'll understand that our basis is 69. Well, not our basis. We'll figure out the basis on Monday. But the assignment price is going to be 69. So it's going to be like I'm buying shares at Nike at 69. The stock is 67 and some change. And so obviously, like we're underwater a little bit. Now, we're going to use the trade price that we picked up on the Super Bowl to figure out our basis. Actually, we can do it right now. It's going to be pretty simple. My basis is going to be the 69 of the effective share purchase price minus 45 cents, which is what I collected on the Super Bowl. So my basis on the trade is going to be 68.55. Now, sometime Monday, what are we going to do? Like, I don't know, we may sell some calls against it. We may just hold the shares. Like, we'll wait and see. You've got to tune in to find out, to build in a little bit of lost drama for the show here. And so it's probably not like season 2 or 3 of Lost, more like season 5 or 6 of Lost, where you're like, this is an absolute train wreck, but I still have to keep watching because I'm so emotionally invested. It's very much like that. But here in the Nike situation, I like the plan. Let's take assignment. We'll get the shares, and then we'll deal with it on the other side. Okay, so let's go ahead and what else is on? I think, is that it? Man, that's it. I mean, there's a couple of things here, but we can spin this up into the questions here pretty quick. Chipotle, we rolled that out. Hey, look at Best Buy. Look at this thing, man. It cannot be stopped. Can't stop, won't stop. Best Buy up 3 cents. Look at this thing, man. More long shares. So it's like a long share synthetic. I mean, look at this. Now, I mean, we've got so many long share positions now. Josh, I think we have too many. Like, I think we need to be trimming some long stock positions because we have Bank of America, which is just crusty long shares, no premium against it. We've got Starbucks, which is an investment style covered call. We're now going to take assignment on Nike. And so that's going to be kind of a fun little experiment. And now we have a deep in the money short put in Best Buy, which is essentially a long stock synthetic. And so it's like, man, I don't know how many more ways you can conjure up a long stock position. I guess we just need a zebra in here and we'll be all set. Like if we get a zebra like coming on down the chutes, we'll have basically every permutation or iteration of a long stock position. Or I guess we still would have to buy an at-the-money call and sell an at-the-money put. That would be another way. I don't know. We'll keep building out the portfolio, though, of long stock synthetics and long stock actuals, and then we'll just kind of see. We'll see where the wind blows us. But Reddit, so Reddit's looking pretty good. This was our short vertical that we put on just the other day. It's off to a nice little start. I'm going to sit tight. I'm not going to close it early because it is defined risk. I don't have to worry about this thing blowing up in my face. But if Reddit keeps rallying, then that's going to be good. That's going to be really, really good for us. So for Reddit, I'll sit tight. I know we wanted to do a short put in here, but the margin was kind of crazy. And I don't know why. I leave it to the experts to tell me, tell me what to think, right? Let them tell me what's going on. I don't need to figure out things myself. I don't need to think critically. I can just let the elites let me know what's going on. And then I think that's pretty much it. Delta Airlines, IWM, Apple, MES. Oh wait, look at MES. Wow, look at this. I'm glad I actually took a quick little gander over here. So we are actually over 50% of max profit on the MES strangle. And so there's no reason to hold this any longer. You guys know I'm one to be patient. You guys know I'm one to kind of, exercise the do nothing strategy. But you don't want to do nothing when doing something is definitely the right move. Like you have to be careful with when you deploy the do nothing strategy. Now, using it as a default setting, using it as kind of your go-to, like I need something to move me off of this. I love it. I think that's how you should approach most situations in the market. However, there are times when it's definitely time to do something. One of those times is you are at or beyond 50% of max profit on a trade where your original target was 50% of max profit. There's never really a great reason to stay in that trade. Like I can't think of a great reason. Now, there's plenty of reasons, and we talk about them on the show all the time. When you have a strangle that gets tested, maybe you stay in the trade. Like maybe like, hey, I want to exercise a little bit of patience. Like I'm totally fine with that. I mean, we bend the rules all the time on the show, especially on Friday versions of the show. We basically don't follow any of the rules, right? So that's what makes it kind of fun. Early in the week, we're kind of buttoned up. We're doing things like the way we're supposed to do them. And then later in the week, we just kind of, you got to stretch out a little bit and kind of do things, the way you kind of want to do them deep down inside. But here with a 50% of max profit, we're at that point. We're beyond that point. Let's go ahead and let's close it down. So I am going to highlight both legs of the strategy. We will close the position, and it looks like we're going to end up making about 65% of max profit, actually. So a little bit more than 50%. I'm no Jacob Perlman, but I think that's right. All right, so we got filled at 21 1/4. So beautiful. So the MES trade is over and done with. It's almost like it never even happened. So there you go. All right, let's see here. Where are we at? Man, I see you guys. Look at you guys. Man, look at you guys. I see Griffin, Theta Trader's in the house. Man, Steve's in the house. Cynthia's in the house. Man, look at you guys. Man, you guys blew me up today. Man, I appreciate you guys so much. And so let's see. Cynthia says, happy Friday. I'm going back a few before my comment because I see they might even be related to my show. So Cynthia says, happy Friday. What's going on there, Cynthia? Thank you for being here. Thank you so much for being here. Sam L's in the house. Dr. Jim's in the house. What's going on there, Sam L? Sam L says, Doc, are you sure we're closing green today? Who's even making the rules? Future tariff on Florida or what? Future? I'm pretty sure it's happening right now. Like if I'm not mistaken, I think Trump maybe he walked back the Tennessee, Georgia, Ohio tariffs, but he slapped like double tariffs on Florida. Like you got the reciprocals and then you got like some extra reciprocals that have already hit Florida, I think. Now, again, it's been, 8 minutes since that came out. So everything may have changed. I'm not sure. But yes, I still think we're going to close green today simply because I tweeted it out. So that means I must remain married to this idea and this hypothesis. And that would be pretty interesting. Who's making the rules, though? I don't know. But again, if I had to guess, It's got to be something within the category of a Sosnoff, Batista, Sheridan type of deal. It ain't a Schultz, I can tell you that. It ain't a Sam L, I can tell you that. And so we just have to kind of, take what we're given and just say thank you. And so Sam L, I appreciate you, my friend. Daniel Perkins, hello there, Dr. Jim. I'm just out here keeping my head above water while you do whatever it is you're trying to do. Yes. So Daniel, you got me, man. That was absolutely classic. That meme that you posted and tagged me in yesterday, man, I was laughing all night about that. I showed it to my wife. She had no idea what it meant, of course, because she hasn't seen the show. And I mean, I've been at Tasty for almost 9.5 years. She saw my first show and she's like, yeah, I can't watch this. She's like, what people don't understand is I get it the other 23 hours. I don't need it for this hour too. This is my 1 hour break. This is my 1 hour reprieve. I'm not going to, voluntarily engage in this for that time too. And so I showed her that. She had no idea what it meant, but I'm like, you don't understand. This is very, very clever and very, very funny. So thank you, Daniel, for sending that my way. That absolutely made my night. That was some really, really good stuff. And so Justin's in the house. The longer term picture for the bonds is higher. Well, here we go. If you look at a daily chart, the 50-day moving average, this is right in my wheelhouse, man. Daily charts, moving averages. Man, just give me a stochastic and we got it all rounded out. It's headed higher and looks like it intersects the 100 days in the coming days. Justin, thank you for being here if you're still here. Just because those types of comments, it might be more kind of Chris Vecchio related. You might be right, man. You might be 100% right. You might have some spot on analysis. I'm not a TA guy, though. I'm not a moving average guy. I'm not a stochastics guy. I'm not a daily chart type of guy. And so, I might peek at the daily chart from time to time just for my super secret system that I'm not telling anybody about. But it's not what you said, Justin. So you've got your own super secret system. And so that's good stuff, though, my friend. Thank you for being here. I appreciate you. Orgdenu's in the house. Greetings from Italy, Dr. Jim. What's going on there, Orgdenu? As a rule of thumb, what is the minimum price of an underlying that you recommend to trade options? Or minimum price of an underlying that you recommend to trade options? Thank you and have a wonderful weekend. It's a great question. I don't really have a minimum price. I've never really thought about it as like a black and white thing, but I would say, anything under $10, I'm not going to do anything with the options. Like in here, we can even look at it together. Like if we go in here, that is definitely the cutoff, $10. I'm going to say it's probably $20, but let's look at, let's go to the watch list here and we'll do it together. So if I go to the watch list and I'm on let's go to Tom's watch list because I know he gets a royalty for every time somebody clicks on this. So if I click on that, again, that second Range Rover, it ain't going to pay for itself, right? So we got to help where we can. But if I go in here, if we look at, so if you look at like M, what is M? Is that Macy's? Yeah, Macy's. $13 stock, right? It's a perfect example. Like Florida's at 16, well, tariffs, that makes sense. But Macy's at 13. If I go in here to the trade page, if I go into like the May options, 56 days to go, right? 56 days to go. Doing something with the options doesn't make any sense because if I sell a 13 put, I'm only going to pick up 66 cents. That's nothing, right? For taking unlimited risk, that's just not going to make a lot of sense. And so you want there to be at least a little bit of juice on the orange, or in the orange, I should say. If it's on the orange, you probably put it back. And so when you look at this, 66 cents is not really a good enough premium for me to get interested in doing something with the options. Now, you could do something with the stock. You want to own Macy's, you want to short Macy's, whatever. You could certainly do something stock related. And because the stock is so cheap, it doesn't require too much buying power to go ahead and do that. But if we start looking, let's go back to the list here. Let me find, can I find a $20 stock? Intel, Intel's at 24.5, right? So if I go into Intel, I go into May. So you can see right away. So now things have just perked up quite a bit. Like you've got the stock at 24.5, right? If I go in here and I find like a 40 delta, or let's say 35 delta put, right? Here's your 34 delta put in Intel. You're getting $1.38. Now that's reasonable to me. That's economically significant to me. Because again, remember, we're managing early. We're managing at 50% of max profit or thereabouts. And so it's like, man, if I go in at 65 cents on entry, I'm going to take it off for 32.5 cents. There's not a lot of economic significance there, in my opinion, for a trade at trade entry. Now, when you're rolling and adjusting, that's a totally different situation, of course, and a very, very different scenario. With Intel here at $24, it's like, okay, $1.37, $1.38 on the 35 delta put, that's doable. That's very much something to consider. And so I would have to say, let's say $25 is probably the minimum that I would consider for an options position. And so I think that's a pretty good reference point. Now, maybe sometimes you'll find some crazy stock at $15 that's just, the IV is crazy and it makes sense to do some options or whatever. And so that could happen. But I'm going to say that that's going to be a pretty rare exception to the rule. Let's see. Weiss in the house. Happy Friday, Dr. Jim. Arms day as usual. That's correct. I did delts and buys today. So a very odd split, as I've talked about before. We're doing back and hams together. We're doing delts and buys together. I've got quads on their own day and hams on another day with back, of course. And so it's been kind of fun. But yeah, we knocked out some delts and buys earlier this morning. And so Weiss says, happy Friday, SPX scalping day. Yes, it has been lots of back and forth, lots of opportunities, on both sides of the market. You could pretty much do whatever you wanted and just wait until you're right. Something I've briefly mentioned from time to time before. And you would do quite well for yourself today. But thank you, Weiss. Thank you for being here. Junior Max says, good morning from Australia. Did you also get assigned on the DAL puts? I don't think so. Oh, I did. Look at that. Wow. I didn't know that I did there. Junior Mac, I did. Well, look at that. Interesting. What was I really wish I was paying closer attention to this. I would be very curious to know what the extrinsic value was. Now I don't know. That's brutal. I really wish we were paying closer attention to this. See, this is why I don't like having that many positions on in the portfolio, because right now I've got 12 or 11, whatever. I've got to pick and choose. I've got to kind of pick and choose. I can't go through essentially all of them each day if I want to, which I really like to be able to do that. And so, yeah, man, we're not doing GTCs anymore. We're not doing this 12 positions in the portfolio anymore. We're going to go back to 6 to 10. It's kind of where we like to live. Man, there's no way we had a lot of extrinsic value in there. And by no way, I mean it's very, very unlikely that we took assignment if there was 30 cents or 40 cents of extrinsic. Now, there may not have been. There may have just been, not much extrinsic left in there at all. What was it? Was a 60 put, I think, right? Let me go back into this is so interesting. So the plot thickens. Let's go to the history tab. Let's go to DAL. The history tab will kind of set you straight. If you don't know, let's go back a couple days. Or maybe just yesterday. Okay, here you go. Yeah, it was 60. Okay, it was 60. Oh, wait a minute. Oh, we can figure this out. It just dawned on me. Our put may be gone, but the put is not gone. We can go into the option chain. Now, I won't know exactly what it was, when we took assignment, which I guess was, it was just last night. Right. And so, I mean, unless these are also Vinny's markets and he did away with these puts, this put should be there. And so let's go take a look. Now, okay. Now, hold on. Just to have a little fun. Remember, this is live. There's no takebacks. This is live. There's no repeats. There's no reduce. I do not know what the number is. I didn't look at this beforehand because I didn't even know this happened. So thank you, Junior Mac. I think there's less than 10 cents of extrinsic value in that option. I think it's 10 cents or less. That's my guess. That is kind of what I've talked about before. I've actually used 15 cents as the kind of the marker. And so, but I'll stick with 10 cents since I just said 10 cents. But usually if you're over 15 cents, you don't really have to worry about assignment. It's very unlikely it's going to happen because remember the other side of the contract, if he or she chooses to, exercise and give you the assignment on the position, he or she loses the extrinsic value that's in there. So economically speaking, it doesn't make a lot of sense if there's 50 cents of extrinsic or $1 of extrinsic or whatever. When you start getting to 10 cents, 15 cents, whatever, now the economic differential is just not that great. And people want to, they want to get into share positions, long or short, for all kinds of different reasons. And so let's see now. I'm very curious. So it was the 60 put. What cycle was it in? Well, it must have been in the same cycle as our call, right? So 27 days to go. Ooh, does this really only have 10 cents? Now I'm starting to second guess myself. Now I'm thinking it may be more like 17 or 18. It ain't over 20 though, I can tell you that. But let's go in there. Now I'm very curious. Again, this is live. I have no idea. what the number is. This is I'm nervous. I'm kind of nervous right now. Let's go into this. The 60 put. Where is the extrinsic value? Well, would you look at that? Man, I'll tell you guys, it's almost like I've been doing this for a minute. There is 2 cents of extrinsic value in that put option. There is no economic significance left. It's over. It's over, Johnny. The extrinsic value is gone. Right? Look at that. 2 cents of 3 cents of extrinsic value. I did not even look at this beforehand because, again, I didn't even know this happened. So, wow, man, it's almost like we've been thinking about this for a very long time. It's almost like, man, it's almost like I've spent my whole adult life on this one subject, right? Extrinsic values around assignment. My whole adult life. That's all I've been focused on for 25 years, right? And so we nailed it. We absolutely, unequivocally nailed it. It's the first time ever, actually. And so the 60 put, 2 cents of extrinsic. Okay, that makes sense now. That makes sense now. Now, had we looked at that yesterday, it may have been something on my radar. I don't know that I would have done anything differently, honestly. And so all right. So I want to get to the questions. Thank you there, Junior Mac. Wow, that's great. Man, you guys are coming up clutch. I mean, Emmett kind of let me down, obviously, but Junior Mac, man, we're even now. You guys are even, Steven, across the board from my vantage point. Emmett was the dip and Junior Mac was the rip. And so you guys are even now. So let's go ahead. What am I going to do now? I'll probably just close the position because now I've got, we're going to take assignments in Nike, all this. I guess I could just leave the assignment in Delta Airlines and that could be my assignment. We could close out Nike. That's actually, you know what? That's actually not a bad idea. Since we already, that's different though, because it's not clean. Now I want to get rid of this. Let's get rid of the Delta Airlines position because I want to take assignment in Nike. It's a much cleaner starting point. The Delta Airlines position, it's over. It's done. And so the project needs to come to an end here. So let me go ahead. I'm going to close out of the short call first because if you leave a naked short call on in your portfolio, just remember that your margins can go kind of crazy. Thankfully, this is not a super high price stock, so it wouldn't really be that big of a deal. But just in terms of best practices, close the naked option first and then close out of the share position. So let's close out of the naked option, the naked call. I could close them both together, I suppose, but sometimes I just like doing them piecemeal because it's cleaner. It's just a little bit cleaner. So now we close out of Delta Airlines and all right, so we're done. So we're done with Delta Airlines. And I mean, it wasn't our best trade ever. It wasn't our worst ever either, which is kind of scary. But yes, thank you, Junior Mac. Thank you for bringing that to my attention. But I can't believe that we nailed it on the extrinsic value call. That was kind of fun. And so all right, so Sergio's in the house. So greetings, Dr. Jim. What's going on there, Sergio? I appreciate you, my friend. Thank you for being here. Thank you so much for being a part of what it is that we're doing. I still don't even know what that is, but we're going to keep looking for it. We're going to do our best here to figure out what that might be. And let's see. Damon's in the house. Maybe Dr. J should try doing his show in a purple tie and see, and see if it has the same magic power as Jerome Powell. Yeah, maybe it does. Again, I've already committed to doing the purple shirt. I'm not going to do a purple tie though because I think I have a couple purple ties in the tie stable. It's been a minute though since I've had to put a tie on, and so I don't know that we're going to necessarily do all that. But I am going to commit to the purple shirt, the purple dress shirt in the for the FOMC days moving forward. And so yes, you do have that commitment out of me. Sparky Dog in the house. Hey Doc. Oh, I'm still wearing my purple tie, but I took off the Nikes. There you go. Yeah, apparently so, with Nike down, $4. And so you may want to put those Nikes back on so we can get this stock up just a wee little bit. RC in the house. What's going on there, RC? Dr. Jim, if I wanted to buy a call spread, is it best to buy something slightly out of the money, at the money? What is the best balance between deltas and hedging against time decay? Thanks and love you. Man, I love you too. It's a great question. And so a couple of things to think about. So when it comes to buying call spreads, normally, so here, let me bring up some stock that has like a low IV. Nothing has low IV right now. Have you guys seen this? Because, implied volatility has been up so much the last few weeks. The IV ranks of everything is pretty elevated. I mean, you got a few that are low, like notes, and apparently Bitcoin is low, which is kind of weird. But I don't follow, I'm not a Bitcoin bro. And so I don't follow the Bitcoin world as close as maybe I should. But I mean, you're low. I mean, AMD has an IV rank of like 10, and everything else is you're getting into double digits and then quickly into the 20s. But if I go into AMD, let's say we go into AMD and let's say I want to buy a call spread, right? You've got earnings coming up here on April 29th. And so let's say I go into May, 56 days ago, I want to buy a call spread. It's going through earnings, whatever, but I'm fine with that. Normally, our default setting here is at the money. So our default setting is to straddle where the stock price is now. You buy a strike in the money, you sell a strike out of the money, and then you size it up appropriately with the size of the vertical, right? Remembering that the maximum loss on the vertical is essentially equal to its size. That's kind of how we think about sizing defined risk positions, especially with vertical spreads. And so you would want to, match the sizing parameters of the position with whatever the sizing parameters might be for your account and your risk tolerance and things of that nature. So normally we're 1 to 3% of our account size for defined risk positions. Generally speaking, the more capital you have, the smaller your positions can be. The less capital you have, the larger your positions have to be. That's just a nature of the beast. It's a concession that you have to make if you have less capital. Less capital meaning, 15,000, 12,000, 10,000, even 20,000. It can be a little sticky, right? To put on a lot of positions and size them appropriately. It doesn't mean you can't do anything. It just means you have to be aware that you might be a little bit larger than you ultimately want to be, when maybe you're able to grow your account, add some capital, things like that. But here you've got AMD at 107. I would start by buying like a 105 call and then selling a 110 call. So you can see right here, this sets up basically like your standard at the money vertical spread. The pop is 47%, it's usually around 50%. That makes sense. We're risking 250 to make 250, right? This is your run of the mill. This is your Betty Crocker recipe at the money vertical spread. And look at the NASDAQ, it's now green. S&P 500 right behind it. Man, it is just right behind it. We are going to get that closing green call. Man, we are going to nail it. Just like we got that extrinsic value call. Man, we are on a roll right now. And so we got a bunch of extra long shows next week too. Not Monday, but Tuesday, Thursday, and Friday. We have extra long shows on those days. And so don't miss those. But yeah, so you're risking 1 to make 1. So this is how you would generally start their RC. And this is usually where we end too. Honestly, this is usually a pretty good setup. Now, you mentioned going maybe slightly out of the money. Also notice how the theta is essentially neutralized. You asked about the decay. That's another thing that's nice about, buying at the money verticals or buying verticals in general when you want to play direction. It's more advantageous than buying a naked call, just because when you buy a naked call, I can't really even show you. Like, let's say I just bought the 105 call instead of spreading it off. Like if I buy the 105, 110 call spread, which is what I have on, my maximum profit is 250. My maximum loss is 250. Okay. What if I get rid of the 110 call and I just buy the 105 call? What do I have now? Well, now I have unlimited potential gains, of course, right? The maximum profit is theoretically unlimited. The maximum profit is positive infinity. Now, the only way you're going to achieve that is if you wake up one morning and AMD is printing, infinity bid, infinity +1 offer in the pre-market. And so that might not happen, but theoretically it is attainable, apparently. But my maximum loss here is going to be significantly more because now I don't have a short call coming in to offset the long call. So that's one thing to know. Now my maximum loss is still what I pay for it. So it shares that similarity with a call spread. But look at the theta now. Now my theta is $7 a day negative, right? So that means that every day that passes that I don't get the move that I want, that's going to cost you some money. And what else is kind of sticky about this is the theta grows as you get closer and closer to expiration. This is something that we know as premium sellers because we're always like, we're always kind of fighting against yourself a little bit like, man, I sold this put or I sold this strangle and it's working out. I'm at 21 days to go. Should I not stay in a wee little bit longer? Like, should I not just hang tight for maybe another week, maybe another couple weeks? It's like, that's a tricky thing to do because what's going to happen is, yes, the theta is growing. And yes, the decay of those kind of final days of the expiration are more valuable than the earlier days in the expiration cycle. That's all true. But now all of a sudden, gamma's starting to get a little bit larger. Now all of a sudden, you're starting to take a bit more directional risk. And that's just a tricky game to play. Well, remember that theta is still growing as you get closer and closer to expiration on the long side of the contract. So on the short side of the contract, right, you absolutely unequivocally have theta that is growing and you have, something that you want to tap into that looks kind of attractive to you. But then on the long side of the contract, you kind of have the same thing, but now it's working against you. So it's the same thing here. The theta is starting off at, $7 a day, but it's going to quickly grow to an even larger number than that as you get closer and closer to expiration. Now, obviously, theta is a dynamic thing. It's also going to change as the moneyness of the position changes. So there's a lot of things that are happening here. But going back to the spread, if I sell the 110 call, so that's the first thing about, kind of thetas and naked positions and things like that. What if you go slightly out of the money? So instead of doing a 105, 110, let's do a 110, 115, and let's look and see how that changes things. So first off, you don't get quite the theta neutralization that you had with the at the money strike. So you don't have, it's nothing like buying a naked call. So you still have a lot of kind of protection against that. It's effectively neutralized, but it's a little bit more negative than it was when you were right at the money strike. But look at what else has changed on the position. So now I'm only paying $2 with the potential to make $3. And so that makes sense because I'm now I'm establishing a lower probability trade, right? This is something that was 50-50 if I chose the at the money strikes. Now I'm slightly out of the money, so I need more accommodation from the stock price. I need more cooperation from AMD going higher. And so my probability of profit is going to be lower. It's now only 40% or 39% to be precise. And so you have a lower pop, but greater potential reward. I mean, this is the core gimme gotcha that exists in the options world. The pop credit trade-off. Pop profitability trade-off. If you want a higher pop, you have to be willing to accept a lower profit potential. That's it. You're not going to find both. You're not going to find super high pop, super high profit potential. It doesn't exist, right? Unless you're taking like astronomical. But the risk is kind of baked into the pop. So I'm going back to my previous statement. You're not going to find that. Lower pop, though, where the pop takes a bit of a hit, now all of a sudden maybe you can have a little bit more profit potential. Now all of a sudden maybe you can make a little bit more money on the trade, which is happening here, moving slightly out of the money. And so hopefully that makes a little bit of sense to you there, RC. It's a really great question. So thank you very much, my friend. Oh, let's see. Joel's in the house. What's going on there, Joel? I appreciate you being here and being a part of what it is that we're trying to do, whatever that might be. Joel says, I bought a cheap SPY vertical spread, 100, expiring at the end of the month. Do you think my lottery ticket will hit? Man, I have no idea. Got a ways to go, right? So what, 570? Yeah, 570. The end of the month? No, it's probably gone. Just to be very blunt with you, I don't think that that's going to hit. And I mean, you've only got 10 days left. You need a 40-point rally. And so that means you need what? You would need 300 points out of ES. It's not impossible. Don't get me wrong. But it's like we're already through all the big movers, the known big movers of the month. Your NFPs, your CPIs, your PPIs, your FOMCs, right? The Canadian durable goods print, I believe that just dropped too. And so next week is just a bunch of fluff. Like next week is just a bunch of stuff that doesn't matter, like PCEs and stuff like that. I mean, I've never seen a more important things relative to everything else we've survived. I don't think come up just a little bit short. But the good news is, right, so there's the bad news. The good news is you said yourself it's a cheap lottery ticket. And that's what a lottery ticket is supposed to be. Something that's probably not going to come in, but if it does come in, you get a nice little payday. But if it doesn't come in, it is cheap. So it's like, all right, I can just keep going, forward with what I would normally do. And I don't have to worry about it too much and kind of, start changing around my total strategy because that didn't come in. So hopefully that helps a little bit. And so let's see. Sergio's in the house. Dr. Jim, you always deliver so much value. Man, I appreciate you, Sergio. Man, I'm going to send you the value that we talked about before the show for you dropping this comment in the stream at this very time. I'm going to send you that cash that we talked about. And so thank you for all you do, brother, man. Thank you for being here. And thank you for saying that. It really means so much to me. I really, really appreciate you. Emmett's in the house. Hey there, Dr. Jim. I'm here for some wisdom. Lay it on me. Yeah, I'm here for a winning Nike trade, but apparently we all can't get what we want there, Emmett. It's just the way that it's got to be. But no, this is going to be good, Emmett. This is going to be really good because I'm actually kind of excited that we are going to have a chance to get a long way, and so it's going to be good to kind of continue with the long stock portfolio. So all is good, my friend. Definitely 100%. But thank you for being here. And so let's see, Junior Mac Weiss. I feel bad that the doctor got the doctor into that one. Oh, Junior Mac, did you get me into the Delta Airlines? Oh, yeah, I think that's right. Yeah, so it is your fault. Man, I got Emmett take me down on Nike. I got Junior Mac taking me down on Delta Airlines. Like, man, that's some crazy stuff there, Junior Mac. But we got out of Delta today, so we don't have to worry about it anymore. So I guess that's good. But I appreciate you there, Junior Max. Scram everything in the house. Dr. Jim, it's time to call Bonefish and make a celebratory reservation for surviving the FOMC and your Twitter victory lap. And so, yes, I'll have to see what we are doing tonight. I have no idea, by the way. I mean, the family schedule, you think I control that? Are you out of your mind? I have no idea what's happening tonight. So first, I have to figure out what's happening tonight, and then we'll go from there. But you know what's funny? So next Friday, this is next Friday. I'm not going to be out of the office or anything. It's going to be a normal work day for me. But once the market closes and the work day is over, my wife and I, we got a babysitter for the night to be with the kids. We're heading out to Sarasota for like a night away at a nice hotel and going to like a nice restaurant. So I've already commandeered, the local Bonefish. Like we're good. We're ready to go. And so I'm excited about that. It's going to be next Friday. I'm so excited because, with 3 small kids, where I've got Penelope, who's 10. I've got Eli, who's 7. He's going to be 8 here in about 2 weeks, April 6th. And then obviously Amelia May, she's our intern for the show. She just turned 5. I never talked to my wife. I have no idea what's happening in her life. Not a clue. Like if you asked me what she did at any day the last week and a half, I would not be able to even start to tell you what that could possibly be. And so and she doesn't know what I'm doing, right? And so it's going to be amazing to catch up with her and just kind of see how her life is going. And so that's going to be fun. I'm really, really excited about that. So that's going to be next Friday. Very excited about that. But we'll probably have to do the Bonefish then. That's why I brought that up. So YouTube, Jim's in the house. Greetings, Dr. Jim. A little late to the party. Have a great weekend. You too, my friend. Thank you so much for being here and being a part of what it is that we're doing. I'm so thankful for you and for everybody that, those of you that, anybody who watches on any day, man, I really appreciate you. But those of you guys that watch on a regular basis, man, you guys have a special place in my heart, man. I really appreciate that. I know there's so many other things you could be doing. You could be, consuming other trading content. You could be, on YouTube doing something else. Hey, you could even be doing your job right now, but you're not, man. You made a good strategic decision and you are here with us. And so, man, my hat's off to you and a nice little pat on the back. And so Theta Trader, so Dr. Jim, should I try trading more, better, or less worse? Yes, I'm going to go with one of those two probably. And forget about all that gold, silver, or even industrial metals. Get long osmium. Osmium, not to trade, just would make a pretty sweet barbell. Osmium. Man, I don't even know. I don't know what that is. I've never even heard of that. So osmium. I'm always looking for upgrades to the home gym. I've been saving up some money, by the way. We might be making some huge upgrades here pretty soon, which I'm very excited about. But I don't know that osmium is going to be one of them. I'll have to look and see. One of the things that I am going to upgrade, by the way, for those of you that are interested, which may be 0 of you, but I'm going to say this anyway. I am investing in a Buffalo bar. And so a Buffalo bar, if you've ever been to a gym, they don't normally have them at like regular gyms. You have to go to like a specialty gym or, a gym that caters more for like powerlifting and stuff. But the bar is bent on purpose, not bent because, a bunch of dudes and dudettes were doing rack pulls and they bent the bar. Like, no, the bar is bent on purpose because it helps you get deeper on your bench press. It kind of helps like your wrist and grip positioning on back squats for old guys like me with old man joints. And so I'm going to be investing in a Buffalo bar. They're like a few $100. And so I'm very excited about that. That's probably going to happen in the next couple of weeks. And so very pumped about my new Buffalo bar that's going to be coming. But I'll have to look into an osmium Buffalo bar. Maybe that's what I need. A little osmium Buffalo just to kind of keep things moving forward. Let's see. Why not? Says GCJ5. I sold a March 31/30/80 call. My delta in the position shows it as minus 330. Why, Jim? Yeah. So, okay. So you have to understand. So a couple of things. So it could be, so the delta is going to be, it's going to be potentially tracking to what SPY delta is. So if it's a beta weighted delta, which is kind of what I'm thinking based on your comment, I don't have enough context to know for sure. Like the delta, like if I go into the option chain, right? Like if I go into the option chain and did you say what cycle you were in? Let's see here. March 31st. Okay. If I go to March 31, 10 days away, you've got a 30/80 call, right? Like you look on the delta, like you look on the option chain and it's 30, right? You're like, hey, my delta is only 30 on that. So why, when I actually put the position on, is it 330? It's probably beta weighted for you. So it's letting you know just how big that position is. Like it feels like 330 shares of SPY. And so, as far as the correlations and whatnot, whether it's long or it's short, I don't know what the exact correlation is right now between SPY and gold. You could look it up pretty easily though, and we could look it up right now. But it just, I'm almost certain that's what that number is going to mean. Now, if I put this trade on and put it in my portfolio, I would know more. But I don't want to do that, man. We just got out of some gold shenanigans. We just got out of some GC shenanigans. So I'm not going to. I don't want to do like a GC short call and kind of what am I going for here? Total brain freeze. I don't want to do that. Let's just go with that. So for GC, I think the 330 is going to be a beta weight. I think that's going to be a beta weight at Delta. And so yeah, I think that's probably what that number is going to be. And so hopefully that helps you a little bit. Why not? Even with the stumblings and the mumblings, but it happens. Sometimes it happens. And so Scramble Everything says, would titanium barbells make sense? Titanium. I don't even know what they're made of. I probably should know what they're made of. It's some kind of metal, some kind of iron. And so it could be titanium. I have no idea. An interesting little factoid about me. I actually have a titanium rod in my right femur bone that is keeping my right femur bone together. I mean, by now, the bone has almost fully grown around it, of course. But I was in a car accident 25 years ago when I was 18, and that's how I lost the hearing in my right ear. I also broke my right femur bone. And I was knocked unconscious as soon as it happened. And they had to come in with like the jaws of life and get me out. And like there was blood and glass everywhere. Like it was bad for my friends that were also in the car, and it was really, really bad. But they both walked away fine. And because of the way that we hit the tree, like I got the brunt of it. I don't remember any of it. I remember waking up in intensive care like 3 or 4 days later, and they had gone in, like sewed me back up and like put a rod in my femur bone. And I remember going to the doctors after I had begun to heal and getting back into normal life and whatever. The doctor, I went to 2 different femur guys, and the first femur guy was like, I would get that out. Like, you're young, you're 18. Like, once you're healed up, he's like, get that titanium rod out of there. You don't want that in you. And then your bone will just grow back and you'll be totally fine. I'm like, yeah, but I'm like, you don't understand. Like, I'm already missing like 6 months of squats. I'm gonna have to miss another 6 months of squats. And that was right when I like discovered bodybuilding. That was like right when I was like really into it, get into the car accident, totally huge stick in the mud. Like, what am I going to do? Then I'm like, nah, I need a new femur guy, man. Like, forget this first femur guy. So I go to my second femur guy, and this guy was like young like me. The first guy was kind of older. The second guy was young. And I explained to him the situation. He's like, nah, there's no reason to get that out. He's like, your bone's going to grow back around it, and then you won't even know what's in there. And he's right. I don't even know what's in there. And so sometimes I set it off at airport security. But that's really the only time. And then I got back to squatting in no time. So there's a little tidbit about me that you probably didn't even want to know, but now you know it. Right. And so there you go. There's 5 minutes of your life that you'll never get back. But Phil, let's see. Theta Trader says titanium coated osmium. There you go. Titanium coated osmium. Okay. I like it. Let's see. Phil DeSantis in the house. Probably related to our very own Ron DeSantis. Hey, Dr. Jim, I'm new to this. Please excuse my ignorance. Nah, man. Thank you for being here. I'm really glad that you're here. You're in a really good spot, whether it be my show or the other shows on the network. Like, you are in good hands, my friend. I hope you stick around. We're all here to help. Reach out to me anytime if I can help you. Now, on to your question. Say I purchase a 14 DTE at the money straddle, and I sell a 0 DTE at the money straddle. That's called a straddle swap, by the way, what you're describing. I close both every day and repeat every day. How would I lose on that? Yes. So essentially, what you're doing is you're playing the volatility differentials. And by the way, that's quite a question for a beginner, right? Normally people that start out, and this is how I started out. Like, this is how most people start. Like, hey, like, what's a call option? Like, what's a put option? Like, what does it mean if I sell an option? Like, those are basic beginner questions. Phil DeSantis rolls in like, all right, look, I'm thinking about this straddle swap. Now, I just started looking at this stuff this morning, but this makes sense to me. That's amazing, man. Like, you're like so far ahead of the curve. Like, that's pretty incredible. But getting back to your question, yes, because the straddles offset each other, right? And so the things that can hurt you are going to be the volatility differentials between the two. This is going to be the main one that I think could potentially do the most damage. Now, can it do a lot of damage? It's not like holding one straddle where the risk is going to be just totally unlimited. There's kind of a built-in cap. Now, what is the worst case scenario there? How bad could it possibly get? I'm not sure. I'm honestly not sure. I haven't done a straddle swap or a strangle swap in quite some time. But the volatility differential between the two is going to be the biggest fly in the ointment that could potentially do the most damage. Where volatility, let's think. You're short the front. You're short the 0 day and long the 14 day. So if volatility crashes, if volatility contracts rapidly, it could affect the back month more than the front month or front day in this situation. In fact, it almost likely will, because the Vegas on 14 days are going to be greater than the Vega on, a 0 day. So in a situation like this, where volatility, if the VIX drops from like 22 to 15, I would have to imagine this will be a losing position, because you're going to lose more on the 14 day than you make on the 0 day. And so that is the situation that I see being a problem. Now, again, is it going to be a situation where you walk into like some 6 standard deviation loser? I don't think so, because you have the offsetting positions of the straddles. And so hopefully that helps a little bit there, Phil. But man, beginners, I mean, y'all beginners these days, you guys are learning it earlier than we did. I'll tell you that. That's for sure. Griffin Jones in the house. Just closed my 0 DT SPX Iron Condor for a $15 green scratch. Nothing like a little green scratch to get you going into the weekend. That's some good stuff there, Griffin Jones. Very good stuff. Weiss in the house says, Junior Mac, I'm sorry, I'm holding the bag and selling covered calls. We will see. Oh, for the Delta Airlines. I honestly like it, Weiss. I mean, that's what I almost did myself. And so I don't think that's a bad move. I don't think that's a bad move at all. I think you'll be fine. Kyle Hamill says, Dr. Jim, I think that victory lap should be reviewed pending the close. Yeah, maybe. The victory lap on the market action. Yeah, apparently our victory lap might need to have an asterisk next to it, since the market is now looking quite weak as of the last maybe 20 or 30 minutes. I mean, it was hanging around unch there for a minute, and now we're back to NASDAQ down 30, ES down 16. And so, I mean, gold's actually rallying. So gold now only down 19. And you got, the silver bros, silver rallying too. I mean, this is kind of the time of the day. Yeah, silver's down a little bit more. This is kind of the time of the day when, the metals kind of cool off a little bit. The metals time to shine is in the morning, of course. I mean, it's going to be overnight. And then, 8:30 when, the cash market's open, I think, for the metals is usually when they tend to move around quite a bit. From 8:30 to like 10, there's oftentimes an economic print at 10, whether it's some, crude oil inventory or like a Fort Knox live stream or like whatever it might be. That's usually around like 10 o'clock. And so when that happens, that's when the metals kind of move around a lot, but not usually later on in the day. And so let's see. Where is Cynthia says it was your AI. Oh, that did the gold thing. It might have been, Cynthia. It very well might have been. Let's see. Steven Jr. says you put a stop or TP on. I put a TP on, but I didn't put a stop on. I put a TP on. I take profit on, but then it was still weird. Like the fact that I had the extra golds on, I don't really understand. Did I do 2 on accident? It was just kind of weird. And then Steve says, is that the time you put the order in? Maybe it was. Yeah, you guys are talking about going back to the chains here. Yeah, but this is, let me think. Oh, okay. So maybe this is how they do GTCs in the chains. Maybe because I don't do GTCs. And so maybe this is how they do it, right? And again, by they, I mean Sazon's, Batista, Sheridan's, Malmats, etc. And so maybe that's it. But that's weird that it stays in there, even though it's not filled. How confusing is that? Because it didn't get filled until this morning. And so that's super confusing. But yeah. But anyway, that's the way it is. RC says Allison Chains, 100%. That's right. Larry VK says I had a similar problem with my gold position order change this morning as well. I called the trading desk. There was a glitch. There you go. There you go. Right. And I think, again, I'm pretty sure these are Vinny's markets, right? So there's your glitch. Like we found the glitch and, we found the guy. And so there you go. RC says, big boy Scott, yes, covering your position. He's had enough of your risky shenanigans. Yes, that I'll probably get back to, doing my M2K butterflies instead of my GC butterflies. And so Sergio says, Scott Sheridan being jet lagged, taking over for Pony Babista after Japan. Yes, that could be it too. Let's see. Junior Max saying, as long as it doesn't do a save, we'll be in good shape. Yes, a Spirit Airlines. Ooh, that's bad. That's a Dave Portnoy special right there. That's how you know you're going down. And so Scramble Everything says Pony Babista. Yes, Pony Barista. Yeah, that's even better. I didn't see that at first glance. I'm like, wait, that says barista. That's pretty good. Larry says, my issue was also 2 remaining short puts being reported. I closed those as well and ended up being long 2 gold puts. Unfortunately, I made a couple more C notes before it all got straightened out. Yeah, so it must be something weird. I mean, it's whatever. And so, I mean, stuff happens. I get it. Like, I totally 100% get it. Scramble Everything says, Nike announced Dr. Jim headband line immediate sell-off. I mean, that would be a reason for dropping like a stone. If you get any Dr. Jim like sponsored merch, like that's immediate dropping like a stone, like 100% sight unseen. Like it's going to levels it's not seen in a while on the downside. And so that is true. Brian Doughty says, hey, Dr. J, what's going on there, Brian? Thank you for being here, my friend. Appreciate you checking out the show. And so Theta Trader says, Dr. Jim should wear a nice thick 80s headband on Fridays, making Nicholas have Friday pretty shirts, party shirts. Dr. Jim, oh, yeah. They have their party shirts. That's right. Dr. Jim can have headband Fridays. I may start wearing some headbands because I train in my headbands. I have a stable of headbands. Like my stable of headbands is similar to Uncle Jay's stable of purple ties. Like they would rival one another. Like it would be a competition in terms of figuring out which one is more impressive. And so we may start doing some headband Fridays. I don't know. Maybe we'll start doing a little something. But Robert is in the house. What's going on there, Robert? Hey, Dr. J. How do you manage a butterfly on expiration day? I'm not sure about assignment risk and whatnot. Yes, it's a great question. So a couple of things. I don't have one on anymore because we already closed the gold one. We had the SPX one. And so two comments. Number one, if you stick around for more than, I don't know, a couple of days, maybe a week, you're going to see me do another one. And if you'll see me put it on, depending on the schedule of the shows that week. I try to still take them off on air, but sometimes I have to take them off air because obviously I get the move I want. I want to take it off, and then we talk about it on the show, of course. But when you have a butterfly on expiration day, a couple of things. Number one, if the butterfly, if it didn't work and everything is out of the money, then you're not going to have to worry about it. It's going to all expire worthless. It's going to all go to zero. You end up losing the maximum loss, which is the debit that you paid for it, assuming it's a regular butterfly symmetric on both sides. And then you don't have to worry about it, right? Then it just goes away. Monday, you're back to business as usual. If, on the other hand, it moved too far in your direction, which can also happen, of course, now all of the options are going to be in the money. So all of the options will be in the money, but you're still going to want to obviously do something with that because it's going to be a full loser in that scenario as well. But here you can't get away with doing nothing. You are going to want to close all the legs of the option because if you don't, they will all be assigned. Now all the assignments will cancel out, but because the commissions at Tasty are zero to close, it makes a lot more sense to close them out. So you'll want to highlight all the legs and close them. So those are two scenarios that will be very commonplace on expiration day for butterflies that you might have on. Everything is out of the money. Don't worry about it. Everything is in the money. It's also going to be max loss, but just close everything out and be done with it. Now, you don't have to close it out like on the opening bell. You can wait until close to the close because you still have that time and you're never going to get assigned in the middle of a day. Assignments only happen after market close. And so that may be helpful for you to know. And so you have the whole day to kind of see if you get the move that you want. If it's kind of in the middle, if it's kind of chopping around like where like some of it's in the money and some of it's out of the money, almost every scenario where that would be the case is going to be very good for you. That's going to be a very profitable situation for you. Now, maybe there's some scenarios where it's a little too far in the money or a little too far out of the money or whatever, where it's actually not a profit, it's a small loser. In that scenario, though, most of the time you're going to have some green on the screen. That's where you're going to be looking to close the spread, right? The only thing I will say, well, maybe not the only thing, we've already said a few things, but one other thing I will say in addition to all of this, I would not try to get cute and get fancy and break the butterfly apart. I would not try to get cute and get fancy and say, all right, this part of the butterfly is working. I am going to take that off or leave that on and get rid of the other side. Don't do that because that's going to lead to some potentially undesirable outcomes. Namely, you're probably going to have a difficult time figuring out what you even want to have happen. Like reconciling your basis with what you originally put on and what you've closed here and closing later. Like you're introducing more confusion and chaos than I think is necessary. And so I would not do that. I would stick with on as a package, off as a package. Everything is out of the money. Don't worry about it. Everything is in the money. Close it all down. It's going to be close to max loss. If you're kind of somewhere in the middle, it's probably green most of the time. Then you can decide if you want to go for more green by holding it for the till the end of the day, or if you're, comfortable with whatever the profit is at that time. That's your call, right? And it gets back to, what you think about the market and what you think it's going to do that day. Is it economically significant right now, or, is it really not economically significant right now? Those are the types of things that I think about when I'm trying to decide if I want to close it. So hopefully that helps there, Robert. Great question. Let's see. Oh, Theta Trader says they have party shirts. Yes. I assume that's what you meant. So I'm right there with you there, Theta Trader. Oh, and then Emma says, you're welcome. Well, I made it all the way down to the you're welcome comment. Wow. That was when I was saying thank you for the Nike situation, I imagine. And so that's pretty funny stuff. And so where am I at here? Where am I at? Man, you guys. Wow, look at you guys. Oh, there we go. Scram Everything says, so you're saying a dark cloud is going to come for Nike? I don't think so. Did I say that? I don't know if you mean a dark cloud in a technical sense, or if you just mean a dark cloud in a figurative sense, or like an outside in the sky sense. I don't know, but man, the market is looking pretty weak. Even the S&P is down 23.5. NASDAQ down 60. That's not good. My little call on Twitter looks like my Twitter streak is going to come to a screeching halt, apparently. Let's see. Sparky says, are you sure you want to own Nike? On the call, they said they were pinning their hopes on the Aaron Rodgers commemorative Jets edition flip-flops. Man, I'm all in then, man. I am all in. Homeboy's going to play until he's like 50 or 55. I mean, he's still moving around pretty good. I mean, he's not. His skills have deteriorated significantly. But he's back there. He's getting it done. Like, yeah, sure, let's do it. Yeah, I love it. I love the commemorative Jets edition flip-flops, 100%. This is going to be pretty funny if he goes with the Vikings, though, because he will literally be following in the footsteps of Brett Favre. That's exactly what Brett Favre did. Packers, Jets, Vikings. It's going to be very funny if Rodgers does the exact same thing. And so, Grumpy Mike, headband is okay, but the leg warmer is probably not a good look. Yes, you definitely don't want that. I can assure you of that. Scrub Everything, Dr. Jim could use one of those wrist sweatbands as an accessory. There you go. I'm all in for it. Griffin says, go sell the Nike 5672.5 call for Delta for $1.23. And he says, badges. We don't need no stinking badges. Nike. Yeah, I'm not going to do it yet. I'm going to wait till I get it signed. I don't want to get super cute and super fancy with this. Let's just wait till we take our shares. Let's take our shares. Let's see what happens on Monday. And then, we can start selling calls or start doing whatever. And so that's kind of the plan. Let's see. That's impressive username. Just the letter O. That's almost as impressive as the no username that shows up sometimes. Like just blank spaces. Like how do they even let that happen? Like when this says username, you just click right down to password and you just let it fly. That's your username. That's very impressive. But capital O is also equally as impressive, I think. It's not like an O like 1, 2, 3 or like an O like ABC. It's just O. So O says, the airlines are destroyed lately. Time for a bullish play on American Airlines. Cheers from Puerto Rico, Doc. Man, what's going on there, O? Thank you so much for watching from Puerto Rico. Again, very impressive username. I'm going to pass on American Airlines just because I'm still and plus it's an $11 stock. So this is going to kind of get into what I said earlier about the low price stocks. So I'm going to pass on that, but I appreciate you. Oh, I appreciate you very much. But man, we made it to the end of the show. I can't believe it. I cannot believe it. I got to go and get you guys to Tim Knight. But man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
America's best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not any. That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Hello, and happy Friday to you. Well, the past 2 weeks have basically been this. I'm trying to draw a sine wave with my finger. It's gotten to the point where, like, this morning, woke up, the ES is down 53, and in simpler times, that would have been really exciting, but it was just like, well, here we go again. And sure enough, there have been times the market actually went green. 2 whole weeks of just grinding. And for some of you, that's been great. I tweeted out my sort of eye-rolling comment about this sine wave market. And one of you said, oh, basically iron condor paradise. So that's fine. But it has been a directionless grind, because pretty much if one day's up, the next day will be down. Rinse and repeat. But it is kind of a stock picker's market now, which is cool. Not everything is tethered to one direction, and that gives us opportunities as chartists, or at least followers of charts. And that's what I've been trying to do for you, ever since we started, who knows how many years ago. So let's jump in and begin. And you know what? I'm going to switch this just for this one chart to a weekly chart to kind of make a point. And the point is this. This is this week. And in the world of candlesticks, that is known as a spinning top. And as you can see, that's the only one on the screen. It doesn't happen very often on the spider for a week. And all it says, in a manner of speaking, is like lots of smoke, very little fire. Because this little, what they call a body, that little colored rectangle right there, is the open and the close. It'll be the close soon for the week. So very little net activity from open to close. Those long shadows, they're called, above and below the body, show all the dynamism that's taking place, which has led nowhere. So it simply means it's a very uncertain market because it keeps getting pulled this way and that without any real clear direction. Another phenomenon I've noticed in the big ETFs is the repetition of colors. I mean, let's just look at the past couple of months. So here we see red, 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 red. What does that mean? It simply means that for each of those days, we're just looking at the past couple of weeks, for each of those days, the market opened strong and closed weak. So weekday, W-E-A-K, weekday and weekday. But then we got a shift this week, which is, and this happened on Friday, and then Monday, Wednesday, Thursday, and today, which is these green bars, which means we start relatively weak and close strong. And that's kind of what happened again today. We were down like 52 on the ES when the market opened. Now we're down, 19, which is nice. But, as I've said, the NQ actually went into like a 300-point reversal. It was down 300, then it was green later on, something like that. So we're seeing that again and again. Like, let's, for example, the diamond, the Dow 30 ETF. Here we see that last week, for example, tended to be weak day to day. And then Friday, Monday, Wednesday, Thursday, today, strength. So there's been a shift. This week definitely feels different than the week before. Here's the cubes. Exact same thing going on. So you get the idea. But we had been especially early on, experiencing these like very solid downs, like so, and with a punctuated by interruptions like this one, but didn't really amount to anything. And the plunge kind of stopped back on the 11th, and which I guess was last Tuesday. And since then, we've been banging around this range like so. So we need to escape from that range, hopefully the downside, but one way or the other, escape either past resistance or below support to kind of get a trend going again. And as a subset of the cubes, here's semiconductors, SMH. I think 2/3 would be enough bounce. At least made the risk reward ratio more appealing, because we bottomed on this one, like so, back on the 11th, and went blasting higher for a few days and then kind of stalled out. So this massive overhead supply, I think, is helping act as a strong barrier against any more price ascendancy. Jumping overseas for a moment, EFA, this fell not dramatically, but basically undid yesterday. You can see right here, these are all like mirror images. Yesterday, open weak, close strong. Today, open strong, close weak. And yesterday, I shorted this pretty goodly amount. I got out of it. It was a quick, small trade, small in terms of time. Yeah, EFA is very lofty. It was own lifetime. And as that, in a week again, I shorted this on Wednesday, fell yesterday, and fell again today, because before I zoom in, you can see where the price got to relative to this multi-decade trend line. So we got right up close to it, couldn't go much farther than that. And so we've taken a nice tumble here, undoing basically all the juicy goodness of those days right there. So we're kind of back to where we were right here on the 13th. Now, we're not anywhere close to earnings season right now, but there's never a weekday that there's not some earnings, and occasionally you get kind of some household names in the off season like this. We had a few big ones last night. One was FedEx, FDX. This is down hard, about 6%, and I think is yet another indication of how the underlying economy is getting weaker. And I think when the real earnings season kicks in, third week of April, we'll start to see that express itself. Because, huge companies that ship products are going to be strong indicators of how things are kind of going under the surface below all the bluster and the pablum and nonsense. So yeah, FedEx down hard, Nike also down. And Nike's interesting because it had already lost about 60% of its value in the past few years. It topped out way back here a good 3.5 years ago after 170. It's in the 60s now. So we're down about 62% from late 2021. So hard fall there, and a completion of a rather gigantic right triangle. And the one that was kind of interesting to me in particular, because I had bought those SMH puts, was Micron MU. In sharp contrast to FedEx and Nike, Micron went blasting higher and stopped and reversed and fell. And so we're down pretty hard on this right now. It's actually been a pretty dull stock for, you can see this range here. It's been in this for months and months and months. So when we talk about sine waves, we just keep banging around this range. But it had been very strong last night, and they completely gave that up. I don't know if it was a conference call or what, but it definitely goes to show one of those instances where, imagine you had a ton of calls that expired today on MU and how elated you would have felt on the heels of earnings last night to see that giant pop, and then you wake up, it's like, what happened? Numbers red. So big reversal for MU. And so that helped to some small degree contribute to SMH slipping a little bit lower. A little more than about 1.13% right now. Tesla is up, but whenever we say Tesla, the next word is Fibonacci, and that's exactly what's happening. Look at that. Once again, this pair, especially the upper one right now, acting as it did here and here as strong resistance. So if it manages to get past 250, it might have a shot to get back to 300. But instead, if it slumps away from that, I think we're clearly on a course to 200, maybe even the 190s ultimately, before it finds really strong support. Some long-term for the patient among us, bearish plays continue to look good. Cognex, CGNX is one. CC, I'm too insecure to try to pronounce it again. This is down over 5%, a massive top on this one. And better known and much, much better traded, GM. As I say, it could take time, but it's a very clean stop on this. 50.37 is the resistance line on that. So just a few bearish ideas. Some items that I've mentioned from time to time, but I wanted to hit upon quickly today are some other bearish positions that are in play. A little better volume than the likes of Cognex and CC. Let's just thumb through these. There might be a new face or two here. Kinder Morgan, AMI. In this instance, we are hammering out what might ultimately be a very impressive head and shoulders top. It's about 80% done. It needs to complete this right shoulder and then, of course, break the neckline down at the bottom. But I'm already in position on that, and the stop loss is basically, not to get too anatomical here, but the top of the left shoulder. So that's the stop loss on KMI. What else? Merck, MRK. This one has rallied powerfully up to here. And strictly speaking, you could be a little more generous and set a gap like so. I would be a little more tight with this one. So I've dropped it there, but it could actually violate that and still be okay. The gap is really the real stop loss in this one, but we'll be a little more picayune about it. Tech Resources, TECK. This is dipping nicely finally at 3%. And we zoom in here, and I'd say a good stop on this would be around 43.30. Canadian Natural Resources, CNQ. I got back into this early today. It was very frustrating in recent weeks. And I don't know if this data is legit. Sometimes we'll wait for the close on this little spinning top we see. I'm not quite sure about that. We'll give it the benefit of the doubt and just crank it up there. But in any case, this is just a straight short position for me. Here's the top, but you can see a series of lower highs like so, all the way down. And hopefully this is just yet another lower high before we begin, CrowdStrike, CRWD, another massive bounce, and then boink on Wednesday, peaked, and then starting to slip away. That's another just straight short sale for me. Dell, this is a new visitor. Don't think we've talked about this one before. 101.42 is the line on that one. Netflix up a little bit right now. And I think I mentioned this yesterday at some length, the importance of that channel midline and how it needs to stay below that, coupled with that horizontal, those both acting as resistance. So important resistance right along there at 968. And one last one of these, another health-related one, UNH. And this one, I'd left alone for a while, but as of today, got back into it because it is so close to that gap, which of course is the stop on this one. So some new faces, some old faces, some interesting opportunities. The last thing I'll leave you with is a possibility, maybe a fantasy piece about escaping from the sine wave we're in and focusing in on the small caps as an idea there, because what we've been looking for is possibly a bounce to something like here. And I'll throw that in there, sure, you can leave that in. But what I would propose, not being finicky here, let's just say goodbye. What I would propose here is the prospect that maybe this is all we get. I don't know, but it could be. And let's just suppose this week's high is the peak of the bounce. If it is, then this is the actual pattern, because it's based upon how high we bounce, and the prospective drop from there is pretty substantial. Could be completely invalidated. If we get above Wednesday's high, we'll just lift that line right back up to where it used to be. But if this comes along, this vision here, which is the RTY futures, would also be applicable. Something along these lines, that we bottomed right along here, and we got very close to the fib here, and maybe we'll just sink away like so. And I see, speaking of sinking away, that I'm completely out of time, and I think that puts a bow on it. That's good enough. So you have a good weekend. We've got another full week next week. PCE on Thursday, I believe, and I'll see you on Monday. Thanks. Bye-bye.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a tastytrade account. Plus, smart tech and a broker who's got your back at tastytrade. Make your move, genius. tastytrade.
If you missed the live show, here's our cherry on top weekly recap. Why are we literally rolling out the red carpet? What has this diva done?
I know, I saw that. Why do you got a little red carpet?
Diva.
I don't like it. They said it's sound.
Do we have a wide shot of the studio? They said it was sound. Yes, me lord.
And do we have to clap when you walk in?
Where are the rose petals? Wow.
Vanetta.
Hello. Yes. Good morning. Ooh. Yay.
New phone. Who dis? I did go in and get the phone at AT&T, and I didn't realize.
You went in unsupervised?
I went in by myself without a helper.
Did Beth have to pin all of your information to your jacket? It was like, my name is Tom Sosnoff. I need help, but I am an independent person, but I am looking to buy a phone. Here is how much money I have available. If I need help, you can call Beth.
I can send you some viral pictures of my corned beef.
No, that is a terrible sentence. I do not want pictures of your unseasoned beef. No, ma'am. No, ma'am. You guys are elderly?
I'm the only one in this room that's never been in an accident.
That you've reported. See, I report my accidents. You don't report your accidents.
You don't report your accidents. Other people report your accidents.
They hit me. There was nothing I could do. They hit me. I was standing still. They hit me.
I've heard this story.
Okay?
You're the only one in this room that's ever run yourself over.
That's true. That's true.
Classic.
That's true. No. You're the only one that had to sue your own property insurance because you backed your car up into the garage.
Oh, yeah.
Didn't sue anybody.
You're the only one who's had their mirror kicked off by an angry cyclist. This is fun.
Forgot about that.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Ring the alarm, hey,
Tomas, we are back, my friend, and you know what that means. It's time for the last call. Did you have a nice afternoon, my friend?
Did I have it? Yeah, sure. I've been slammed all day. I've been crazy busy. I haven't even been able to trade. It's been wild. I mean, I've just been stuck on stuff.
You made 50 some odd trades. You did something.
I know, because I can freaking do that in my sleep. You see, you got me like using the F word now because of your horrible language etiquette this morning, and so
you're just jealous because I did it. Now you have to do it. You have to own it.
No, I don't do it. That's why I don't like copy you. So now
evidently you do.
I'm gonna be like an altar boy.
Evidently you do.
I'm not even gonna use slang.
Even the S&P's up 20. You notice here the volume 1.23.
Down
a little
20,
light.
Johnny. Down 20.
Sorry, down 20. You know what? The NASDAQ did go green on the day this afternoon about an hour or so ago.
The S&Ps went to unchanged.
I didn't see them green. I saw the NASDAQ green. Anyway, NASDAQ down 40.
The NASDAQ was green, and the S&Ps went green for about 3 minutes.
Well, not anymore. They're down 20 and 40, respectively. Russell down 14, and the Dow down 117. Volatility up by 26 cents, 1961, off of its highs of 2013, off its lows of 1913. So enough right in the middle there.
You know what? It shows that volatility is up a little bit, but I swear to you,
we're into the weekend today.
I swear to you, they crushed everything today. It feels like it.
I agree with you.
And this rally back, I mean, this morning, they scared the children a little bit because you didn't know what was going to happen. But the rest of the day, this has been...
As foretold, the bat said 56.60 was going to hold. And here we are at 56.92. I mean, you never took any heat. Went down there about 5 times, bounced off for about 10 handles each time. Back caught 3 or 4 of those kind of things.
I wish it was a little cooler out so the ice statue that we're erecting of you right now wouldn't melt because right now it's in the sun, it's melting a little bit. But I would
Don't put it next to me. I've been hot.
I'd like the ice statue to hang around for the weekend.
No kidding. Oh well. Anywho, bonds 117.13 Sadnov. They took a little turn for the red, down 9 handles after being 118.06. They're closer to their lows, 117.11, 117.14 right now. Bitcoin, I don't know. Is this a win for Bitcoin? Pretty much middle of the day, middle of the road. What do you think, Sadnov?
I don't think it really matters. I mean, who the hell cares about Bitcoin? I think today the winner was the fact that this market was very vulnerable this morning. And I think what happened was a couple of stocks. I'll start with it was just a variety of NASDAQ, mostly all NASDAQ stocks. And it was Costco. And then it was some of like remember this morning when we did Fast Market? Remember somebody called in, they said we sold some naked puts in Target.
Yeah.
And that was like the best trade of the day. But all those stocks like Costco was down, Target was down. They all rallied back, and Target's up now. Costco's up like $13.
Yeah, Costco's up $13. Costco trade all the way down what was it? Around 883 or so. It's 909. Yeah, totally.
They turned around all of the retail stocks, and in the process of doing that, they also came for, I'm just going to list a few stocks, but Apple's up on the day, Meta's up on the day, Tesla's up on the day, Netflix is up on the day, PLTR is up on the day, Google's up on the day. You can go down the list, and Intel's up on the day, Reddit's up on the day, Boeing's up. So this is like one of the worst down days I've seen.
Worst down day ever, right?
Worst down day
up 2
ever.
and change. Shop is up. Yeah, Firm is up.
The Russell stayed pretty weak all day. So some of the financial stocks stayed weak. But the reality of today is just that, like I said, it's a crappy down day, as down days go. But it was a scary opening. And B, the NASDAQ was stronger than I thought it was going to be most of the day. The commodities, for the most part, I thought were completely dead all day long. Nothing happened.
Yeah, nothing really happened. No big moves.
This was a day where
silver sold off. Gold. How's that gold silver ratio doing? Because
it's a small loser. It's a small loser.
Yeah, no, silver's down way more than gold. I didn't see that. 50 cents versus.
It's a small loser, but. But the story of the day was if you didn't come in short premium today, you didn't make any money. The earnings
you
trades
didn't sell it early. You didn't make any money either.
And the earnings trades worked again. I mean, FedEx was a scratch for us, even though if I held it to now, it would have been a winner, but a scratch. Nike was a scratch. I should have held it for a winner, but it was a scratch. And then MU was a pretty big winner. So another good day of earnings, which has been kind of carrying us, and a good day of short premium. Really good day. Finish off a really strong week of short premium. Let's keep it going a little bit into next week.
Yeah, this was a very nice week because it was a struggle the week before. Volatility was expanding. Yeah. We were having 100-point moves back and forth. You know, you forget about all of those seeds that you planted 2 weeks ago. Just trading, trying to stay mechanical, trying to keep your deltas in line. It all comes to fruition this week. Like you don't know when it's going to happen. Like those things were so important last week, but you thought they were trivial at the time. Yeah, I'm getting very poetic as I get older. Like I'm very reflective.
Yeah, I mean, well, I would use the term poetic very loosely because there's a lot of people that take poetry seriously, and you're not poetic. So that's a huge insult to any poet. I'm sorry. I hate to burst your bubble.
To anybody who has a command of the English language, forget about a poet.
Yeah. If I was a poet right now, I'd be shaken.
I could have been a dentist.
Yeah, that's better. So the question then, I like to think that the market has a tendency to go the way of the expiration, especially around triple witching. And I'm not going to this morning was definitely a down move. No question about it, down 50, whatever. But the rest of the day has been much to do about nothing. And so I don't really have a good feel for next week other than they feel like they're bottoming out a little bit short term. I don't know what you think.
I agree with you. Settlement, as you talked about this morning, 56.17 and change was actually a surprise to us too, a little bit higher than we thought, right?
A little bit higher than we thought, and all day they've been a little bit stronger than we thought they might be. The shorts definitely did not get paid today, with the market rallying from the opening, and then also with volatility contraction today. The shorts lost money. This was unless you had individual stocks like Tesla or Meta or something like that.
Yep.
This was a day that the short premium players like us, we're the winners today for once. Actually, we've been the winners all week just because they've killed vol this whole week off the highs. But the nice thing is that we don't get to 21 days until next Friday, which means there's probably, a couple of days left of this vol contraction. I'm not ready to write it off yet.
Oh, I'm not ready. I think you got at least 2 points here. Maybe next week we go down. We're in the mid 18 handle. You know what?
Yeah,
maybe low 18.
I think so too. All right. What do you think? We both kind of agree, which is for our viewers is probably the worst possible scenario.
Oh my God, I feel like Dylan Radigan now. I'm agreeing with everything you say. This is horrible.
Oh my God, that is such a cheap shot at Dylan. Okay, that was I'm telling. You, God, you're like the little brother I never had. I mean, honestly. That was uncalled for, and I am telling Dylan. I'm
telling mommy. I'm telling mommy.
I'm going to take this recording.
Boy, no wonder your sisters don't tell you anything. You like, who wants to? Unbelievable. You're the baby of the group, right?
I'm the oldest. Thank you.
Oh, man. They could have done so much better. All right, what were we going to say?
What I was going to say is that we both think the same thing with premium next week, and we both think that they look like they might have formed a pretty decent, bottom on the opening.
So you're thinking close all watertight doors?
No, but I don't actually. I'm thinking a continuation of chop, volatility contraction, and lots of head fakes next week. Not much to do. Again, sideways. Maybe they drift a little bit higher early in the week. And I don't think much else. I mean, I don't hear.
That's last weekend. Listen, I think that every week because that's a dream scenario for us.
Yeah, but last weekend they didn't take any of the juice out on Friday. If you remember, it was like they pumped everything up, and it was the right call because Monday was ugly. But this weekend they definitely took Friday or the weekend out. And because they crushed premium today with vol still up a little bit. And that's something you just never know how that's going to play out. So I think that that's kind of a little bit of a precursor to next week, the continuing the chop and maybe, a little bit of grind higher.
Yeah, I tend to agree with you.
Also, they took some risk premium out of the market today. Bonds have been on a flight to quality recently. They were down 10 today with the market down. That's a little bit weird, but natural gas down, gold down, silver down. All the currencies were a little bit lower. It just, to me, basically everything, all the little hedges all over the place were lower today. I just think
not Brent crude. That was up 7 cents, Tom.
That does not count. 7 cents. Okay. Brent crude. Brent crude you.
I'm so sorry. No real earnings, obviously, Friday going into Monday. If you're desperate, LUNR, Sosnoff.
What is that?
I have no idea. My Taiwanese sources just pointed it out to me. It's a $7 stock called Intuitive Machines. Oh, man, this has got buy written all over it.
Pass.
As in goodbye.
As in pass.
Pass it is.
Yeah.
Pass it is.
Here, rule number 1. Real companies don't release earnings on a Monday morning after a weekend.
Yeah, that's true. Unless they're trying to hide. We'll
be releasing our earnings on Sunday morning at 7 a.m. Yeah.
It's true. That is true.
Yeah.
So what do you think here for next week? So I know you say chop around
what
a little bit.
I just talked about.
No, I know. You didn't let me finish. You jumped on me. Okay. There's no real earnings either. Like, you got the bank stocks like Bank of America, which you said, haven't been doing that great as of late. You got UAL next week, which is United Airlines, UNH, Las Vegas Sands. You don't really start until Netflix on the 17th. That's not. No, you're done. Never mind. I'm too deep already. You got Chewy next week. I'm sorry, and Lululemon. I apologize.
Yeah, but you do have 21 days to DTE next week, and I mean, most important about next week is that you won't be here, so I get to enjoy myself. It's like a vacation. Julio's actually pleasant to work with. TP will be pleasant to work with. I mean, it's just going to be like I'm going to be like in Tom heaven.
I have only one job to do tomorrow to keep my status as a on-call co-host. I'm going to tweet out your email address every day and tell people how lonely you are without me. That's what I'm going to do. And say, please send an email to Tom. He's lonely.
Don't worry. If you do that, I'm going to tweet out your phone number, your cell phone, and your home address.
Man.
And your coordinates. Don't think you don't have an air tag posted. Like, we've got air tags all over you. We're going to, I'll have people that go find you out in, what are you going to be in? Like,
I'm going deep south enough. Tuesday and Thursday for sure. Thursday tides look beautiful.
What is that? Biscayne Bay? What body of water are you in?
Yeah, Biscayne Bay. Gulf of America, south enough. I'll be in the Gulf of America. Biscayne Bay. I'm in the Gulf of America.
Gulf of America. Yeah, sure. Good. If you keep going, if you cross the Gulf of America, keep
going. Get to Louisiana, something like that.
You go all the way to Mexico. You'll be fine. Yeah. Yeah, go. Yeah, you should go to that's what you should do. Like, go to Louisiana or Alabama for a day. Just,
for a day. Yeah, just zip across the Gulf of America for a day. A little day trip.
Go up to the Panhandle. Go to Tallahassee or whatever. I don't even know what it is.
Why don't I just go down to the Keys? I'm closer to the Keys.
Oh, I didn't know. I don't know where I am.
Yeah, I'm south. I'm south of the frost line, Sosnoff. You're talking about above the frost line. I'm south of the frost line. I'm tropical.
Okay. The last thing in my life that I care about. Literally the last thing is Florida geography. So I don't know.
Well, you should be informed.
Well, I'm not. So thank you. All right. Let's see what we got here. A little bit of a rally into the close. We got a couple minutes left. Look at that.
You got
10 minutes left in the day.
You got
You're
more
going to
than a
get the
couple.
Nasdaq's going to be closing up on the day. It's up.
NASDAQ up $4. That was a big move just then, Sadnov. I turned around for just 1 second. Up 8. Even the S&Ps are down 9. This is where you're going to tell me traders tried to sell them. They were short all day, and they're buying them back.
We call this the big green machine.
It's red again.
It's the big green machine. Yeah, the order imbalances. People always write to me and they say, "What about these so-called order imbalances?" Well, the order imbalances come out actually about 2:40 Central Time, so about 10 minutes ago, and I assume the order imbalances were not very bearish at all. That's why they bid this stuff up a little bit, and not that you can trade order imbalances, because trust me, you can't. But my guess is that they were pretty tame. And everybody thinks never sell a dull market type thing. And to be fair, for a triple witching Friday on the close, this is kind of a dull market.
It's kind of a dull market. I mean, I alluded to that when we first got on. Even the S&P is 1.27 as a volume. If you remember when we talked a little bit about it this week, it was like 1.4 and change at the bottom of the hour at 2:30 instead of at 2:50. Here you are, 30, 40,000 cars less.
To be fair, a week ago we were in the two handle every single day. And when you're in the two handle every single day with futures contracts, you're pretty close to capitulation.
It does have that feeling, no doubt about it.
Yeah, when you get over 2 million for a couple consecutive days, then you get close to 3 million on one of those days, you're very close to capitulating. That's why we give you volume stats. You get complacent when day after day they're under 1 million cards trading, and then when they get over 2 million for a bunch of days, it's just the nature of the business. And you get near 3 million, you're in capitulation status, or capitulation territory. Anyway, taking a look at where we are now, just to see if there's, I was pretty flat until this little kind of tiny rally here on the close.
What a difference 10 spook point make and 40 on the NASDAQ.
Yeah, well, that'll move your positions. That'll move your positions around a little bit.
Yeah, sure.
I mean, I don't know about you. Mine are not much, huh?
No, not too much. Apple up $3. It was down around $1.50, $2 for most of the day. I need a little bit of rally, and I did roll down a little bit.
If you remember pre-market, Apple pre-market was down almost $3.
Yeah. No, I know. It didn't look like it was going to get out of its own way all day either. It rallied a little bit and then sold back off again middle of the day. That's when I rolled down calls. But you mentioned Tesla up 11. You mentioned Costco up 13. That caught itself a little bit of a bid. Google, only up 80 cents. Google's a stock that has not participated in any type of rally back at all. Google is on its butt. Ivy rank at 35.
You could probably sell a few puts in Google here. Sounds like a Batista type trade.
It is. I have a little bit of long delta in Google. You know me. You know me very well, Sadnov. You know that I know value.
You know that I know value. That's very weird. That I know value.
You know that I know. Oh.
I'm going to just get long a few deltas here on the close.
By rolling up puts in existing positions?
A little bit. I mean, I don't really have that.
It doesn't use any more buying power. It changes your delta. I get it.
I'm already long little Google. Would you get longer Google here?
I have a little long delta in Google. Yep.
I'll get a little long. I'll add some short. I'll roll up some puts in Google just to get a little delta here.
That Intuitive Machines I told you has earnings on Monday, Sadnov. You'll never guess what they do.
They make intuitive machines?
No, they're a moon access company, Sadnov.
Moon?
The moon? Yeah.
I like it.
Yeah. Commercializing the solar system.
They're what, the solar system?
They're commercializing.
Oh,
The moon is the North Star.
I like it. All right. Well, I'm in pretty good shape for month. I mean, I don't know where are we. S&P's up on the day, right?
As foretold, Sadnov.
No, you didn't foretell that. I did. You were getting you were a little scared, and I told you it's a pretty. So I told you, worst down day ever.
It was the worst down day ever. I agree with you there. What did you ever do with your SPX trade? Did you close it? Of
course.
Oh yeah, you bought it back at $1.30. Why would you do that? It's at 75 cents right now.
Well, because I bought it back 10 hours ago.
I guess you don't like money. What can I tell you?
No, I
told you to put it on. I told you to put it on with a little long delta. If you go back to the tape, you can listen.
If you remember our
research,
skew
it. Put your puts a little close to you.
If you remember our research, I put it in for a 25% profit. I hit it within 20 minutes.
I know. Yeah. You're good. You're good. When you're good, you're good, Saz.
Let's see what we got here. SPOO's up $1.50. There you go.
They close red or green for the day. You got 4 minutes, 3.5. You got 3 indices up. You got the Dow, NASDAQ, and even the S&Ps.
It's kind of an impressive rally. I'll give you that.
Yeah. I mean, you're looking at 70 handles that show off the lows.
70 handles off the lows into the close. Pretty impressive rally. Yeah. I just think it bodes for more of the same next week.
I hope you're right, because if the markets do too much, you won't be able to trade them without me there. And I don't want to be taking your phone calls all afternoon.
Oh, my God. I didn't think of that. Hold on. It's only 4 minutes left, and you're not going to be there next week. What am I going to do?
What are you going to do? That's what the whole office is asking themselves right now. What's he going to do?
God. I didn't even think of that before.
I know.
What am I going to do?
What are you going to do?
I'm going to have to find. I'll find the worst trader I know.
Yeah, so people can understand how great I am. That's correct. What do you got? Who's on with first call with you on Sunday?
Sunday first call will be Mr. Jones and Mr. Vecchio and Mr. Molmat.
Oh, no Sosnov?
You said who will be on with you?
Oh, with you. Oh, okay, good.
Jones, right, Vecchio, and Molmat. It's an absolute dream team. It doesn't get any better.
Wait, nobody's safe today. Nobody is safe today. It
is a dream team. How much time we got left here? 3 minutes.
2.5 minutes.
All right. Well, I'm positioned El Perfecto here. I don't think there's anything else I have to do.
Well, we should just call it a day. 2 minutes early, then. I mean,
no, I don't want to call it. I don't want to call it a day. I want to see where they close, but I don't have anything.
That you have to do. Nothing pressing for you.
Not really. I mean, there's a couple of stocks that had a pretty good turnaround today that I can be a little more aggressive on. One of the stocks I really wanted to be aggressive on and I wasn't was Microsoft, and
Microsoft with a big range today. Microsoft traded
Huge.
Down to around 380 and change, up to around 390 and change, where it sits right now.
Yeah, Microsoft was huge range today. Microsoft was a huge. Actually, everything. Come on, I guess it doesn't matter.
Yeah, that's true, because they all open near their lows.
Yeah, everything had a huge range today. But some of these stocks have, they look pretty
you don't
good.
see this all the time, Sadnov. Stocks go down, even the S&Ps go down 50, rally all the way back. That's pretty bullish.
Yeah, I'm not arguing with you. I mean, I've been rolling up puts the entire afternoon, so I never once bought into the whole concept of the down move. Never bought into it.
The sell off, yeah.
I mean, listen. We started this segment. The NASDAQ was down 50. It's up 90 now. It's a 140-point move while we're talking on air. The S&Ps were down 20. They're up 8. It's a 28-point move. It's a 0.5%. That's a pretty big move in the last 10 minutes of the day.
Yes, it is. Yes, it is. Saj, when you said, you were going to tweet out my address and my phone number and stuff like that.
I already did.
I'm getting a consistent email here. Sold that Tom can tweet.
Don't test me. I'll put it on TikTok.
All right, on that note, my friend, you have yourself a great week. Enjoy yourself, everybody else out there in Tasty Land. I know you have a good week next week with Tom. If he really says something stupid and you need help, you can always email me. I'm always on. Sadnov, have a wonderful day. Enjoy your new whip. And I'll take a quick 90-second break after this. We'll come back. We got more Tasty Live on Sunday. Well, Saturday, too. Peace.
Have a fun vacation.
Ciao.
It's Friday. No, it's not. It's Fred Day.
Fred Day, nice.
Fred Hutan, producer Fred, our one and only. It is indeed his last day at Trade Live with IG. We are very, very